Hello everyone, good evening, good morning, good afternoon to all of you. Welcome once again to this commodity live analysis. In commodity live analysis स्टार्ट करते हैं आज का सेशन. कोई क्वेश्चन है तो कमेंट बॉक्स में पूछ सकते हैं. सेकंड थर्ड ट्रेडिंग सेशन, फोर्थ ट्रेडिंग सेशन फॉर दिस वीक. डेटा की बात करें अभी 1:30 न्यूयॉर्क लंदन सेशन इज गोइंग टू ओपन एट 1:30. देन 6:30 न्यूयॉर्क सेशन ओपन एंड 7 पीएम पर अनएम्प्लॉयमेंट क्लेम्स का एक डेटा है. गोल्ड और सिल्वर को इम्पैक्ट करेगा. 8 पीएम यूएस मार्केट ओपन एंड 9 पीएम नेचुरल गैस की इन्वेंट्री. कल क्रूड ऑयल की इन्वेंट्री बेरिश थी बट कुछ खास इम्पैक्ट हुआ नहीं क्रूड ऑयल पे. थोड़ा बहुत ऊपर वापस गया, वहाँ से थोड़ी बहुत सेलिंग आई थी. अभी साइडवेज ही चल रहा है प्राइस. पिछले काफ़ी टाइम से देखोगे रेंज के अंदर ही फंस गया है ओवरऑल. जस्ट ट्रैप्ड इन अ स्मॉल रेंज. नाउ प्लान क्या कर सकते हैं एक बार देख लेते हैं. लेवल एक बार मैं रिफ्रेश करके फिर से बना देता हूँ बिकॉज बहुत ही कॉम्पैक्ट रेंज हो गई है. वैसे फिलहाल के लिए क्रूड ऑयल को देखोगे मॉर्निंग पे ओपनिंग के बाद कुछ मोमेंटम ही नहीं हुआ है, ऑलमोस्ट साइडवेज. नेचुरल गैस की बात करें तो नेचुरल गैस ओवरऑल तो बुलिश ही है बट ये 4 आवर टाइम फ्रेम पे रेजिस्टेंस पे काफ़ी टाइम से रुका हुआ है. ना ऊपर जा रहा है ना नीचे आ रहा है ऊपर. इसको भी एक बार मैं लेवल रिफ्रेश कर देता हूँ. जिन लोगों ने लाइक नहीं किया डोंट फॉरगेट टू लाइक दिस स्ट्रीम एज वेल. कोई क्वेश्चन कमेंट बॉक्स में पूछ लेना. निफ्टी को देखोगे मॉर्निंग पे कल सपोर्ट पे ही था, सपोर्ट ले लिया था. बाइंग थोड़ी कम ही आई थी कल, आज वापस कंटिन्यू किया बाइंग. एंड देन फ्यूचर में एंड देन अगेन फिर हाई लेवल से वापस सेलिंग थोड़ी बहुत आ गई है 15 मिनट टाइम फ्रेम फ्यूचर चार्ट में. थोड़ा सा मैं एक्सपेक्ट कर रहा था और ऊपर जाता तो बेटर था. हायर टाइम फ्रेम पे देखोगे ना 4 आवर टाइम फ्रेम पे रेजिस्टेंस ऊपर बना हुआ है काफ़ी अच्छा. तो एक बार अगर प्राइस 26,300 से 26,400 तक वापस अगर जाता है वहाँ वापस सेलिंग के लिए बेटर रहेगा सेल करने के लिए. फिर उस केस में अगर सेलिंग आती है और यहाँ पर कोई नया सपोर्ट नहीं बनाता है 4 आवर में एटलीस्ट, तो फिर थोड़ा सा डाउन साइड के लेवल इजीली दिख जाएंगे. 500 से 1000 पॉइंट उस केस में देखने के लिए मिल सकता है. प्राइस गिर भी सकता है. बाकी नॉर्मली दिसंबर जनवरी में थोड़ा सा प्राइस मोमेंटम कम होता है तो थोड़ा ध्यान रखना. वॉलेटिलिटी ज़्यादा रहती है नॉर्मली अगर आप कंपेयर करो. कि सेबी ने रिसेंटली गोल्ड और सिल्वर में भी वीकली एक्सपायरी का प्रपोजल दिया था शायद एमसीएक्स ने. उसको रिजेक्ट कर दिया है आई थिंक. वीकली एक्सपायरी वहाँ पर नहीं होने वाली बट याद रखना इस मंथ दो एक्सपायरी हैं क्रूड ऑयल की. एक एनएससी की है और एक एमसीएक्स की है. पहले एक ही एक्सपायरी होती थी सेम डे, अब चेंज हो गई है एक्चुअली. एनएससी है उसकी एक्सपायरी आई थिंक 9 दिसंबर को होगी तो ध्यान रखना. इस मंथ दो एक्सपायरी देखने के लिए मिलेंगी ऑप्शन में क्रूड ऑयल के. एक एनएससी की अलग एक्सपायरी है और उसके बाद एमसीएक्स की अलग एक्सपायरी है. तो थोड़ा सा ना कंसोलिडेशन हो गया लग रहा है मुझे जिस वजह से रुक रहा है बहुत ज़्यादा. इवन वॉल्यूम कम है बट कंसोलिडेशन बहुत ज़्यादा है क्रूड का. एरिया इज नाउ currently act like a just support. रेंज ही है, इसको रेंज के तरह ही कंसिडर करते हैं। एक सेकेंड। Okay, so this is the range right now. ऊपर एक रेजिस्टेंस, नीचे एक सपोर्ट। रेंज के बाहर निकले तो बेटर है। नीचे एक सपोर्ट है, कल आया नहीं वहां पर एग्जैक्टली वहां पहुंचता है तो मेरे अकॉर्डिंग वो बेटर रहेगा ट्रेड करने के लिए अब। ये कल का सपोर्ट, कल नहीं आया था प्राइस यहाँ पर, याद होगा एग्जैक्टली। अभी तो रेंज के अंदर है, रेंज से आता है तो ये एक सपोर्ट रहेगा फर्स्ट इमीडिएटली। इसके नीचे एक नेक्स्ट सपोर्ट ये नीचे वाला तो वैसे 5250 वाला मल्टीपल टाइम टेस्ट हो गया है, बट ये अभी भी इंटैक्ट ही है, परसों भी यहीं से रिवर्स किया था प्राइस। वो नेचुरल गैस में देखो, ये 4 आवर का ही रेजिस्टेंस है, 15 मिनट का तो कुछ बना ही नहीं है, तो सेलिंग कल वाला ही ट्रेड है, वही एक्सपेक्ट करो कि उसी में सेलिंग कंटिन्यू करे, प्राइस एसएल बड़ा बनेगा और तो उसमें कुछ कर नहीं सकते, नहीं तो। बट ये 4 आवर टाइम फ्रेम पे कल से रेजिस्टेंस जोन पर ही है, तो एक्सपेक्टेड सेलिंग ही है, तो एसएल थोड़ा बड़ा रख के करना पड़ेगा ट्राई, कम क्वांटिटी में ही कर सकते हैं, नहीं तो या तो 15 मिनट में कोई रेजिस्टेंस क्रिएट हो जाए। अभी के लिए सिर्फ 4 आवर टाइम फ्रेम का ही रेजिस्टेंस है। 4 आवर टाइम फ्रेम पे अभी रेजिस्टेंस यही है, 15 मिनट में कोई रेजिस्टेंस अभी नया क्रिएट नहीं हुआ, हो जाए तो बेटर है। नीचे बाकी एक मेजर सपोर्ट तो 410 से 415 के बीच में है, बीच में थोड़े बहुत और भी सपोर्ट हैं, उनको भी कंसिडर करेंगे, दे आर ऑल्सो स्मॉल सपोर्ट। बट अगर प्रेशर आया सेलिंग का तो आई डोंट नो, थिंक सो कि दे आर होल्ड देयर लेवल्स। पूरा टाइम फ्रेम का रेजिस्टेंस है तो थोड़ा सा स्ट्रॉन्ग तो कंसीडर करेंगे ही है ही जब तक ब्रेकआउट नहीं होता। बाकी कंसोलिडेशन काफ़ी टाइम से हो रहा है, सेम लेवल पे सेलिंग आती है हाई लेवल से, लोअर एंड से फिर बाइंग आ जा रही है नेचुरल गैस में। ये हो क्या रहा है ना, नेचुरल गैस में नीचे सपोर्ट स्मॉलर टाइम फ्रेम पे बनते जा रहे हैं, ऊपर रेजिस्टेंस नहीं बन रहा है स्मॉलर टाइम फ्रेम पे। हायर टाइम फ्रेम का ही रेजिस्टेंस है जो प्राइस को अभी भी ऊपर जाने से होल्ड कर रहा है। 4 आवर टाइम फ्रेम पे बार बार सेलिंग आ जा रही है, बट नीचे से 15 मिनट में देयर आर कंटिन्यू सपोर्ट जोन्स। एक कल का ही था जहाँ से सपोर्ट आ गया था 7:30 के आसपास। बाकी क्रूड ऑयल ने भी अपना रेंज ब्रेक कर दिया है, काफ़ी देर से कंसोलिडेशन था, अब आई थिंक ब्रेक होने वाला है। ये कैंडल क्लोज होती है तो ब्रेक डाउन रेंज के बाहर माना जाएगा। 1 मिनट है, ये कैंडल क्लोज होती है क्रूड में तो लोअर रेंज ब्रेक हो जाएगी, फिर ऊपर वाली जो रेंज है वो स्ट्रॉन्ग रेजिस्टेंस कंसिडर होगा उस केस में। हो गई देखो कैंडल क्रूड ऑयल की नीचे की रेंज, ब्रेक हो चुकी है। दो चीज़ हैं इसमें पॉसिबल, ऊपर पुल बैक आएगा तो वापस सेल कर देंगे, नीचे सपोर्ट लगाए रखा है।
Hello and welcome. This is the
Interesting questions.
News when you want it with Bloomberg News Now. I'm Caroline Hepker.
And I'm Stephen Carroll.
French President Emmanuel Macron and Chinese leader Xi Jinping have met in Beijing at a time when relations between the EU and China have been under strain. The two leaders have discussed issues including economic ties, trade tensions, Taiwan and the war in Ukraine. Xi described their talks as frank, fruitful and friendly.
Today, the world is undergoing profound changes, unseen in a century at an accelerated pace. and humanity once again stands at a crossroads. China and France should demonstrate their sense of responsibility, uphold the banner of multilateralism, see through the fog of uncertainty, and firmly stand on the right side of history.
On the issue of Ukraine, Xi said that China hopes a fair, binding agreement acceptable to all parties can be reached. Those comments came as Macron renewed his call for Xi to back Europe's stance on Ukraine and warned against the disaggregation of the world order.
A top institutional investor has said even if frontrunner Kevin Hassett is appointed as chair of the Federal Reserve, he may not be able to deliver the rapid pace of easing that President Trump would like. Gregory Peters, co-chief investment officer at PGIM Fixed Income, told Bloomberg that Hassett wouldn't have the power to deliver cuts on his own.
But on one hand, you have the Fed independence question, with Hassett as basically tied to the administration. But on the other, does he have the credibility within the committee to drive consensus? I don't think he has that credibility. I think that's what the bond market is telling you. But it's important to remember that it's a full committee, and you have to have the confidence of the committee to drive consensus. And I don't know if he has it.
Peter's comments come as bond traders and fund managers game out the impact of Trump's shake-up of the Fed, where hints of policy changes can send ripples through global markets. If Hassett is appointed as chair of the central bank, allies of Trump are said to be also considering making Treasury Secretary Scott Bessent the top White House economic advisor.
Now, Franklin Templeton's head of European fixed income is sounding a warning that Rachel Reeves's budget decisions mean the UK government will struggle to fund spending. David Jean told Bloomberg that while the UK Chancellor managed to boost her financial buffer in last week's budget, she relied on a raft of levies that only take effect years from now. Jean described Reeves's tax increases as very piecemeal, while reiterating his prediction for 30-year gilt yields of 6%, even after a budget that was largely well received by markets. The European fixed income specialist has been calling for high UK bond yields since April this year, but his contrarian 6% call has yet to come to fruition. The rate rose briefly to 5.75% in early September before falling to 5.2% at the close on Wednesday.
It's being reported that the European Union is planning a fresh antitrust probe against Meta over the use of AI features within WhatsApp. The Financial Times says an announcement of the investigation is possible in the coming days and that the European Commission is looking at the way the US company integrated its Meta AI system into the popular messaging service.
Artificial intelligence will make its debut on one of the world's largest capital markets, but critics say that the enthusiasm surrounding the technology could be dangerous. Bloomberg's Tiwa Adebayo has more.
The London Stock Exchange Group has agreed a deal to give ChatGPT access to its licensed financial news and data. According to a statement, the agreement with OpenAI will make LSEG content available to the chatbot's users from December 8th. It's the latest in a series of technology partnerships signed by the data provider, including an agreement with Microsoft to develop AI models. But some are sceptical of the sector's deal-making rush. The CEO of research firm Anthropic says a number of companies are being too risky with their AI spending, committing billions of dollars despite growing uncertainty. In London, Tiwa Adebayo, Bloomberg Radio.
And Apple's top designer has been poached by rival Meta in a major coup. Bloomberg understands the Facebook parent is hiring Alan Dye, who's been head of Apple's user interface design team since 2015. Our senior tech editor Nick Turner says the move reflects Meta's plans to focus on product design.
The big moonshot at Meta is creating an augmented reality glasses, spectacles that would really sort of become a mainstream product. And presumably he's going to be helping work on that. Mostly the design for those products comes from Ray-Ban at the moment. And so I guess we're just still maybe kind of a wait and see mode in terms of figuring out how he's going to influence the way they design some of those products.
Bloomberg's Nick Turner speaking there. Dye's departure extends a recent talent exodus for the iPhone maker, which began with the exit of visionary executive Johnny Ive in 2019. Apple confirmed in a statement provided to Bloomberg News that Dye will be replaced by longtime designer Stephen LeMay.
Those are our top stories. In terms of the markets, futures for the European market open up by 0.7%. Also gaining in the US, but not as pronounced an increase for S&P 500 and Nasdaq E-mini futures. The All Country World Index is up too, thanks to gains that we've seen in the Asia equity session, particularly the Topics and the Nikkei. The long bond auction of JGBs in Japan went well, very solid demand, higher since 2019. Also, the US data yesterday for America from ADP really reinforcing the idea of Fed interest rate cuts. 10-year US Treasury yields this morning trading down 2 basis points at 4.08. We have the dollar also a bit firmer. Oil prices are higher and Bitcoin trading just above $93,000. Those are the markets.
That's news when you want it with Bloomberg News Now. I'm Stephen Carroll.
I'm Caroline Hepker, and this is Bloomberg.
I'm Barry Ritholtz, inviting you to join me for the Masters in Business podcast. Every week, we bring you fascinating conversations with the people who shape markets, investing, and business. CEOs, fund managers, billionaires, Nobel laureates, traders, analysts, economists, everybody that affects what's going on in the market. Whether you own stocks, bonds, real estate, commodities, crypto, you really need to hear these conversations. Sometimes it's behaviorists like Dick Thaler or Bob Schiller. Sometimes it's fund managers like Peter Lynch, Bill Miller, Ray Dalio. Sometimes it's authors, Michael Lewis, author of The Big Short and Moneyball. Regardless of the conversation, these are the folks that move markets each week. That's the Masters in Business podcast with me, Barry Ritholtz. Listen on Apple, Spotify, or wherever you get your podcasts.
I'm Carol Masser.
And I'm Tim Stenovec, inviting you to join us for the Bloomberg Business Week Daily Podcast.
Now, every day we are bringing you reporting from the magazine that helps global leaders stay ahead.
We've got insight on the people
that the biggest gainer in the after-hours trade, that is Salesforce. Some ratification of the AI trade, and we're going to get another read on that tomorrow out of Hewlett-Packard Enterprise, which is scheduled to report earnings. We're also going to get earnings out of companies like Ulta, Dollar General, and Kroger, so a little bit more of a read on the consumer as well. At 7:30 a.m., we are going to get Challenger job cut data. At 8:30 a.m., we're going to get that official jobless claims data out of the government. That's the weekly data here as we try to do a bit of a catch-up after the government shutdown disrupted most of those releases. And then at 12:30 p.m. Eastern Time, I'm told that the Fed's Mickey Bowman is scheduled to speak. Now, keep in mind, the Fed is in a blackout period, so she can't speak specifically about economic conditions and economic policy, or monetary policy, I should say, but she will address some issues with regards to bank supervision and regulation. As we wrap up our coverage here on The Close on this Wednesday afternoon, just a reminder that the biggest gainer in the after-hours trade, that is Salesforce. Some
TV and radio alongside Amara Omokwe. I'm Joe Matthew with breaking news in Washington. It just crossed the terminal after we took air this evening on Bloomberg. There could be a new help wanted sign going up at the White House, of course, if Donald Trump chooses Kevin Hassett to be the next chair of the Federal Reserve. That's the expectation. And if he does, Donald Trump's aides and allies are now discussing the possibility of making Treasury Secretary Scott Bessent the top White House economic advisor, jumping in to fill the place of Kevin Hassett. If indeed he does go to the Federal Reserve, this would make him not only Treasury Secretary, but also leading the White House National Economic Council. This is Amara's day job, covering the Federal Reserve and the related agencies that we're talking about here within the White House. This would be a pretty big deal. Does Scott Bessent have time for two jobs?
I mean, that would be a big question, but I think what this reporting reflects is how trusted Scott Bessent has become in President Trump's eyes. He was leading the interview process for the Fed chair search. Of course, he's running point on many of the administration's economic priorities, tariffs, you name it. And he's also been one of the chief defenders of President Trump's economic agenda. Earlier in the administration, he was saying he wouldn't come out and talk about Fed policy. He wouldn't come out and talk about the need for the Fed to lower rates. But now we hear him talking about the Fed all the time, talking about the need for institutional reform. So that just shows how much of a champion he is for the president's economic agenda. And so this reporting actually makes a lot of sense.
Well, so if we're getting news like this from Nancy Cook, does that mean Kevin Hassett actually has the job? She's reporting is at the top of the list.
I mean, that's what our Bloomberg reporting
would not be a
shows,
surprise.
that Kevin Hassett is the front runner, that he has kind of taken the lead among these last five candidates that remain. And it makes sense. Again, he has been lockstep with President Trump on the need for the Fed to lower interest rates. Pretty much on every economic issue, Kevin Hassett has been lockstep with the president.
Really interesting. We'll see where this goes.
To lower costs for American consumers, protect American auto jobs, and make buying a car much more affordable for countless American families and also safer. We're officially terminating Joe Biden's ridiculously burdensome, horrible actually, CAFE standards that imposed expensive restrictions and all sorts of problems, gave all sorts of problems to automakers. And we're not only talking about here, we're talking about outside of our country, because nobody could do it. Nobody wanted to do it, and it was ridiculous, very expensive. It put tremendous upward pressure on car prices, combined with the insane electric vehicle mandate. Biden's burdensome regulations helped cause the price of cars to soar more than 25%, and in one case, they went up 18%.
I'm Sharon Rice Garson in New Jersey. It's Wednesday, December 3rd. Today, Russia says no Ukraine deal after 5 hours of talks with Trump's envoys. Outrage as Trump frees a former Honduran president convicted on cocaine charges. A blockbuster donation from the Dell family for 25 million American children. And India's order to preload smartphones with a government app sparks a huge backlash. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes, 7 days a week.
So pleased to see you.
No Ukraine compromise. Talks in Moscow between Vladimir Putin and Donald Trump's top envoys, including his son-in-law Jared Kushner and Steve Witkoff, ended without a breakthrough on a Ukraine peace deal. Putin reacted negatively to some U.S. proposals, and the Kremlin says, quote, Compromises have not yet been found, leaving one of Trump's key foreign policy goals still out of reach.
Их отстранили от ведения переговоров.
Ahead of the meeting, Putin dismissed a set of European peace proposals, saying they're unacceptable, and warning Europe it'll face swift defeat if it takes on Russia.
Захочет начать с нами войну.
The prospects for peace in Ukraine will be on the agenda today at Reuters Next, our flagship live journalism event. Expect big names on stage, from UN Secretary General Antonio Guterres to Sarah Jessica Parker, plus top players from tech and finance. Kim Vanell is co-hosting, and Carmel Crimmins will be recording our first ever live Reuters Econ World podcast. You can follow the action live on the Reuters website and app. There's a link in the show notes.
And by the way, Admiral Bradley made the correct decision to ultimately sink the boat and eliminate the threat.
Defense Secretary Pete Hegseth is defending a U.S. commander's decision to conduct multiple strikes on an alleged Venezuelan drug smuggling vessel in September. Critics have questioned the legality of a second strike on survivors.
So you didn't see any survivors, to be clear, after that first strike? I did not personally see survivors, but I stand, because the thing was on fire. It was exploded and fire is smoke. You can't see anything. You got digital. This is called the fog of war.
Now, U.S. President Donald Trump has cited the dangers of illicit drug flows from Latin America as justification for the strikes. But he's also just pardoned former Honduran president Juan Orlando Hernandez. He's been serving a 45-year sentence for conspiring to import tons of cocaine into the United States. Trump's extraordinary move raises alarm bells. It risks weakening U.S. credibility in Latin America and undercuts decades of U.S. efforts to fight drug cartels. Diego Ore covers Latin American politics.
So he won a second term in 2017, but the election was plagued by irregularities. So after that, Honduras took the streets and almost 30 people died in protest. And also in his second term, the U.S. made public that he was investigating him for alleged drug trafficking. Right now, Hondurans have not forgiven Hernandez for bending the law to run for a second term and winning the election through fraud. And today, most people disagree with his release from prison. They say it's a mockery of Hondurans in U.S. justice.
Meanwhile, Honduras' current presidential election has turned into a chaotic nail-biter. Centrist Salvador Nasralla has a razor-thin lead over Trump's conservative pick. Just 68% of the votes are in after major delays and system failures. Fewer than 9,000 votes separate the two men. Nasralla says he's ahead despite efforts to muddy the process. Trump is alleging fraud without evidence and warning of consequences if results change. Honduras' election authority is urging calm as it scrambles to fix a system failure that's left about 20% of votes uncounted. Now to markets, and we've got Mike Dolan from Morning Bid with us. Mike, what do we need to know today?
Today we're talking about the latest twist in the saga of who Donald Trump names as the next Fed chair, likely to be Kevin Hassett at this point. And we'll be talking about a 10% surge in Boeing's shares on Tuesday night. And also we're looking at the Ukraine peace talks, to what extent they are affecting energy markets, and what would happen if there was finally a deal to end the war. So for any of those stories, please tune into the podcast later.
Thanks, Mike. Just like you can for Reuters World News, you can also ask your smart speaker for Reuters Morning Bid, or listen wherever you get your podcasts. You can also watch on Spotify.
It is indeed Giving Tuesday, one of the biggest days of the year for philanthropy and charitable giving.
Dell CEO Michael Dell and his wife Susan are giving $6.25 billion to fund investment accounts for 25 million American children. The gift is part of Trump's Invest America initiative It promises every child born between 2025 and 2028 a $1,000 account tied to the stock market.
And, we believe the smartest investment that we can make is an investment in children.
The money becomes available at 18 for education, housing, or starting a business. Trump has said it gives middle-class kids a shot at the American dream, while financial firms have scrambled to shape the program's rules.
We're going to go the wrong way if we keep taking in garbage into our country. Ilhan Omar is garbage. She's garbage.
A blistering attack from President Trump on Minnesota's Somali community, calling them garbage who contribute nothing to the U.S. He also targeted Congresswoman Ilhan Omar, accusing her and her friends of ripping off Minnesota for billions of dollars in welfare. Omar took to social media with a response, saying, "His obsession with me is creepy." Minnesotan leaders have jumped to the defense of the 80,000-strong Somali population, most of whom are U.S. citizens, saying that they're an economic and cultural asset. Trump's scathing rhetoric has ramped up since last week's shooting of 2 National Guard troops in Washington, and for which an Afghan national has been charged. And his attack came as the administration says it's paused all immigration applications from 19 non-European countries. After a political firestorm has broken out in India over a plan to preload a state-run cybersecurity app on smartphones, the government is backpedaling. Reuters was the first to report that the Indian government confidentially ordered companies, including Apple and Samsung, to put the app on their devices. Sources told us that Apple does not intend to comply with the directive, and now a softening stance and a willingness to amend the original order. Reporter Aditya Kalra has been covering the story from New Delhi.
So the Indian government's app is basically to be installed in various phones which it wants, helps block stolen mobile phones. It uses your IMEI numbers, and the government says that you can use these numbers to block your stolen phones so that they cannot be misused. So from the government's perspective, it's a cyber safety app because there's rising incidents of cyber fraud in India, hacking. Where the problem really comes from is that the government is not saying or encouraging users to simply download the app. They are saying that the manufacturers like Apple, Xiaomi, Vivo, Oppo, they need to mandatorily put this app onto their phones when they are sold. And the old phones should kind of get it as a software update. Now, that's really worrying for the smartphone manufacturers and the privacy advocates because they see this kind of an order to mandatorily preload an app as something that is invasion of privacy and could potentially be abused as a surveillance tool. And that's why it has caused a huge uproar in Parliament with the opposition parties demanding an immediate rollback of the order.
Aditya says there's a lot at stake in the world's second biggest smartphone market.
We have 735 million smartphones in the country, so the stakes are pretty high. Both from the smartphone manufacturers' point of view, the privacy advocates, who of course see this as a way to get into the smartphones of more than, of all the Indian citizens. But of course, the government continues to say that this is a cyber safety app intended to save citizens from any potential abuse of their phones in the future.
And for today's recommended read, the AI boom and the memory chip supply crunch behind it. Demand has spiked, prices are up, and companies are fighting for chips. There's a link to our story in the pod description. For more on any of the stories from today, check out Reuters.com or the Reuters app.
We live?
I believe
we live?
It
seems like what happened. We live?
I believe so. Yes, we are live.
All right, we're live. Welcome back to another episode of Token Narratives. I'm Graham Stone, joined by David Sensel as usual. We're going to get into it here, starting off with a little price action. So we had a little bit of a dump followed by a pump. Right, we had this on Monday, Asian hours. There was a pretty brutal sell-off. Bitcoin dropped like 5-6% in a couple hours. So what happened there? I think, or well, the talking heads people love to have come up with reasons for why these things happened. But it seems like what happened, and David, I don't know if you have any thoughts on this, but it seems like what happened is the markets got spooked by the Japan rate hike. So basically, it's the yen carry trade deterioration fear, i.e., when rates are higher in Japan, there's less money available to pump risk assets. Bitcoin, of course, being a bellwether for risk assets and liquidity conditions, reacted most violently as usual. And
Yeah,
go ahead.
Well, it's just, I mean, I've been really, really, really busy this week with MENA, which is coming up next week. So I haven't been able to really sink my teeth into this yet. I hope I will be eventually. But there seems to be like two, from the people that I follow, there's like two basic camps, which is the drop was caused by the Japanese rate hikes, and okay, so both say that the drop was caused by Japanese rate hike news. One camp says this was a legitimate concern, and then the other says no. The people who got drawn into this or panicked by this are macro tourist retards, and they don't know anything what they're talking about. So I don't know. I haven't been able to get into the actual reasoning behind the second one, but I think I'm probably inclined to believe the latter. That and also, like, you look at the market reaction, it does seem that this was just a bunch of idiots reacting to things that they don't really understand. I am one of those idiots, by the way. I'm not saying that. I said, but yeah.
I mean, if you're a smart trader, you could be like, okay, the markets thinks this is bad, so I'm gonna front run that. I'm gonna sell right now, and then I'm gonna buy the dip when because it isn't actually that consequential, this yen carry trade thing. Why is it not consequential? We had the big yen carry trade scare a year or so ago, and supposedly people have kind of unwound that. It's not nearly the risk that it was at that time. It was much more highly leveraged at that time. This is back when I believe the Silicon Valley Bank scare was happening. And but nevertheless, there's this narrative that when the Japan Central Bank raises rates or indicates that it's going to be raising rates, that's bad for the yen carry trade, which is bad for risk assets. So yeah, that news just sort of, it's like a self-fulfilling thing.
Yeah. And also, this also coincides with a lot of like Japan related economic data that at least on the surface makes people wary, right? Like you have the stimulus package coming out. So Japan's going to be presumably printing money. And all of these things are happening in Japan. And I think a lot of people, I think most people, don't really know how to reconcile these things, right? So you have Japan starting to start printing money, and then you have them saying that we're going to raise rates at the same time. This is usually not normal activity, and you see a lot of, I think, macro analysts being like, "Oh, look, Japan's broken, Japan's doomed. Look, this is going to be terrible." And so I think all of these things kind of combined to scare people for that couple hours. And then you have other I think analysts / financial traders who have more experience in this, and they came out later and kind of were trying to parse what actually is happening, and so it's not as sky is falling as I think the initial reaction would imply.
Right. So we had that dump, and a couple days later, we had a pump of pretty much equal proportion.
ओके गाइस, ये थोड़ा सा क्रूड ऑयल का ध्यान रखना है इसमें सेलिंग में प्राइस, क्योंकि नीचे वाला लेवल ऑलरेडी ब्रेक हो चुका है तो सेलिंग एक्सपेक्टेड है। ये जो नीचे सपोर्ट जोन है 5308 वाला, यहाँ पर कैंडल किस तरह से फॉर्म होती है, बाइंग डिपेंड अपॉन देम एज वेल। ओपन इक्वल टू हाई बनाते हुए आता है प्राइस यहाँ पर, तो फिर चांसेस हैं कि ब्रेक डाउन करके नीचे वाले सपोर्ट तक चला जाए प्राइस, तो वी हैव टू वेट इस पर्टिकुलर जोन पे।
With Bloomberg News.
Analyst recommendations, and we're going to start off today in the consumer space, a closer look at American Eagle Outfitters. JP Morgan, which actually cut the stock to underweight 4 months ago, today upgrading the retailer to neutral and bumping the price target to $20 from 14. The analyst over there, Matt Boss, citing momentum with American Eagle's loungewear brand Aerie, which the company expects to achieve high teens same-store sales in the quarter ahead. Those shares on a high, hitting their highest level since May of last year. Next up, Wayfair. Jefferies, which upgraded the stock to buy in March, reversing course today with a downgrade to hold, flagging a clear deceleration in November visits to the home furnishing retailer's website. A sign of holiday season weakness? Well, that's what the analyst says, who also dropped his price target to $94 from $123. Those shares now down about 14% over the past 4 sessions. And finally, let's take a look at Darden Restaurants. Citi trimming its price target to $232 from $239, but it does maintain its buy rating ahead of the Olive Garden parent company's earnings report later this month. Citi expecting a, quote, relief rally before the end of the year, noting that Darden has actually managed to navigate a tough restaurant backdrop. Those shares up for a second straight day, and those are some of our top calls.
not getting eaten up by big AI offerings?
Well, the business is doing great. We had a solid third quarter. I think what the market is digesting is this massive opportunity ahead of us to secure AI. And what everyone's realizing is that to secure AI, you have to secure identity. All these companies are trying to roll out AI agents. And to make these agents useful, they have to be connected to all of a company's data. If it's not connected to a company's data and the agent can't work on that data, it's no better than a consumer ChatGPT or Gemini. And we can help companies connect their agents to data in a secure and manageable way so they can get a great agentic experience for their customers and employees and keep it all secure.
Reflect then on actually the adoption of this agentic AI, because we've got questions in the market abound about whether Microsoft's having to really be able to scale in the way that it thought it could in the adoption of agentic AI. What are you seeing? Are people jumping on it?
Well, the inbound interest we have for these new products, Okta for AI agents, is something like I've never seen in my history at Okta. And so everyone is very interested, but they're all stuck. They're stuck because they're realizing they have to connect it to their company's data, and that's challenging. They have two choices. They can put it all in a data warehouse right in the middle and give the agents access to everything, which is problematic because then they don't know what the agents are going to do with it. Or they can just have a very vanilla, watered-down experience where it looks just like the consumer ChatGPT you would use at home. So we offer a better choice. We can connect it to that data in a secure way that lets them govern and manage it, and that's why the interest is so high. So this is, I think, a big unlock, and that's what I think everyone is starting to realize.
There are a few identity management offerings out there. How do you compete against the Palo Alto Networks, against Microsoft itself that wants to offer it and offer you the agentic AI as well?
Yeah, the way I like to explain it is these companies have to choose the right platforms and systems to build out this AI future. And imagine, like an analogy I use is, imagine if you had to choose one streaming service. You had to pick one. You had to pick either Prime Video or Netflix, and then that's the only one you could watch. That's what some of these big platforms are saying. They're saying use everything from us. It's like just you can only use Netflix, and you better hope all your shows are on Netflix. What we're saying is you can choose whatever AI technology you want. You can get a model from Google, you can get infrastructure from Amazon, you can get application data from Salesforce, and we'll make it all work together. You can choose any show you want to watch, so to speak. So we don't lock people in. We give them a choice across all of the different platforms, and that's very important in this innovation because these things are changing every week. Google comes out with a brand new model, OpenAI is going to have a new model, and customers want choice, and we give that to them.
Todd, it's interesting that you're seeing interest like you've never seen before and since your time at Okta. Why then is the market still thinking that actually your revenue growth is kind of going to flatline, be sub 10% growth? Do you see something different?
Well, I think we see two things. We see a very solid business that is profitable and growing at a nice clip. And then we see this massive upside. So I think the market is trying to understand how quick it materializes, how big it can be. And we're very excited. We think it could be bigger than our core business. The opportunity to secure AI could be bigger than anything we've ever done, but it's just a matter of making that real and doing the hard work with the customers to bring it to fruition.
When we're hearing about how companies are actually adopting more broadly, what are you seeing most? Are you seeing consultants coming in? Are you seeing companies trying to build in and of themselves organically? Are you seeing the likes of the sellers of these generative AI offerings, the OpenAIs or indeed the Microsofts, going in and almost consulting for them? How are we better to streamline? As you say, we're stuck. How do we unstick?
I think it's all of the above. We're seeing starting a lot of interest in the agentic solutions that the SaaS providers have rolled out. Again, those are powerful, but they're limited in the sense they're constrained to one application or one service. We're seeing a lot of companies start to build their own, where they're using developer tools and capabilities to connect multiple databases and warehouses across different SaaS applications. We're seeing organic internal development. We're seeing consultants. Everyone's trying to help them do this, and I think some of these key unlocks like security and identity and context and the right access permissions are going to help move this thing along in a way that's very, very powerful for everyone, because this technology is real and it's quite profound, and it can make employees more productive. It can help companies grow into new industries and new markets. It's going to be a big boon for established companies, for new companies. It's very exciting.
the exact opposite agenda. They're pitching, clean technology, efficiencies, electrification. And even when you go to other parts of the world, all of a sudden, the cars that you see there don't look like the cars in the United States anymore. Before you could name all of them, now that's simply not the case because there's options available that just don't sell here. So while the rest of the world is moving forward, you could say that we're kind of staying stagnant. I mean, part of it could be that, Americans are demanding lesser cost vehicles, and that's all fine and well, but we could be missing out on new technologies, more electrification, because automakers are going to focus, they have to move their focus to where the most advancements are being made. So if they're building cars for China and they're not necessarily building cars here for the United States, it just creates, a bit of imbalance that maybe ultimately may not be good for the American consumer if we want to stay on the cutting edge of things like technology and fuel efficiency.
Real briefly, Jessica, is there any option for the car makers to continue making some fuel efficient cars and satisfy the administration if it rolls back these standards?
Well, I think the goal is, of course, to move fuel efficiency standards upwards. I think that's what consumers want. Whenever there is good fuel efficiency, there is definitely a consumer reward because people see that price at the pump every week. It has far more psychological effect than even MSRP, which you pay once and you sort of forget over the next 6 years. So fuel efficiency is something that they need to strive for, but maybe in a container that is more attainable when you think of the, the broader economy and what's going on kind of in this space.
Some of these I wouldn't actually say are myths, like the idea, for example, that private credit is not tradable. I mean, I think we all pretty much know that, yes, of course, you can buy anything for a price and everything is tradable, right? But there is one in here that I thought we'd go over, that it's an emerging systemic risk in the financial system. Give us his argument.
Well, here's the thing. He's responding to other people in the industry, not just media criticism, which is what they're all focusing on, but private credit industry leaders are also responding to comments from people like Colm Kelleher, arguably the most powerful banker in Europe, the chairman of UBS, who says more and more insurance money moving to private credit could pose to be a systemic risk. Mark Rowan obviously disagrees with him soundly, and he's said as much. But here's the thing. When we're talking about systemic risk, what happens when there is a downturn and there is a big fall in asset prices?
Right.
People will go looking for a scapegoat. And then you look for that corner of the industry that has grown rapidly, that has grown quickly, and you try and find faults there, which is why people are concerned about it, perhaps not as alarmist as some of the people are making it out to be.
Yeah.
And the more you hear some of these leaders talk about the risks here and keep talking about it again and again and try and play it down
and
as
it's
not
Marx,
happening.
It's Jeff Gundlach, it's lots of others. But I do want to get in here that the counter-argument might be something like what we're seeing in this Wells Fargo note, conversation between Mike Mayo and Bill Cohen, who's writing a book about Apollo, that, for example, he's brilliant, right? Mark Rowan built this, this edifice, and everyone is trying to copy it. But if annuitants want their money back at some point, and they want it quickly, or they lose confidence in the industry, it all comes tumbling down, just like in the great financial crisis. So essentially, these private credit shops are not that much different to banks, but they're not even regulated like banks.
Well, I'll give you the counter to that argument, which is the argument that Mark's been making, which is when he wants to define the private credit market, he wants to talk about this gigantic $40 trillion financing market. When most of us talk about the private private credit market. We're talking about the junk-rated segment, the leverage lending segment.
Junk says who? Says the credit rating companies, right? Can you trust them?
Look, for whatever means and systems we have right now, we know what is below investment grade, and that market is roughly $1.8 trillion to $2 trillion. What Mark Rowan is saying is, look, that is a riskier segment of the market, but that is not all of private credit. That is not where Apollo has hitched its bet. Apollo is betting on this private credit being this $40 trillion market, willing to invest in highly rated investment grade companies. And when you take that as a whole, you shouldn't be overly concerned about private credit.
The Halifax Security Forum a couple of weekends ago, when the CODEL, led by Jeanne Shaheen, but also having Republican members, got a call that evening, the evening that the 28-point plan surfaced, from Rubio saying, well, it's just a draft. It's not cooked yet. He wasn't in the room. He had nothing to do with it, or probably had nothing to do with it. And I think it's dead on arrival. I mean, I brought some props. I don't want to surprise you. But this was from Senator Mitch McConnell when that plan was released. Quote, Putin has spent the entire year trying to play President Trump for a fool.
This is a tweet, right?
This is a tweet from Mitch McConnell on X. And this one was from Roger Wicker, whom I just mentioned as chair of the Senate Armed Services Committee. Quote, any suggestion that we can pursue arms control with a serial liar and killer like Putin should be treated with great skepticism, unquote. So I think that Rubio's trying to make his best case. He is the Secretary of State. He is the one who should be leading the negotiations. This other team, I'm not saying they're terrible people. I'm sure they're trying to make a deal, and wouldn't it be nice for the war to end? But let's remind everybody that Russia was the aggressor and Ukraine is the victim. And rewarding Russia and punishing Ukraine is the wrong outcome.
Well, everything in that plan looks like it would be a reward, right?
Well,
so what, do you trust Steve Witkoff and Jared Kushner running this conversation?
Well, I don't want to talk about trust, but the plan as explained to me looked like there was some oops in there. There was some bad translation from the Russian. Looks like exactly what Mitch McConnell said, that Putin is playing Trump. And if we're not talking about it,
Global aviation reporter Benedict Campbell joins us now. Benny, the issues that we've seen at Airbus over the past week, can you just describe the scale that they are? Because you're seeing this flip where Matt was pointing out Boeing does well, Airbus isn't. Are they on the same sort of scale of woes we saw at Boeing in years prior?
Well, probably not is the short answer. Boeing has really come through a very, very rough patch over a number of years. And what we've seen here at Airbus is a slightly unusual sort of breakout moment for them in the negative sense. So it all started late last week on Friday. They came out with this announcement saying that their software on the A320 aircraft needed upgrading. That happened surprisingly swiftly, I will say. That happened over the weekend. When I saw the first numbers, 6,000 aircraft that needed the upgrade, I think most people thought this would be something that would take them well into sort of the rest of the month, maybe even next year. And by the end of the weekend, it was all done. But then problem number 2 arose out of nowhere, which was these panels that cover the aircraft. They have some of them that show some discrepancies versus the specs that are required. So what they're doing now is checking them all. And that's a sort of arduous process that will take a while. And that's essentially why you got sort of the hit this morning, where they said we won't be able to make our delivery targets for the year. We're going to be a smidge lower. The original target was for 820 aircraft, and now it's 790. They did keep their financial targets in place, and that might explain why the stock didn't fall off a cliff again. It had a really epic meltdown early in the week, but today it managed to sort of hold its gains.
You know, I always look at the 5-year performance of Airbus versus Boeing, and when you zoom out that far, Airbus is just crushing it in terms of the stock, right? It's well over doubled, and meanwhile, Boeing is in the red. I've also heard you, Benny, talking about the A320 as, I believe, the world's most flown commercial aircraft, right? Are they completely dominant?
That is correct. I mean, dominant is probably too big a word, but they have certainly come from nowhere. I mean, a while back, admittedly, in the late 80s. But, you know, Boeing back then was sort of the only game in town, and the A320 has really sort of taken that position away from Boeing. Obviously, they're still sort of neck and neck, shall we say. Boeing still wins a fair portion of the business. But these days, the A320 and its derivatives, so the 321 and the XLR and all those types of planes, that's really where the action is right now, and it's put Boeing under considerable pressure, and that will explain that chart that you just showed. And a big part of the Airbus story is built around the A320, which would explain again why people are somewhat nervous about anything going wrong with that plane. Airbus does say we've got a handle on this, we have it under control. We'd rather slow things down and take the hit on the deliveries and make sure that everything is safe. But again, this is a plane that people look at very, very closely just because it's such a big money spinner for Airbus.
Yeah, and we also saw just how many airlines had to cancel or delay their flights because of that. Benny, thank you so much. Bloomberg's Benedict Campbell.
Entering a European space, the first thing you want to do is ingratiate yourself in sports culture. That's what they're attempting to do. And look, a Super Bowl ad is among the most expensive of the year. This is owned by Mark Walter, who owns the Lakers and the Dodgers. This is pocket change to him.
So how important is this, though, to Cadillac? I know you're focused on the Super Bowl as you're a big football fan, but I'm focused on the racing, right? And I'm seeing such an incredible expansion from both Ford and General Motors into these massive mega $1 million series.
It's huge. It's huge. I mean, they are going to be debuting a little over a month later, I believe in Australia and Melbourne specifically. And so with that in mind, they want to build both the brand on the track and off the track. On the track is very simple. You win, you gain fans. And even if you're competitive, F1 is so ultra competitive, we see a lot of the same teams win, or the ones who win those early season races often dominate throughout. But off the track is where it's important, and I think the Super Bowl commercial can help with that.
But it's not even just Cadillac for GM. Red Bull is going to also be using a GM engine too. Yep. How much of this is just like a wholesale re-entry of General Motors into F1, and what does it mean for kind of their overall brand to be so present now in what's had been largely a European sport?
It's huge. I mean, if you think about from the expansion side of things, they paid a $450 million expansion fee. I'm sure that they're going to make that back 10 times over years from now. And with that, part of it is, you think about just sports franchises overall, it isn't just the performance on the track. There are plenty of teams across the NFL, NBA, MLB that have won numerous championships, but their valuations are low. And the reason for that is the real estate play, the branding, the marketing. Cadillac is a big part of this, and them being the only American team in F1 right now is going to do tremendous for their business.
I thought Red Bull was going to use Ford.
Oh, Ford, wow.
Motors.
So that's what I mean.
You said
Ford.
GM.
I did say GM.
Yes.
Oh, thank you for that correct. But
that's a serious and important distinction.
Wow, yeah, geez. Well, okay, but it does, if I can, defend myself, it just speaks to the presence of American car companies on the track.
Yes.
It's an embarrassing one.
Very big rival.
Very, very big rival.
Yeah. Okay. Really cool stuff, Randall. Great story.
Thank you,
Who's your Super Bowl pick, by the way?
Let's go Rams Bills.
Rams, Bills.
Rams, Bills. Right now, I'm open to changing by the end of the regular season.
I think every company is going to have its own experiences, and the problem is we're going to get flooded with these individual narratives, and it's going to weigh on the tape, and it's going to hit certain names more than others. And then overall, the question is how long to profitability and productivity.
The volatility, I mean, isn't in the whole market, right? It's just concentrated on these few names that move it. It doesn't seem that severe, right? You talk about a battleground levels between what 6750 and 6800. That's like a very small trading band.
Yeah, we're right now in an area where we've had a lot of pinning from positioning in the option market, and also everyone's just waiting for the FOMC next week. So overall, the volatility is finally kind of condensing. So realized vol has come back in, which is allowing more participation in the market. But to your point, every day is a new mega cap story that kind of then rotates capital maybe out of one name into other names as winners and losers are picked.
Does the FOMC meeting matter that much? I mean, there's a 95% chance of a rate cut, and no matter what, you know that this administration is going to put in an extremely dovish panel of voters in 2026. So rates are going down, whether it's December or 26.
I think it's the combo of the meeting and then the data we're getting right after it. So you do see a kink in the vol curve and the surface. But to your point, you're right. I think everyone's kind of accept that we're going to get this hawkish cut, and then we're going to get leadership change next year. So what does it really matter for the projections of 2026, to your point? And you know, that's what the big question is right now.
Data just crossing, and it is not a positive read on the U.S. economy. It was expected to come in with 10,000 jobs being created. Right now, we're seeing a decline of 32,000 jobs. Last week was revised upwards, so we saw 47,000 jobs created versus the 42,000 initially reported. This is the ADP employment change, and this doesn't always cohere with what we see from non-farm payrolls. However, in the absence of non-farm payrolls and in the consistency of this series, this has increasing weight. Enda Curran joins us now of Bloomberg. Enda, what do you see from these numbers?
Well, at face value, Lisa, as you're saying, it's clearly a negative read on the labour market, coming in much weaker than expected. Economists had expected maybe around a plus 10,000 jobs, but it actually came in, as you say, negative 30-odd thousand, and weakness by the looks of it across the board, jobs being lost in goods and services. Now, this does lean into what the kind of other sentiment or survey indicators have been telling us, that the labour market is softening, that we're moving from low hiring, low firing to something else. Of course, we've had headlines from big branded name companies, the likes of Verizon and Apple, cutting staff or announcing layoffs over recent weeks. So in the context, as you explained, where we don't have the official data from the BLS, there's a lot of weight being put on this ADP set of numbers. It's the last read we'll have really on the jobs market before next week's Fed meeting. And as I say, at face value, this suggests that the employment market continues to soften at the very least.
Yeah, and what we're seeing right now is that decline of 32,000 jobs is now at the lowest level that we've seen in this ADP series going back to March 31st, 2023. Enda Curran, thank you so much for that.
Details of the report are a little bit weaker than the headline figures suggest. Yet there was an uptick in the headline, but part of that was supported by merely slowing the pace at which a decline in employment took place.
Slowing is a word you just made up. And I love it. I love it.
A slowing of the pace at which layoffs are taking place. So we did see within the ADP numbers this week that there are just this morning, that there are layoffs that are taking place. We still see soft employment figures in here, and we also see relatively weak new orders data in the ISM numbers. And this is services as opposed to manufacturing. Services, you would expect to see some rotation towards services when you have snarled supply chains on the good side. You would expect people to allocate more of their budget towards services. It just doesn't appear to be the case coming through November. So.
Oh, wait, pot calling kettle black. You did say sidnovating today, which
Sidnovating and slowering are two
slowering
Oxford
makes
English dictionary.
way more sense, let me just say.
Yeah.
Stuart, so on top of this, okay, you also had ADP data that's all looking weaker, or at least for small businesses. Does any of this matter? When we get headlines like this from Scott Bessent saying that he wants to change the rules for regional Fed presidents to make sure that they live in their district for at least 3 years, it would seem to be laying the groundwork to completely reshape the Fed and probably get it more dovish. So do we care about the data when things like that are happening?
I think that a reshuffling of any sort of personnel at the Fed is more important than any sort of survey data that we're getting from ISM or even the ADP data that we're getting this morning. I will say, though, that whether regional Fed bank presidents live in their districts, I think that's basically an insignificant development. When we look at the Board of Governors of the Federal Reserve, there's not supposed to be any overlap in where those governors come from. They're all supposed to come from different districts. And the amount of gamesmanship that takes place when it comes to those personnel decisions is literally like, sure, you're a professor from USC, on the other side of in Southern California, but you took a Delta flight that had a layover in Atlanta, so let's say you came from that district. I imagine that we're going to have basically the same thing. Okay, so you went to grad school 2 decades ago in Texas, and so we'll say you came from Dallas. The amount of gamesmanship that we can see around that sort of development is a little bit wonky. So.
But by the way, it would feel like a good thing to actually come from the district you represent. Right?
Well, it's really about the relationships that you have with the private sector, right? It's with the bankers, the Class A directors, with business leaders, and with the Class B directors, and with the rest of the community, your Class C directors. And so if you're able to maintain relationships with those people, I don't think that it matters that much whether you're actually from the district. And in an age where communication is a heck of a lot easier, and in districts that are so large, it's not like you're seeing all these people in person anyway. I don't think that it's that huge.
I mean, this is something that we talked about on this program with Stephen Myron. Remember, I was like,
true.
Does it matter that the heart of the Fed is really in this Harvard, New York, pipeline? And he's like, I went to Harvard and I'm from New York. They all did, right? But the point isn't where they're from. The point is that this could lay the groundwork for dismissing all of the regional Fed presidents and installing people who agree with President Trump along, ideological, political, and rates lines.
That's right. It's not so much the technical changes that he's proposing as it is a transformation of the institution that matters. And any sort of tinkering sort of suggests that there's an acceptance within the administration that an effort towards politically capturing the Fed as an institution is just an idea that's taking deeper root within the administration. Secretary Bessent was seen basically as the voice of reason when it came to preserving the independent Fed. As much as he advocates for having lower rates, he is the person who is seen as supporting that sort of institutional independence. And when he talks about interfering to any extent with how the institution operates or altering the Federal Reserve Act in any way, I think that's more important than the specifics of his proposal.
With the income-based allegations, particularly against the backdrop of this Fed meeting next week?
Yeah, it's a confluence of events, and we would urge investors simply not overlook the last few weeks of 2025. You have 3 main implications to think about. Number 1, continue to focus on the FOMC. Perhaps this meeting is live in more regards than just simply a rate cut. It's live in the sense of the messaging as you get into 2026 and really what the FOMC is going to be focused on, that balance between labor and that balance between inflationary numbers that are pushing up against that 3% core
is incredibly important. The second thing to pay attention to is liquidity conditions. And what we've seen over the past few weeks is a focus on the micro of liquidity conditions, fluctuations in repo rates, funding rates, et cetera, sort of piquing people's interest. We're not necessarily concerned about any systemic risks there here at PIMCO, but more broadly speaking, as you've seen excess reserves decline in the overall economy, that means there's simply less cash chasing investments and risk assets at that point in time. And it's something to think about in terms of those asset allocations in the longer term. And the final thing is the economic outlook. This is clearly a K-shaped economy. And the last month is going to begin to have people emerge from their morass, that dearth of data, economic data that we've had over the past few months. We're going to begin to see inclinations of that. And perhaps that data will shed some light on where the economy lies. Where we stand today at PIMCO, we believe that it's a bifurcated economy. One where you have growth areas clearly delineated by AI and productivity there, and a labor market which is under pressure at points in time. That's going to perhaps be the focus of the FOMC over the next at the next meeting.
Given that you can probably bet with some certainty here that we're going to get lower rates, how does one position a portfolio around that? And I'll point out a headline coming from Crane today that money market assets, for example, rose to $8 trillion for the first time, Jerome.
Two things to think about in this context. Number one, risk assets have been buoyed by the expectation of Fed rate cuts over the foreseeable future. Perhaps the market's forecasting as many as 4 rate cuts over the next year. If it happen, and it's supporting animal spirits on those risk assets pretty substantively. If those don't come to fruition over the course of the next year, perhaps that creates some deflation in terms of risk asset pricing, leading to market volatility, et cetera. That's where the entrance of fixed income comes in, and really the derivation of fixed income. We believe that not only are we having attractive nominal yields here, but real yields, inflation-adjusted yields, help protect investors from that broader market volatility which could emerge next year. So the starting point of things like risk assets, credit spreads, yes, those are perhaps a concern in the immediate focus. But when you take a broader step back, ways to derive total return are really fixed income based. Now, back to the point about money market funds, $8 trillion is a substantive amount. What we're finding ourselves is people who are becoming defensive. That defensive momentum is picking up. And we're finding them go to money market funds. Those savers were once shadow savers, they're now real savers. And we have to encourage them to take a step out of that saving in the traditional sense, out of T-bills, out of money market funds, into something more active out the curve, more active in terms of diversification of the portfolio that allows them to outperform not only Fed funds, but earn an additional return of 1%, maybe 1.5% above money market returns by being in that ultra short type of mutual fund space. That being said, we think that there's a reason to be a little more cautious at this point in time, given those clouded outlooks and where the market is pricing the longer term expectation of rate cuts.
Has asked for footage of these strikes to be released. Is that something that you would support?
Yes. We need to see the footage. We need to hear the audio. The Secretary of Defense has now said that he left the room. That's fine. But the whole idea is the Admiral's not just making these decisions without an order. The order came from the Secretary of Defense. And then I hear some of my colleagues in the hallway just saying, oh, no big deal. We do this all the time. Whenever we bomb people, we just do a second tap on them, man. If they're moving, we go back and hit them again. Well, if it's soldiers with guns shooting our soldiers, I'm fine with that. But this is a pretense of a war. They've just said, oh, we call these people in these boats narco-terrorists so we can kill them without any kind of proof, without any kind of justification, because we say so, because we say it's a war. This is insane. This isn't a war. These people we don't even know if they're armed. Or we've killed 80 people. Are any of them armed? What are their names? What is it they're transporting? All these people going off saying, oh, fentanyl's killing people. I know people who died of fentanyl. I have a great deal of sympathy. I know a family lost 2 sons to fentanyl. I have sympathy for that. There's no evidence there's any fentanyl on this boat. There's no evidence that any fentanyl comes from Venezuela. Zero. There is fentanyl come out of Mexico, but since we're blowing these boats up, maybe we're taking our eye off the border in Mexico. So the whole thing is a pretense and a prelude to war in Venezuela, and I hope it doesn't happen.
Ramaswamy's net worth has nearly doubled while he's running for Ohio governor. Billionaire Vivek Ramaswamy quickly rebounded after his 2024 presidential campaign loss and his removal from Doge in January of 2025. In February, he was back in his native Cincinnati, Ohio, announcing his bid for governor. Ramaswamy addressed the crowd, asserting, quote, "We're on the cusp of a new golden age in America right now.
Yeah, you want to talk about those slop bowls?
Yeah.
Apparently, everybody's kind of over them. That, those bowls where you throw some rice and some other stuff and then you throw everything on top of it. Well, apparently, people are over it. Consumers want something different. They want something you can hold in your hand like a good old sandwich.
Yeah, Steve Al's the co-founder of Chipotle, and the burrito bowl that rocketed the chain to lunchtime fame has moved on. At a Manhattan location of his new concept counter service, there's a red neon sign. It depicts a lunch bowl with a slash through it. It's a bowl-free zone, guys. They say they love sandwiches and anything as long as it can go on bread. So long live the slot bowl, or is it the end of an era?
Well, first of all, I'd just like to point out, counter service, I love this place, by the way. And I went there a few times before I even realized it was actually owned by the co-founder of Chipotle. But the problem with the bowls is they just became so prolific, right? I mean, everyone does this. I mean, it was unique at one point, but now it's like, every, bodega on the corner here is doing a slot bowl.
Well, it's interesting to see how that's being expressed in the stock market as well, because you think about Sweetgreen, you think about Kava, they're both down year to date. But you compare that to 2024. I mean, these were the all-stars in the stock market, up triple digits. And it's interesting just how quickly the winds have changed on specifically these two.
Do you think pricing had an issue with it as well?
I have to imagine. I mean, you're paying $20 for a sad salad with not that much protein on it. That's how I feel.
You could get the new ultra-high protein Sweetgreen one that they offer.
Oh, right. Isn't it 100 grams of protein?
Yeah.
What do? They put like a foam on top or something? Like
it's
Starbucks?
a lot of chicken. I think 3 scoops of chicken, some broccoli, and
some crushed up crickets, perhaps.
Tahini dressing also. I don't think the crickets are included.
Yeah, I don't know.
Yeah, but it gets to this idea of like why trends change, like whether it's economic or whether it's just social and cultural. We've had our fill with bowls, and now we're on the sandwiches. Maybe.
I always loved a
sandwich.
sandwich.
And why sandwiches? You said handheld. Why not like, I don't know, a patty, an empanada, a hoagie?
you went viral in the video that we posted as you signed on to a War Powers Act and took a pretty sharp edge against the administration on this. Now that we have seen so much occur since then over the past weeks and months, we've taken out more than 20 alleged drug boats. There's an argument now about the legality of these maneuvers. As chairman of Homeland Security, do you believe that we're on the march to war? And are you trying to stop it?
I'm very fearful that these boat strikes and the positioning of our ships and our troops right off the coast of Venezuela is a prelude to war. I think that there is a real question of legality. Under the military justice, under the Code of Military Justice, it says that when someone has been incapacitated or shipwrecked, or they're clinging to the wreckage of a boat, that they're out of combat and they're no longer subject to be killed. And so there is a real question, who gave the order and why would they give the order to kill someone who is out of combat? Now, over the weekend, the Secretary of Defense was saying, well, I don't know anything about it. I don't know anything about a second attack. But today, when he was interviewed, he said, well, yes, I left the room for a while. The second attack occurred, and I learned about it when he came back. But why was he telling us this weekend he didn't know anything about a second attack and he had never authorized it? But now that it's come to light, he says, oh, I didn't do it. Somebody else did it. The admiral did it. So they're all pinning blame on the military guy. But I'm one who tends to give a lot of leeway to the military guy and not so much leeway to the person who gave him the orders. These orders came from the Secretary of Defense, and ultimately he's going to have to accept responsibility. But to my mind, there's a question about whether or not killing people in the first place, who you have no proof that they're armed, you have presented no proof that they're carrying drugs, and that you simply kill them. I think that's outrageous. But now, not only do we kill them, our government is following up by killing them when they're wounded and stranded and of no threat whatsoever, which is, according to our own laws, illegal.
Coverage of what Russian news from Russian agencies. Everything we get is from the West. So I for one welcome RT India to this country, and I think it's highly required.
What can you say about RT's role in the world's shifting geopolitical landscape?
You see, as we know, the coverage of the whole Ukraine war in particular, as well as Gaza and other crises, most of it comes from Western channels. And of course, nowadays, Indian channels are also picking up. They're going out, they're sending their reporters out, so we get an unbiased view. But I think it's really, really important to get the Russian viewpoint as well in terms of providing another source of what's going on. Because as we are all aware, this is the age of disinformation. This is
not just a special and privileged. There is a often used expression, time tested, the relation
I can't say the same for American Bitcoin Corp. The ticker there is ABTC. That, of course, was founded by Eric Trump. You had a story out today about the share move, and it is staggering. Shares down about 39% at the moment. What's going on there?
Yes, so American Bitcoin, they're a Bitcoin miner that spun out of Hut 8 Corp. And this was co-founded, like you mentioned, by Eric Trump. Donald Trump Jr. is also a shareholder. And their main focus is just mining Bitcoin. But the problem is, like I mentioned, that Bitcoin prices have really declined this year. So for a company where you're getting most of your revenue from either holding Bitcoin or from selling Bitcoin, when the prices go down, that's going to have a big impact. And we've seen that American Bitcoin has underperformed Bitcoin over the past few months, and that's what's really weighing on shares. And they're also a stock that has a large retail investment base as well, which can cause some more of that volatility too.
Dell are donating $6.25 billion to fund the Trump Accounts program for children. The president praised the move, writing on Truth Social, quote, "Two great people. I love Dell." Bloomberg senior editor Mike Shepard joins us now in Washington. Shep, this is just an insane amount of money to be donating.
It is an insane amount of money to donate, and the idea is to give an additional group of children access to this program, known informally as the Trump Accounts, but formally as the Invest America Initiative. And it actually predates Donald Trump's time in office. It's the brainchild of Silicon Valley venture capitalist Brad Gerstner, who really wanted to come up with a way of closing the wealth gap in the country and increasing financial literacy. And basically, the government for children born between 2025 and 2028 will seed $1,000 for investment accounts that parents can open on their children's behalf and then continue making contributions until they reach the age of 18. And this is something naturally that the president embraced, and he even featured it at an event in June that Michael Dell attended together with Brad Gerstner, where they hailed this program.
And I guess that's only for the Trump accounts. The $1,000 is only for kids, as you say, born 25, 26, 27, 28. This donation is going to be to kids under the age of 10 or maybe up to 10, right? So even existing children will get hold of this $250. What do you have to do to get into this program?
I mean, you'll really have to go through the Invest America platform to try to access this. But the idea is really basically the same. And this is what Michael Dell is hoping to do, is to reach beyond the smaller cohort of children born between those years and try to expand possibly the availability of access to these accounts. And it's important to note that the idea is to put this money into low-cost index funds that have some measure of security, and that children would be able to eventually, when they reach adulthood, would be able to use that money for education, to buy their first home, or even cover some startup expenses.
All right, Mike, great having you on the program. What a feel-good story. And also Dell stock, you can see moving up 4% in today's trade. Bloomberg's Mike Shepard there in Washington, D.C.
You're being sold an AI future where you're obsolete or irrelevant. That vision is wrong. At Palantir, they're building AI that helps workers and unlocks their full potential. American workers are our nation's greatest strength. AI shouldn't eliminate them. It should elevate them. Palantir is here to tell their stories. From factories to hospitals, AI is freeing people from drudgery, letting them do what humans do best: create, solve, build. Palantir, making Americans irreplaceable.
Maybe you already know about naked short selling. Maybe you've personally shorted stocks yourself, but do you know about the time short sellers ruined a Super Bowl, basically?
For me, I was a little late, but red flags went up like, what is going on? This is really scary.
At Planet Money, we get the story behind the money to explain how money works. Listen on the NPR app or wherever you get your podcasts.
Bloomberg Audio Studios. Podcasts, radio, news.
Hello and welcome to another episode of the Odd Lots podcast. I'm Joe Weisenthal.
And I'm Tracy Alloway.
Tracy, there are just so many credit-related things to talk about right now. All things credit.
I love it.
I know.
love it. Credit is interesting again.
This might be one of the only credit episodes that we've ever done where, like, I found the guest. Because I feel like when I think about, like, all the credit episodes, it's usually, like, someone you know. And randomly, I found someone who knows a little bit something about credit. So it's like, oh, let me do it.
The stakes are high, Joe.
I know. I was thinking about that because you're like, oh, Joe, you, like, picked someone who, like, doesn't know anything. No, I don't think that. I think we have a very knowledgeable credit guest, but I'm a little stressed about this aspect.
I believe in you, Joe.
You do?
I trust your judgment. But to your point, there's a lot going on. So obviously, there are concerns around private credit. We've had some idiosyncratic defaults and frauds in the market.
Yeah.
And each one is special in their own way.
Right.
But I think the worrying aspect is that they keep coming to light, right? And so you've seen people like Jamie Dimon using the cockroach analogy, which is now famous. And at the same time, you have the connection with AI, right?
Yes.
Which we have spoken about a little bit on the podcast with Paul Kadrowski, all these complex circular financing structures that are driving a lot of the credit boom or have been driving a lot of the credit boom. And then at the same time, you also have the impact of AI on credit itself.
Yeah, that's right. Because in theory, right, like we've talked about this. We did that episode with Joel Wertheimer. That was in a slightly different context. But we've done these episodes about, you know, just the incredible length of deal text, et cetera. And perhaps if there's one area where maybe we could say with some high degree of confidence that large language models could be useful, it is, can we break down the...
Prasad, DGSV 4639, hello जी. कोई क्वेश्चन है तो पूछ लो. सिल्वर का व्यू MCX और फॉरेक्स में दोनों में ही चाहिए. दोनों में देख लेते हैं. पहले फॉरेक्स को देख लेते हैं, फिर MCX को देख लेते हैं. 1 आवर टाइम फ्रेम. ठीक है, 1 आवर टाइम फ्रेम पे देख लेते हैं. वैसे तो अभी काफी बुलिश ही दिख रहा है मार्केट. ठीक है, फॉरेक्स को देखोगे अपने ऑल टाइम हाई को ब्रेक करके ऑलरेडी मार्केट ऊपर ही ट्रेड कर रहा था. लास्ट मंथ ब्रेकआउट ऑलरेडी हो गया था. इस मंथ थोड़ी बहुत प्रॉफिट बुकिंग आ रही है. अभी इंट्राडे में कुछ बना है रेजिस्टेंस तो देख लेते हैं, बिकॉज ओवरऑल तो बुलिश ही है. बुलियन सारे के सारे बुलिश ही बने हुए हैं. गोल्ड उतना नहीं ऊपर नहीं जा रहा है जितना सिल्वर ऊपर निकल जा रहा है. एंड मे बी इन फ्यूचर वी कैन सी सिल्वर एज अ न्यू गोल्ड, बिकॉज गोल्ड लिमिटेड ही है, सिल्वर भी लिमिटेड है, बट कंजम्पशन गोल्ड के कंपैरिजन में सिल्वर का बहुत ज़्यादा होने लग गया है. क्योंकि गोल्ड को नॉर्मली हम ज्वेलरी के लिए यूज़ करते हैं, बट सिल्वर को आप देखोगे तो लोग उसको एसेट के तौर पे रखने के अलावा जितने भी अब कोई भी प्रोडक्ट्स स्पेशली एआई से रिलेटेड बन रहे हैं, वहाँ पर सिल्वर काफ़ी ज़्यादा यूज़ होता है. और सिल्वर का जो डिमांड है दैट इज़ वेरी हाई, जबकि सप्लाई इज़ लिमिटेड. जितना डिमांड है उतनी कंपैरिजन में सप्लाई आ नहीं रही है, तो प्राइस तो ऊपर ही जाने हैं ओवरऑल। प्रॉफिट बुकिंग डेफिनेटली हो सकती है, अदरवाइज वैसे तो बुलिश ही है सिल्वर। 1 आवर टाइम फ्रेम पे अगर देखें तो मैं फॉरेक्स क्या बता रहा हूँ। ऑल टाइम हाई ही रेजिस्टेंस है 1 आवर टाइम फ्रेम पे। वैसे वहां से रेजिस्टेंस ले चुका है दो बार प्राइस। 3 दिसंबर को भी लिया था, 4 दिसंबर को भी आज लिया है फॉरेक्स में 730 के अराउंड। एक बार पहले सपोर्ट भी देख लेते हैं, थोड़ा सा क्लियरिटी और आ जाएगी। को 1 आवर टाइम फ्रेम पे ये कुछ लेवल है फिलहाल के लिए सपोर्ट पर ही है। ये फॉरेक्स का चार्ट है। एमसीएक्स में थोड़ा सा शायद हो सकता है लेवल अलग देखने के लिए मिले। ऊपर ऑल टाइम हाई का ही रेजिस्टेंस है, वहाँ पर और कोई रेजिस्टेंस है नहीं, क्योंकि उसके ऊपर प्राइस कहाँ जा सकता है वो पिवट के थ्रू यूज़ कर सकते हो अदरवाइज। ठीक है, तो ऑल टाइम हाई का 58.9 इस लेवल के आसपास ही 1 आवर टाइम फ्रेम पे रेजिस्टेंस है। जिस लेवल पर भी है सपोर्ट है, ब्रेक डाउन करता है प्रॉपरली और रीटेस्ट करता है तो फिर नेक्स्ट सपोर्ट सीधा 53.77 है। तो अभी तो मुझे रेंज लग रही है ये। बाकी ऐसा नहीं है कि ऊपर का रेजिस्टेंस वीक है या फिर ये वाला सपोर्ट है जो 57 वाला है, 56 57 वो वीक है। ये दोनों ही लेवल मल्टीपल टाइम टेस्ट हो गए हैं, आप देखोगे ध्यान से। 1 2 एक आज ही आया है सेलिंग में। बाइंग भी यहाँ पर ऑलरेडी हो ही चुकी है 1 टाइम, ये सेकेंड टाइम आ रही है। अगर ये हायर हाई बना के ऊपर ब्रेकआउट नहीं कर पाता, यहीं से कहीं नीचे आता है, तो देयर इज अ चांसेस फिर ये ब्रेक डाउन कर जाएगा। अगर ये हायर हाई में चला गया इस लेवल के ऊपर तो यहाँ पर सेलर रिस्क में रहेंगे। तो 1 आवर टाइम फ्रेम इट इज इन सपोर्ट, लेट्स सी कितना और ऊपर निकलता है। बीच में तो और कोई सपोर्ट नहीं है, दैट इज ओनली सपोर्ट। इसको ऊपर जाना है, अगर ऑल टाइम हाई ब्रेक करना है तो यहाँ पर लोअर ये जाना चाहिए कंटिन्यूसली ऊपर $58 के ऊपर क्लोजिंग करते हो। अगर ये आधे रास्ते तक ही गया इन द सेंस ऑफ ये फिबोनाची के अकॉर्डिंग देखोगे तो इसका मोमेंटम अगर ये 50% से गोल्डन रेशो से ऊपर नहीं जाता है, ये यहीं तक अगर ये स्टक कर जाता है और यहाँ से सेलिंग में वापस रिटर्न करना शुरू करता है तो फिर ये ब्रेकडाउन होना शुरू हो जाएगा। फिर नीचे नेक्स्ट सपोर्ट 53 52 के अराउंड है। दैट विल आल्सो स्ट्रॉन्ग टिल नाउ। ठीक है, ये फॉरेक्स का चार्ट है 1 आवर टाइम फ्रेम पे।
benefit of that as a consumer. Well, in 2020, the exact kind of thing happened in the credit markets, but it ended very differently. Citibank sent $900 million to lenders in full prepayment of a loan for Revlon, and they did so accidentally. Now, they were supposed to just send an interest payment. At the time, the terms of the credit agreement were silent. The governing documentation associated with this loan didn't say what happens in that scenario. Long story short, many funds did not give back that hundreds of millions of dollars, and litigation ensued. But a deal term in credit deals called erroneous payment deal terms started popping up in the market. Noetica's data last clocked that deal term as of last quarter at 90% of deals. So if you don't have that term now in your deal, you're way off market in terms of the way the market actually operates. This is why deal terms are important. These are hundreds of millions of dollars at stake in the context of all of these deals.
There's something very lawyerly about, like, I have to say, I've never counted the McNuggets. I just get it. And so just this example would have never occurred to me because I'm not the type of person that opens a box of McNuggets and starts
Clearly,
counting
you
them.
don't value McNuggets enough.
Evidently not. What are some other deal terms? So that's a great example that, okay, now after that incident, which was infamous, language about this started popping up. What are some other sort of classic, and I'm sure they get much, much more esoteric than that, but what are some other like interesting deal terms that trend over time?
Yeah, so it's really interesting. So there's a whole host of what I would call structural protections in a lot of these deals. These come in a lot of different flavors. Many people talk about them as things like anti-PetSmart terms, things like J-Crew blockers, things like SIRTA protections. Let's talk about some of these.
Yeah, right.
Yeah, let's talk about some of these. So anti-PetSmart terms, these are protections that prevent guarantor releases when subsidiaries of the credit group become non-wholly owned. In other words, it prevents value from being transferred away from the loan into some other structure which doesn't provide credit support. Let me put this in a way that most people don't understand. If you were getting a mortgage on your house, pretty simple framework. You take out the debt, you pay your mortgage payments, you pay back the loan. Bank can foreclose on your house if you stop paying the mortgage. But in the mortgage, if it said something like, well, if you sell any part of your home, front door, a window, a shingle, the bank loses the ability to foreclose on the house fully. Well, then what would you do? You would sell a single shingle, you would stop paying your mortgage, and you get to keep your house, and you get the benefit of that. That's what anti-PetSmart terms actually prevent. They prevent the ability for credit groups to actually sell a single equity and actually lose the credit support from that particular equity. So it's kind of interesting what we're seeing in the market right now. We have this really unique vantage point from the point of view of our software where we quantify trends in deal terms over time. And so we can actually very precisely tell you the percentages of deals that are actually getting a lot of these structural protections. And it actually gives us this really unique window into the anxieties and the optimisms that are currently happening in the market. Some people think about this as kind of an early signal of something likely to come. So what are we seeing? Well, we're calling it a flight to fortification. And it's really happening on both issuers and borrowers. And I'll explain what I mean. We're seeing massive increases in lenders getting structural protections in these deals. Basically, these are protections that help make sure their collateral is locked. Things like the anti-PetSmart terms. In return, borrowers are getting the same fortification. In fact, they're getting more economic flexibility. And you could think about it as a way for them to weather the storm, is how we're seeing it. So things like add backs to EBITDA, more ability to send money to shareholders, more ability to make long-term investments. Let's talk about the actual specifics of what we're seeing. Anti-PetSmart terms, the one I just talked about, we clocked that at 28% of deals in Q3. That was at 4% in 2023. And Q2 is at 25%. This is the highest we've ever recorded that term. J-Crew blockers, which prevent issuers from moving material IP outside the credit group, that's at 45% of deals now. The baseline from 2023, 15%, and last quarter it was 38%. Anti-SIRTA protections, which are lien subordination protections, they actually help secure your place in line if and when some sort of distress activity happens. That's at 84% of deals. That's the highest jump we've ever seen quarter over quarter. It went up from 61%. It's a 23-point jump. And the baseline was 39% in 2023. That's pretty significant for a quarterly jump. And it really signals something about the market. On the quantitative side, we track a lot of stuff too, including the ratios under which borrowers need to maintain specific types of leverage. We saw that at 3.9 times EBITDA in Q2, and it went down to 3.5 times EBITDA. Again, that's signaling some sort of anxiety among the lender group that we wouldn't normally see. Now, you may ask, what are borrowers getting for this? Again, they're getting more fortification. One of the ways this is coming up is in EBITDA add-backs. So EBITDA add-backs, basically there's a very long and complicated calculation of cash flow in a lot of these deals. And the add-backs to EBITDA basically allow borrowers and issuers to add back certain things to count them as cash flow today.
To flatter their balance sheet, basically.
Correct. Correct. One of the more interesting add backs that we track is what's called a cost savings add back. So imagine a borrower knows it's going to optimize some cost in the future. If it can reasonably predict that cost, it can add that back to today's cash flow. That cost savings add back, whether it materializes or not, is added back to today's cash flow. 64% of deals now have cost savings add backs in them. That's the highest we've ever recorded. For deals with those add backs being above 20% of EBITDA, that came in at 51%, which is also the highest we've ever tracked on the platform. They're also getting things like excluding lenders that are short in their debt. So for instance, folks may be familiar with what happened with the Windstream case a few years ago. What happened in that case is certain hedge funds were actually short the debt, the loan that was in default. And that makes them not exactly aligned with the company that has the debt outstanding. Terms started popping up in the market, which we've tracked, which are called net short lender terms, which allow borrowers to exclude those lenders from voting. That is now in 13% of deals, which is the highest we've ever tracked. So you could see the fortification actually on both sides of the market. And
Telling you a future where you're obsolete, or worse, identical. At Palantir, they're witnessing something different and revolutionary. From reindustrializing the nation's defense base to shipyard workers building faster and frontline workers boosting productivity, AI is transforming work across the nation. AI is not replacing American workers or flattening them into conformity. It's unleashing what makes each one irreplaceable: their judgment, their craft, their creativity. When American workers become more powerfully themselves, they own the future. Palantir, making Americans irreplaceable.
You can get the news whenever you want it with Bloomberg News Now. I'm Amy Morris.
And I'm Karen Moscow, here to tell you about our new on-demand news report delivered right to your podcast feed. Bloomberg News Now is a short 5-minute audio report on the day's top stories. Episodes are published throughout the day with the latest information and data to keep you informed.
Yes, there are other products like this from a variety
that folks have been talking about. And I'm sure we'll get into some of what's going on in the private credit market today. So people flooding into more structural protections because they're worried about their place in line if there is distress. I think number two is just macro-wise, if you think about it in the credit markets, there was a ton of debt taken out in 2020, 2021, 2020, early part of 2022. This leads to a lot of maturity walls upcoming, especially in 2027, 2028.
We don't say upcoming on the show. We say looming.
Yeah. Looming. Yeah, exactly. There are a lot of looming maturity walls in 2028, 2029 vintage. And you could think about it as, well, that's a macro factor that people are thinking about when they underwrite a loan, because many of these deals actually have 5-year tenor, 7-year tenor, 8-year tenor, in some cases 30-year tenor. And so they're thinking about all these protections in the context of that market. I also think it's really interesting, aside from the credit context right now, we're seeing a lot of structuring in terms happening in M&A markets. So things like regulatory uncertainty, things like tariffs, things like liability management, as we talked about, things like tax uncertainty. I'm happy to go into these, but we're seeing a lot of things in this area. One kind of small example of this, in situations where a buyer and a seller have regulatory uncertainty, which, a lot of folks think about the administration and they're not sure exactly how things are going to play out. You actually see regulatory review in deals get hyper-focused on. And it actually precipitated a new deal term this year, which we tracked in the market. We had an anomalous term detection on the platform. We sent out a note to all of our clients, and it's called a new outside date structure term. Basically what it does is it allows buyers of acquirees, it allows them to lock in their financing for longer and actually extend their financing in the case scenario where regulatory review lags. And that's just an example of the kind of innovation that's happening in the merger markets. In terms of tariffs, we picked up the first tariff event of default in a credit deal ever. It happened in a Superior Industries deal over the summer, which probably is unsurprising to you as an auto manufacturer deal that made a lot of parts in Mexico. That's now in 5% of M&A deals for tariff-based M&A carve-outs and material adverse effect clauses.
Can we talk a little bit about, you're scanning these documents. Google's Ngram has existed for a long time. Tracking the prevalence of a term is not novel technology.
Yeah, Control F exists.
Right, Control F. Yeah, I do. This is sort of like it barely even counts as technology at that point. What is it that when you're talking about the changing prevalence of these terms, what is the actual novelty here that isn't just sort of, document search over time?
Yeah. So Tracy, your husband's a former corporate lawyer.
Mm-hmm.
He would tell you.
Recovering corporate lawyer.
Recovering corporate lawyer, exactly. I am myself as well. One of the things he would tell you is that there's constant innovation in these markets. These agreements are highly complicated. They're very long. They have a lot of what's called long-range dependencies, which is that you may be used to seeing something in a particular area of the document said one way, but in reality, it turns out it's punted to 3 different clauses deep down, and you actually have to go find that information. This is why.
It's also jujitsu between the borrowers and the lenders, right? Because the borrowers are often trying to hide something that's favorable to them, or the lenders are trying to hide something favorable to them. So the structure and the way it's worded changes a lot, to your point.
Exactly. And these are sophisticated parties paying millions, sometimes hundreds of millions of dollars in advisory fees to make sure that these terms look the way they do. Now, that leads to kind of the technological innovation that I think has enabled a lot of this. AI, for the first time, can attribute, in particular, new language models, can attribute more semantic meaning to phrases and language that was impossible with things like engrams. And so what Noetica does is it uses a series of language models, including a multi-layered information extraction system, to make sure that it's encoding all the semantic meaning inside all these terms, so that when you look at a J.Crew blocker in the first way, it may be phrased 1,000 different ways, but we can track that term over time. That has enabled the ability to actually quantify for the first time what a market agreement term looks like in these markets. And I think that's why it's so interesting to folks on the platform.
So I know you're not doing litigation, but I guess I'm curious how you deal with, or if AI is helpful with, in litigation, what would be called precedent. But I'm assuming you're building up a big database of all these different deal documents. Is it useful? Is AI useful to go back and look at previous documents in order to shape new ones?
Yeah, exactly. So at Noetica, we are ultimately an AI-powered software company, but we actually have the largest knowledge graph of deal terms in existence. So Tracy, exactly what you said. It's a database, ultimately, of precedent comparable deal terms. And that database, this is going to be mind-blowing, has over 1 billion terms in it. So it's actually the largest in existence. We map that back to deal characteristics. It's the same in litigation, right? So in transactional markets, folks are innovative, but they also want to rely on something that has happened before, or at least in part, they want to rely on something that has happened before. And so folks are constantly looking for ways to tie things back to comparable deal terms. It's the same in litigation. So obviously not my expertise, but the same concept, which is, when you write a brief, you are constantly citing cases that the judge has, relied on in the past. And for lawyers and, outside of lawyers, even just deal professionals generally, bankers, credit managers, people are highly reliant on precedent.
What is your tech stack? What do you build, and how much is it like, you're using ChatGPT's API, et cetera? Like, okay, yes, large language models are good at identifying deal terms or novelty, et cetera. There's semantic meaning of these terms. But what did you actually build, and what do you actually employ in your technology?
Yeah, so we're started in 2022. So we're what you would call AI native. And we were started in a system that already language models existed in. However, because of the nature of the sensitive documents and terms that we deal with, especially for, major law firms, financial institutions.
Yeah, this is like a big issue with them, right? That they don't want to just be uploading their stuff to ChatGPT, right?
Exactly. And so we actually utilize adopted language models, open source language models that we adapt on our own proprietary data sets and then deploy in secure environments and single tenant architectures, for individual instances of institutions that deploy our product. And so you could think about it as based on the language models that are ultimately underpinning a lot of the GPTs and the Claudes. However, it's fine-tuned to this particular data set, which makes it obviously much better at handling this exact problem, which is a big problem in the market. Now, we also layer on top of that information extraction models. So for instance, you may know that a term exists in one deal, but you may want to know what terms should exist for a JP Morgan deal or for a B of A deal or for, a particular type of counterparty. And so in those contexts, we actually want to map those deal terms back to deal characteristics. And we actually utilize a lot of models to extract information and marry that with third-party data sets. So that's a little bit about how the technology works. I always think about it from the user standpoint. What does the user really want? The user really wants to know how they're going to advise their client on a particular merger, on a particular credit deal. How often does this come up? You always call your attorney and you're trying to figure out, is this market? Is it off market? And that's what our data provides.
Okay, so structural fortifications in deal terms. What are you seeing right now? Because as we started this conversation, we were talking a lot about the recent blow-ups in the private credit market. And if you look at some spreads on certain firms, certain bonds, it does seem like nervousness is creeping back into the market. I see spreads on, it's not private credit, but spreads on CCC rated debt have been creeping up recently. How scared or concerned are people right now?
Well, I recently wrote about this in the Wall Street Journal a little bit, and then folks contacted me and they kind of said, you're causing a stir. And then I saw Howard Marks came out with his letter, which I think was called Cockroaches in the Coal Mine. And it had a lot of the same themes. I think folks who have been around credit markets for a very long time can kind of see a little bit of what's going on. To us, let me just talk about what the data supports. To us, what we see is creditors may be preparing their system for distress.
Okay.
And I'll talk about what we're seeing in the data that kind of supports that. But you could think about it like the evolution of your house security, right? So, first you lock the doors, then, you get a bolt lock, which gives you better protection. Then you add a security system on top of that, an alarm system. And at the end, what do? You kind of count up all your valuables and you insure them if people are going to get into the house. And, for the past few years, we've seen lenders really focus on keeping people out. This is the locks and the deadbolt. And this is what we were talking about with J-Crew blockers. This is making sure you can't structure around me from a liability management perspective. But over the last quarter, something kind of changed, which is we started seeing people and lenders obsessed with lien subordination terms, which is the term that governs who gets paid first when everything falls apart. So this isn't really about preventing liability management exercises that much. It's actually about controlling the recovery when a bankruptcy does happen. And so we clocked that term at 84% of deals in Q3. Biggest quarterly jump we've ever seen from the prior quarter. It's also the highest we've ever clocked that term. So this begs the question of why. Why are creditors so focused on making sure their place in line is
in recovery
is the same? Perhaps it's a reaction to the liability management transactions we talked about. So perhaps folks are thinking that will precipitate. Perhaps it's a reaction to some of the maturity walls that folks understand. Or perhaps it's some of what I was saying in the op-ed, which is folks are seeing that there may be distress events on the horizon, and they want to make sure that if there is, they have the most negotiating leverage as possible. Actively, rapidly expanded through debt-fueled acquisitions, and it dramatically increased its scale. But I think what First Brands illustrates is something that we might get into with the private credit markets, which is that they primarily funded these acquisitions with large debt facilities. Then tariffs hit in April of 2025, which obviously changed their business because they actually do a lot of manufacturing. And that kind of magnified problems. So you could think about one of the main problems with First Brands, which is also kind of some of what folks are worried about in the private credit markets today, is what's called off-balance sheet financing. What First Brands used is a lot of receivables financing facilities that weren't properly disclosed to a lot of folks that were lending to the company. In fact, I think in that sense, just to give you a sense of quantum, this is over $11 billion of total obligations that they had when they actually started disclosing it in terms of off-balance sheet financing. And, they were disclosing things like $5 to $6 billion of actual debt obligations. And so this led one of the creditors' lawyers to say that $2.3 billion just disappeared. And so that structure, the ability for First Prince to get that debt, was made possible by the private credit markets and how deep the private credit markets have become. Because if you're a big credit manager in private credit markets, you could fund, that type of receivables facility to a First Brands. And First Brands could use that facility to then, make sure they are constantly continuing to acquire new businesses and keep rolling over the cash.
I have a theory that receivables financing and factoring is to the private credit market what French quants who went to that one really elite school
I like this theory.
are to trading blowups.
I like that theory.
Yeah, thanks. So the other thing we wanted to ask you about, and again, we referenced this in the intro, is we are seeing these really complicated deals that I admittedly cannot keep track of in the AI market where, one company is going to buy chips from this other company, and then that company is going to borrow from whoever and use the chips funding to pay them back. And then that money somehow goes into the company that is buying the stuff in the first place. It is all very circular, all very incestuous in many ways, in my mind. Are you examining those types of deals or just putting on your credit expertise hat? If you see something like that, what are you thinking?
Yeah, well, it's probably helpful to kind of talk about some of the structure of these deals, which I think, again, is made possible by how deep the private credit markets have become. And usually when I do that, I try to think about, let's try to make this a little bit more fun. So imagine for a minute, Joe, you just love pizza.
Yeah.
He does love pizza.
I do. I had it yesterday twice.
There you go. You're a pizza fanatic. You love it so much that you decide to eat pizza every single meal of every single day for the rest of your life. Like you are committed to subsisting on pizza.
Much,
committed to the carbs.
Exactly. So, Joe, you made that decision. You come to me and you say, hey, Dan, I'm going to eat pizza for every meal of my entire life. How about you open a pizza restaurant for me to eat it? It'll be really lucrative.
Yeah.
You have a
I see. I was wondering where you were going with this, but this is actually a very good analogy, right? Like you'd have to have a lot of confidence in me to commit to my word if you're going to open a restaurant. All right, keep going.
Yeah. Now you come to me and you say this is going to be super lucrative.
Yeah.
Here's how we're going to fund it: 10% equity. The bank is going to give you 90% of the funding in leverage, and it's Dan's restaurant. Joe, you don't own the restaurant, but you're going to eat at it.
I'm the full beneficiary of it.
Full beneficiary of the restaurant, but it's 90% levered. Okay, so I open the restaurant, you eat there every single day. Now, Tracy, Joe comes to you for a personal loan to fund his lifestyle.
His pizza eating lifestyle.
Tracy trusts me. She would lend it to me. Yeah.
Well, here's the question, right? Should you, Tracy, consider the 90% levered pizza restaurant that Joe is eating at for all his meals? Now, on the one hand, it's not Joe's loan, right? So he's not on the hook if the pizza restaurant goes under. On the other hand, it's Joe's only source of food, which
Joe will die without the restaurant.
Which is he's committed to the restaurant. And it kind of makes the restaurant intertwined with Joe's ability to pay your personal loan back. So I guess that's the question.
No, that's great. So now let's take it out of pizza. Who is...
So that's
whatever, now who is the chips buyer or whatever?
This is essentially what's happening with off-balance sheet financing and data center deals. So, and it includes Meta's, I'm sure you saw the Hyperion deal, which is Meta's AI infrastructure deal with Blue Owl, except I think it's even more intriguing than some of the pizza stuff. So Meta and Blue Owl basically created a joint venture in a special purpose vehicle, not that different than the restaurant. And the deal is the joint venture would be owned 20% by Meta, 80% by Blue Owl. So Blue Owl controls it. And it would effectively be funded with 90% leverage. So call it $30 billion of total enterprise value, $3 billion of equity, $27 billion, give or take, of debt. In other words, Blue Owl is effectively owning the restaurant. Meta is effectively eating at the restaurant. And the bank's funded with 90% leverage. So what this does is it keeps the debt off of Meta's books, right? While also giving investors, credit managers, the ability to put money against a data center asset. So Meta in this deal will make rent payments associated with the data center based on its cost of power. That's the cash flow that's going to the SPV. And that effectively funds the interest expense. Let's just talk about the debt for a second.
Yeah.
In a normal LBO context, 90% leverage is pretty exceptionally high. Most people would consider 50 to 80% leverage to be relatively normal for a stable cash flow business. So the debt itself is actually quite high on some of these structures. The only reason it was possible was because it was given an investment-grade credit rating, and in part because Meta agreed to a 4-year operating lease with what's called a residual value guarantee, which means that Meta is guaranteeing a capped amount of some of that cash flow. However, that guarantee is capped and is only partial, which is why they don't have to take it onto their books and why it would be a footnote as a contingent debt obligation in their balance sheet. Now let's talk about the asset that's being underwritten. This isn't pizza. Pizza actually has a stable price, right? We have thousands of years of history on pizza, right? And you can track that price over time. Data centers optimized for GPU performance on training fundamental AI models, not so much of a mature asset. Actually, I think most folks would think about it as a burgeoning asset. Now, I'm in this world. I mean, folks, there's a high amount of demand for a lot of this compute, and I definitely think the demand is there. But at the end of the day, it's an immature asset with a price that isn't so well defined. So just to recap, you've got off-balance sheet financing, which isn't reflected with whoever is lending money to Meta or even buying its equity, with 90% leverage on an immature asset. And I think that's why these deals are so interesting. So from our point of view, I mean, to make sure you get the terms right, and we will look at these data center, a lot of these types of financings run through our platform all the time. To make sure you get the terms right on what this structural protections look like in these deals is critical for the fortification of something that is in the structure.
So I know we've seen these idiosyncratic blowups in the private credit market so far, but just looking at the AI market in particular and the financing there, it feels like right now people are still willing to lend money. And we've talked about this on the show before, but a lot of the AI competition is couched in this existential language of you either win at AI or die, basically. And so the spending keeps going. What is your guess on like the thing that kind of knocks that cycle or that flywheel and tears it apart?
So I'm obviously in the AI industry. We're in the credit industry. So we see both sides of this phenomenon. I fundamentally believe AI is a paradigm shift. I would not have left, the deal markets if I didn't think that. And I think what we're witnessing is very similar to the internet in the 1990s or the iPhone in the 2000s or social media in the 2010s. And I think this paradigm shift is going to ultimately change a ton of industries, including capital markets and finance and law and all of these amazing industries. And so that, I think, is very true. But I also think two things can be true. I think AI can be a generation-defining category and a technology that's upending a lot of industries. But I also think that categories will have winners and losers. Mm-hmm. And when folks are racing to define a category, as you often see with a lot of these transformational types of technology, there may be more losers in the headlines than you're used to seeing in a lot of these markets. But the winners will be bigger than anyone's ever imagined.
All right, so if I don't eat the pizza, someone else is going to pick up the pizza and they're gonna eat it.
Look, what we focus on in Noetica is in a market moving this fast, we all need to pay attention to the terms that are actually underpinning a lot of these markets to make sure if there is any bleeding, that bleeding gets stopped as quickly as possible. Just to give you one last example from a recent market deal, you can look at the Frank JPM deal as like a really interesting one. This is, this was a deal where JP Morgan paid $175 million to acquire a company. It's a very small deal, but to acquire a company called Frank, which is a streamlined FAFSA kind of support service.
I remember this one.
It turned out there was a lot of synthetically made up types of data in that business.
I mean, the founder is going to prison, right?
Allegedly, there's a lot of made up stuff in the business, and I think
there's 7 days executive who worked at Frank sentenced to 68 months in prison.
And so, but I think the most interesting part about this particular transaction to me is JPM ended up signing a merger agreement that said that the indemnification for the founder's litigation, for any founder's litigation, would be paid for by JPM.
Right. They paid her lawyer.
They paid $115 million in legal expenses for her lawyer on her fraud. And so when you're moving really fast, right, you can kind of ignore some of the nuts and bolts. But I think it's actually even more critical in fast-moving markets.
Dan Wertman, co-founder of Noetica. Thank you so much for coming on Outlook.
Thank you. Thanks for having me.
Another big call against the market. The big short investor calling Tesla shares ridiculously overvalued. Tom Narayan covers Tesla and other automakers for RBC and joins us now. Tom, great to see you. Thank you for being with us. We can start with Tesla, but I would love to talk about how representative it is of the larger auto space and how difficult it is to get a handle on exactly the supply-demand dynamics at a time of post-pandemic transition and post-tariff realization.
Yeah, and I think what you're noticing more and more is the strength underlying the U.S. economy, especially at the top end and maybe at the middle, is manifesting itself with auto sales, which have actually been stronger than what a lot of people expected. We did our own work to actually show that there's about a 6 to 7 million vehicle deficit of cars that were never purchased because of the pandemic. And, you know, in the U.S., in a lot of states, you have to have a car. It's as simple as that. How do you get to work? And if you can afford the car, you will buy it. And so, you know, at the beginning of the year, I think folks were looking at something like a 15 million vehicle SAAR for 2025. It's looking like it's probably going to be a 16.2, 16.3 million number. So, yes, sure, things are slowing down a little bit. There's been some pricing to offset some tariffs lately with some OEMs. But if you take a step back, there is some real strength of the economy. Unemployment is very low. We'll probably have another rate cut, right, later this year, probably more next year. And then tariff resolution in 2026, especially with the USMCA. So given that backdrop, we're actually pretty constructive on U.S. autos.
So this goes to who's going to win, right? Is it the U.S. auto manufacturers? Is it the electric vehicle manufacturers? Or is it, as we have seen of late, a real shift back to hybrid and, frankly, trucks and away from the Elon Musk's Teslas of the world?
Yeah, I mean, let's just look at cars specifically or autos specifically. I would agree with that. It's ICE cars in the U.S., definitely. Perhaps there's some room for EREV or hybrid. Certainly EVs is not the place to be right now in the U.S. I do think there's room for that maybe later in the decade. But right now, the strength is at the heart of the U.S. auto industry, pickups, large SUVs, ICEs. Think GM, most notably, maybe Ford as well, some Stellantis. So we think that's really where you'll see most of the benefit near term, not as much with the EV space in the U.S.
EV space has certainly been under pressure. At the same time, though, Tom, you haven't outperformed on Tesla. Why do you continue to like this company?
Yeah, it's certainly not really because of autos. It has more to do with the AI features, right? So robotaxi, you guys well know my thoughts on robotaxi, and then now the humanoid market. And yes, look, it's very early to tell where Tesla's going to be in that. So I look at Tesla the same way on humanoids as I do on robotaxi, which is I look at the top down. I think it's a huge market opportunity, both humanoids and robotaxi. And I'm assuming actually very small penetration levels for Tesla on humanoids, only 5% of that market. It's a big opportunity, this humanoid market. I don't think the investor base has caught up with reality. Certainly folks like me are new to the game. When you talk to the experts in robotics, as we have recently, you realize why there's such a big market opportunity. And, you know, that tends to move this stock, right? It's a narrative stock. As long as we don't have negative data points, and this is like a 10, 15-year horizon, what is the negative catalyst here to kind of put some shade on the stock? So right now we're looking at that perspective, and we like the stock.
So what do you make of Michael Burry's call then, when he says Tesla is ridiculously overvalued? Would you just tell him that you're looking at the future and what's going on with not just robotaxi, but potentially what happens with humanoids?
Yeah, I mean, like, we don't know is the answer, right? I mean, we don't know who's going to win. What do we know about humanoids? We know there's going to be a lot of them. We know that's probably going to be decades from now. We know the form factor will probably be humanoid, and we know Tesla is one of the leaders. So, from that basis, I do think there's enough inertia that should support the stock. Maybe in 10 years or 5 years, we look back and maybe I was wrong, But I just think it's too early to tell, right? I mean, I think the data that Michael Burry had during the housing crisis was real data, right? I don't think we have actual real life data to show that humanoids won't happen or Tesla won't be a big piece of that, or in the robotaxi side either, right? So I'm following what the data that we have presenting before us today is, and I like the odds that Tesla has to capture it, but ultimately, none of us really know the answer.
Yeah. So our story for next year is a continuation of what this year has been, essentially, which is that we essentially got a kitchen sink in the first quarter. We made a significant, bear market low in April. That was the end of an economic cycle. I believe that there's now a rolling recovery. Okay, all the policy changes that we've seen really affect a much stronger 2026 from an economic standpoint. And a lot of that has to do around this investment cycle. So our target's 7,800. That's the base case for 2026. We've written about this as well. I think the very near term, we still have to get over this big hurdle, how the Fed is going to transition to being more dovish. Does that require weaker labor data, or does that require maybe more financial kind of stress in the funding markets? We'll see, what the catalyst is there. That could create some near-term opportunities, but we're a buyer of that dip if we get it.
Go back to the inflection point. What changed your view? Because now you're one of the biggest bulls on Wall Street.
Well, it's just flexibility. I mean, it's funny how you get a reputation. You go from biggest bull to biggest bear, and we've had that over the last 10 years, quite frankly. So it's not new for us. I mean, we're happy to go either way depending on what our work shows. Most recently, in the last year, what's really changed for us is the earnings revisions, okay? So like this year, it looks much different. The earnings revision breadth is tremendous. I mean, that's the story, and I think that's the story that most people are still missing. And everybody's focused on valuation. It's like, look, valuations are okay if earnings are going to beat on the upside. And that's our call for 2026, is that we're seeing a broadening out in the earnings story. And we should see a broadening out in the equity story as a result of that. So we're very disciplined around our work. I mean, whether it's sentiment or positioning or, valuation or earnings revisions. I mean, we look at everything, Matt. And I think it's just, at this point in time, it looks pretty supportive from a policy standpoint, from an earnings revision standpoint, and in valuation, you grow into it.
Ahead for next year, which is everything is awesome. And what we're hearing from every single person who comes on the show is that next year is going to be double-digit gains in the S&P 500 at the same time that you continue to grind out better returns from the debt space. Is there a contradiction here?
Well, I would just say that the confidence sitting here in December about next year that anybody puts forth has to be taken with a little bit of skepticism because of the year we've just had. If you were here on this journey this year, obviously it's been a tremendous amount of volatility, and we've ended up in a place that many probably wouldn't have predicted. But as we sit here right now thinking about the year ahead, you're going to end this year with an extremely strong M&A calendar and M&A backlog in terms of what's actually been executed this year, but also in the pipeline of new deals. The expectations on the Bloomberg economics page is a 30% chance of a recession next year, a little bit higher inflation, a little bit lower growth. And as we talked about a moment ago, one of the markets has to be wrong. In this intersection right now where many are saying we need to lower rates because of an economic slowdown, and the other side saying earnings upside because of accelerating earnings from the Mag 7 and the 493, those both can't be correct, or it's very, very unlikely that they'll both be correct. We're in the camp at Apollo, as Torsten's been up here and many others, that between the K-shaped economy and other demographic issues, we're going to probably see a deceleration of lower rates and a stronger economy in terms of M&A, CapEx cycle, positive regulatory backdrop, and things of that nature.
So if bonds and stocks can't both be right, and they seem to be in conflict right now, are you saying that stocks have it right and bonds have it wrong?
I'm saying what's been surprising to all of it, if we take a big step back the last 4 or 5 years, the idea that the Fed would raise rates so much that they did, starting in 22, we all predicted massive slowdown in the U.S. economy, tightening financial conditions, and we were all wrong. This U.S. economy has been amazingly resilient. Now, it's been resilient for organic reasons as well as a lot of fiscal spending, obviously now the CapEx cycle, but the U.S. economy has been the most resilient for a variety of reasons, and our suspicion is that that will tend to continue in the year ahead. So I think if you look at the gap in the last month or so of the Mag 7 earnings growth and the 493, a year ago it was like 30-35%. The growth rates of the Mag 7 and the 493 in the last quarter was 11%, 22 versus 11, I believe. So the rest of the U.S. economy is doing somewhat better in light of the breadth of the AI cycle.
Venezuela to be not a very friendly country. They sent millions of people, really, and probably a number in excess of that. And a lot of those people shouldn't be in our country, from jails, from gangs, from drug dealers, from all of the people that came into our country shouldn't have been in our country, causing a lot of problem.
Does your warning
and drugs.
Does your warning mean that an airstrike is imminent, or should we not read it that way?
Don't read anything into it.
The New York Times reported that you had a phone call with Maduro. Did you?
I don't want to comment on it. The answer is yes.
And can you tell us a little bit
No,
about
I can't
it?
do that.
Mr. President,
Would you say it went well?
I wouldn't say it went well or badly. It was a phone call. Yeah. I don't know anything about it. He said he did not say that, and I believe him 100%.
You don't know if there was
You're talking about the two men?
The second strike to kill the two men.
No, he said he didn't do it. He said he never said
Would
it.
you be okay with that if he did?
He said he didn't do it, so I don't have to make that decision. Number one, I don't know that happened. And Pete said he did not want them. He didn't even know what people were talking about. So we'll look into it, but no.
Cash offer, a sweetened bid here to buy that company. Netflix apparently submitting a mostly cash offer, a sweetened bid here to buy that company. Chris Palmieri, our man in Los Angeles, joins us right now. And Chris, I mean, what do we know? I mean, do we have any sense of what they actually bid? I know the last couple of weeks, the reporting was that most of the bids were around that $23.50 mark, and apparently Zaslav and Warner Brothers wanted to see something a little bit more. What do we know?
Yeah, we definitely are hearing that they're edging a little bit closer to that $30 number, depending on how you value things. Big surprise here that we reported was that the Netflix offer is mostly cash, because Netflix's stock has been doing terrific in recent years. A lot of people expected them to use that as the currency, and apparently they feel more confident paying cash, and in fact are in talks to raise tens of billions of dollars as a bridge loan to help pay for this.
And it's interesting, when it comes to Netflix, the understanding is that they're only interested in part of the company here, specifically the studios and HBO Max, the streaming service there. What would that mean for the cable channels?
Well, then, in the case of Comcast and Netflix, which both of them are only interested in the streaming and the studios, Warner Brothers would continue with plans to spin off its cable channels, so that CNN, TNT, and all of those businesses would still go off to current shareholders.
So, and just real quickly, Chris, when we talk about this idea, are we anticipating that we'll also see something, a sweetened bid from the other players in this, Comcast, Paramount, et cetera?
Yes, we know that Netflix submitted one today, the second round, but we are expecting the others. And we're also hearing that a deal could come in just days, really, if Warner Brothers board signs off.
Certain of them already have you at the #1 spot, CrudeOil. What is it that yours offers versus Sora 2 versus the latest Google offering?
Yeah, that's true. So we just released Runway Gen 4.5, our latest video model, and it tops the charts in terms of performance and benchmarks across all other models, which is kind of like a big deal within research. It's the first time a company has led the leaderboards, and this company not being basically a large research lab. It's a model that surpasses pretty much all other models with incredible consistency, really good realistic results, and just like across the board, amazing creative results. So really, really excited to get this model out and have people use it.
Now, you had it out there on the leaderboards with a pseudonym before it was launched in public, CrudeOil, and you had it called David. Is that a Goliath-David construct? How are you competing against these vast generative AI companies?
Yeah, it was a little bit of a play with David and Goliath. I think we've managed to outcompete the largest research labs by being very focused. I think it's the era of both research and efficiency. And if you're able to maintain the focus as a team, you're able to deliver kind of groundbreaking results. And we're proving this. It's the first time I think anyone has kind of topped the leaderboards, not being a large, well-funded research lab. And I think part of it is really like the team, and it's really also the vision. We've been working on this for almost 7 years. We started working on video models when there weren't even like leaderboards to start with. And I think eventually you build some sort of intuition and really good like momentum as to how to improve these models over time. And look, this is still like the worst the models will ever be. And so we have a bunch of more releases coming up that I think will further improve both pre-training and post-training. And so we're very excited for that.
CrudeOil, you're not that small. You raised $300 million in April at almost $4 billion or $3.3 billion valuation. I do think there's some value in you explaining what was different this time around in the training of Gen 4.5 and the data set. What is it that you did differently and that has allowed you to release such a competitive model?
I think there's a lot of different things. On the one end, pre-training has been one of our focus for a long time, making sure that both the algorithmic improvements are there, but also the way we caption, we structure data, we build the models themselves and test them. The best way really to think about a lot of the research is you need to conduct multiple experiments through multiple months. And there's a lot of learnings within how you run those experiments. And I think what we're kind of proving is that infinite resources, you're right, we're definitely not in the smallest side of a company, but we're not $1 trillion or $4 trillion company, yet still managing to outcompete the resources of those companies is kind of insane, to be honest. And I think a lot of it has to do with the experiments and the research taste, which is if you're running all these experiments, how do you make sure they're effective and efficient? And I think that's something we've done really, really well, which is focusing a lot on pre-training.
Gen 4.5, apologies, has been released to your enterprise customers straight away. What's the business model for it? How do you guys monetize on top of that? You've just talked a lot about research.
It's pretty straightforward. We have subscriptions and we have credits that people can buy to use the model. We're releasing this model to gaming companies, to studios, to brands, to production companies, to creatives around the world. We have tens of millions of users actively using Runway. And again, the efficiency side is not only coming from the pre-training or the training side of things. We've also been incredibly efficient at deploying the models. We partner with NVIDIA for a lot of this work, and we managed to get really good performance of inference. And so we actually make money every time you use the model. And that's, I think, a remarkable feat, not only on how we think about the research that needs to be done, but also the market and deploying this so the unit economics make sense.
Because CrudeOil, sorry, just real quick. So you're saying you're profitable running Gen 4.5?
No, we're making. I'm saying we're making money by every time you use the model. We have a good margin on the model itself on how you use it. We managed to deliver really good performance on inference, so the model is still cheap to use compared to other models, while still being the best model in the category. And that's incredibly hard to do. Again, it just goes back to the focus the team has had for quite some time.
Innovator Capital. It's $28 billion worth of buffer ETFs versus try to build this out at Goldman Sachs in-house.
I mean, so much credit goes to the team at Innovator. They invented this space back in 2018. They invented defined outcome ETFs. I mean, they have a history of innovating in this space. So they build out this business, they invent the space. Over the last 7 years, they've been able to scale the business to be $29 billion. But in addition to that, they have a full suite of products that cover all the different horizons that we see across the defined outcome space. Plus, they have an incredible team, 70 individuals that are extremely talented at talking about these sophisticated strategies, working with clients and articulating these to investors and showing them how they can use them within their portfolio. So when you bring all of that together, it just makes so much sense to add it onto the platform that we have.
And let's talk about the price tag a little bit. So $2 billion, for that you get $28 billion of existing AUM. I was taking a look at the reaction piece from Bloomberg Intelligence. That's about 7% of assets. That's probably closer to private market deals than traditional products. So show us the napkin math of how you justify a $2 billion valuation.
So over the last kind of handful of years, I've been traveling around this country working with clients. And in more conversations than not, defined outcome ETFs were coming up. How do I get more income in my portfolio? How can I get targeted downside protection? What about different growth areas that I can get within my portfolios? And over time, you start to notice this pattern. There's more and more investors that are looking for better ways to build portfolios on behalf of their clients. And so when you take that, you start to see, like, wait a second, there's a massive trend here. Now, Cerulli put out research last week. They suggested the space could grow 4 to 5x over the next 5 years. And so I don't think I'll get into the napkin math, but what I will tell you is that I know investors are really excited about the strategies. You've seen it grow massively over the last 5 years, and groups like Cerulli projecting 4 to 5x growth over the next 5 years. You start to see why we're so excited about this space.
Who specifically, in terms of the end users of these funds, who specifically are those types of people? I mean, that we're talking about. Are they using this primarily as a hedge, or is this actual real sort of growth and or income opportunities, I should say?
It's a great question.
Yeah.
So step back for a second. We called it defined outcomes, which is a pretty wide space. We see income in this category, we see targeted buffer in this category, and we see growth in this category. There's a lot that's going on there. So we've seen everything from core replacement. You know, I was using the S&P 500. I want to swap that out with something that could provide a little bit more protection. We see it as an income play. I want to put this into my portfolio and it can enhance the income that I have. We see it as a bond replacement in some areas where maybe I can use this instead of bonds and it gives me a little bit more equity upside. There's also some differentiated ways where, you know, investors are starting to use this to put cash to work. Markets are still at kind of close to all-time highs. And so, you know, if an investor's starting to put money to work, do you do that right now? Or maybe this is a great way to start to leg your way into an equity position without taking on some of the downside risk. And so I think that this is going to absolutely change the way that we think about portfolio construction over the next 5 years. We're seeing this both on the retail side and on the institutional side. Institutions have been using strategies like these for a long time. Now that we can deliver them through the ETF wrapper that is intraday liquid, that is transparent, that is tax efficient, that comes at an attractive price point, that starts to be a real game changer for us.
For the individual investors, is there sort of an education arc that's needed, at least if not for them, certainly with the advisors that are selling it?
Yeah, absolutely.
Yeah.
And you know, that's another big part of the Innovator team. I mean, they're experts at having those conversations, and we really want to embrace that. I mean, we want to lead with solutions. We want to lead with this is how these are going to work within your portfolios. It's important that you own it point to point. There's different ways that these are going to move out there, but once you understand how those work, then you can really enhance what you're doing within your portfolios.
So this news in and of itself is exciting, but the natural next question, Brian, is what's next? I mean, could we go out and see GSAM buy more companies, more areas in terms of white space where maybe GSAM doesn't have that presence?
So let's think about what happens with a transaction. You really need to get some things that are very aligned. First of all, when we think about Goldman Sachs and Innovator, our firms have very similar cultures. We wake up client obsessed every single day. If you talk to the founders of Innovator or any person over there, they wake up thinking about the clients. When you talk to anybody at Goldman Sachs, we wake up thinking about our clients. So that's number one. Number two is Innovator has developed this space, like we talked about earlier, that is differentiated across anything else in the market right now. And so it's bringing differentiation to clients, which is something that Goldman's focused on as well. This fits perfectly alongside our direct indexing capabilities, our evergreen alternatives capabilities, and indeed our organic active ETF strategy as well. And so when you combine those things, it becomes really special. Now, that's a pretty high bar. And so to think that we're going to be able to find something else like that out there, I don't know. We'll look, but we're really confident in our organic strategy and what we're doing right now.
And just a fun fact, it's probably worth pointing out that, of course, you know the co-founders of Innovator well. Bruce Bond, I believe, gave you one of your first jobs at PowerShares.
Yeah, Bruce hired me into the industry a number of years ago. I think I was the 12th employee at PowerShares. And, you know, he's got an incredible track record of, you know, hiring good talent, myself aside. He's built some really good talent there. He's innovated in this industry for years. He brought the first smart beta strategies before we even called them smart beta. And this is just another one of those things that he and John Southard and the rest of the team over at Innovator have been able to accomplish. And, you know, so that's why we feel so aligned, that existing relationship that Goldman has had with Bruce and the Innovator team, and so coming together, we feel really good about that. You know, obviously we're bringing on all 70 of the employees to be full-time Goldman Sachs employees. We don't plan on changing anything as far as their sub-advisors or some of their service providers. We're just providing a massive tailwind to this business because we think the growth over the next 5 years and beyond is going to be absolutely explosive.
An incredible interest from our clients when it comes to these prediction markets. Just in November alone, we had 3 billion contracts traded, which is more than 20% what we saw in October. Overall, since we launched, over 9.5 billion contracts have been traded. So clearly, this is a product that is important to our clients. This JV allows us to work directly with our clients, see the types of contracts that they're interested in, and then work to bring those to market. And for us, that is really top of mind. It's about meeting our clients' demands and interests, and us doing so now through this exchange, we feel as though is a real great opportunity to bring great product, great liquidity to a market that's growing.
So help me understand, you know, when it comes to this joint venture with Susquehanna and buying this stake, my understanding is that now you're going to be a broker, also own an exchange and a clearinghouse. How are you going to manage potential conflicts of interest there?
Well, first off, Katie, we're an investor, right? So we don't own it outright. So one of the things we do is we'll be a member of their board, which will allow us to give input. But at the end of the day, this is a separately run entity that is going to be developing its products. It just happens to be that Robinhood is one of the investors, just like we've seen with other incumbents and other exchanges where we see that they also participate. It allows us a little bit different model in that we can actually listen to our clients, develop product, and then actually put it to marketplace. And then hopefully is what we'll see is the same type of interest we're seeing when we distribute to other exchanges.
And how does this impact your relationship with Kalshi? Because, you know, taking a look at this partnership, you could make the case that you're going to be directly competing with them now.
Well, they were directly competing with us already. So they already took clients on. So for us, it actually is just, it's a similar model that we run when it comes to options and equities and futures, where we connect to multiple exchanges, and we'll continue to do that. Again, our focus is finding the best possible product that we can give to our clients. And now, whether that's on this new exchange with the joint venture with Susquehanna, whether that's with Kalshi, or with one of our other exchanges we use right now, ForecastX, overall, that's just the way we work. We want to find great product, great liquidity. When we find those two things, we then bring it to market. We make sure our clients have access to it.
and they will get to the bottom of it. I'm confident, and that will be the official word, unless the Secretary of Defense suddenly comes out and throws everything out into the public.
Mm-hmm. Does this conversation worry you when you hear senators using the term war crimes?
I think it's the tip of the iceberg, really, because there's been concern about the Venezuela operation from the beginning. First of all, it represents at this time a distraction from what's going on with Ukraine, where Ukraine is fighting for what Americans believe we have. The majority of the American people want to support Ukraine, and this seems to be a distraction to enable the rug to be pulled out from under Ukraine in what was a 28-point peace plan. Now, that may not be going forward, but that's the first thing. Then the second thing is, what's the objective in Venezuela? Why are we going against Maduro? Sure, maybe we don't like him, but are you going to put 25% of the U.S. Navy down there indefinitely? What's the point? What's the objective? What's the strategy? And what about the rest of our global responsibilities? That's the second thing. And then there's the business of striking these boats. And then there's, and this is like the cherry on top, that's the allegation that maybe there was a war crime committed here on the order of the Secretary of Defense. So there's a lot to unpack here at this time, to be honest with you.
Wow. Well, that's why we're glad to have you with us. If this, in fact, turned out to be true, as was described by the report, the first strike, 2 men survive. We went back and hit them again without taking them captive, without boarding the vessel, without trying to investigate where they were from. And maybe they had imagery of these men getting on that boat. Even with that said, would that equal a war crime?
Well, I'm not a lawyer, so these things are always under law. But all of us in the armed forces were told there are obvious crimes that you don't do. No matter who says to do it, you don't shoot a prisoner. You don't kill unarmed civilians. And so these people were basically no threat to the United States. Their mission was finished with the destruction of the boat. So they sort of fall in the category of people who were no threat, and they shouldn't have been killed. Yeah, it looks like a war crime, prima facie.
in terms of the empire building story that Steve Cohen has out in Queens. He's got the Mets, right? Citi Field, obviously. He's got a soccer stadium now, and he's going to build a big gambling complex out there, right?
That's right. And, the job creation is incredible. 17,000 construction jobs, 6,000 permanent jobs, and it's going to make tons of money when it opens, slated for 2030, $3.9 billion in tax revenue, generating $850 million in taxes.
So that all sounds great. Of course, there will be victims because it's gambling, but I guess they would be doing it somewhere else if they weren't doing it here. Do people think it's better that we have it, legal gambling in a casino rather than, I guess, in the basement of some shop downtown?
Well, Steve Cohen faced some opposition from a local council member who tried to prevent it, but in the end, the community came together, the borough president, and people really wanted this casino.
Isn't the idea, I have a guy on the inside, Joe, who knows everything about sports adjacent stories, and he says, Steve Cohen has cleaned up the whole area around Citi Field. Like, there were a lot of chop shops there. It was really a dirtier or maybe a trashier neighborhood that he has now kind of leveled and is going to, I guess, gentrify, right? Isn't that good for Queens?
This is what the people are saying, right? Through their local politicians. He also wants to have a ferry come to Citi Field. This is something still in the works. We wrote that story a few months ago, but that could happen as well, so that people can come straight to Citi Field to gamble on the ferry.
So I guess I was going to ask what's next, and I guess the ferry is part of that answer, right? Traveling to and from this huge complex is currently a little bit difficult, and that would make it a lot easier.
Yes, definitely.
So what has to happen now? Because I'm imagining there will still be a lot of pushback against building this giant casino.
So actually, this is just the board recommending that they get one of three sites. All three were actually picked. So Genting has theirs and Bally's has theirs. All three of them will now have to just get a gaming commission license approved by December 31st. There's not going to be any problem with that. And I don't think there's going to be as much pushback as we might have thought. There were some protests, actually, just 10 people who got up and were upset about the decision. But apart from some Bally's pushback, perhaps, we're not seeing, a major force coming out against these casinos.
Designed, but also validated. So before you send a chip through the fab to be manufactured, you test that actually the design is going to work. And it's really interesting because Synopsys is a supplier to NVIDIA. They use that software platform. The stock's up 5%. NVIDIA bought these shares at $414.79. It's now up near $440 a cent, taking between 2 and 3% of the company, replicating a playbook that you and I have discussed with NVIDIA a couple of times this year. They took a stake in Intel in what was an engineering partnership. They took a stake in Nokia, which was also an engineering partnership in the telecoms domain. So there is some questions about, well, what does NVIDIA get out of this? Synopsys is used by basically anyone that has their own chip designs, right? And so there's an argument that this gives NVIDIA a sales channel. Synopsys will say, our software platform is so much better when it's run on NVIDIA GPUs. So if you want to use our software to design your chips, you should also use it with NVIDIA GPU to power that compute.
It seems like NVIDIA, it's almost like an investment business as well as a chip maker. They have stakes in so many other companies.
Yeah.
It's got to be a huge portfolio. Is this part of the strategy?
I mean, we've had the opportunity to discuss this with Jensen Huang several times this year. Every time I've asked him what's the rationale behind taking 2 to 3% of a company, he basically will say, I thought it was going to be a good investment. And particularly in October when we were in DC and they made the Nokia investment, that day, Nokia's stock jumped 20%, and he almost joked with me, well, I was pretty genius move, wasn't it? His words, not mine. But, you know, it's kind of separate from the circular financing debate in that, you know, they take equity positions where their bet is that the technology partnership moves the field forward in some way, and they get a return on the stock different to, say, lending money that's discussed in Ian King's Tech Daily today, you know, the circular financing versus backing up loans debate. For Jensen, it's a very simple calculus. Is this or is this not a good investment? And they've got some cash to spare right now.
The debate or the story really of last week was Google TPUs and you know how efficiently they power Gemini and also Gemini versus ChatGPT. John Authors has a great column today wishing ChatGPT a happy 3rd birthday. How does this all seem to be shaking out? Because it seems that that SoftBank's CEO Sun was so sad that he almost cried when he had to sell his Nvidia stake, but he needed the money to invest in OpenAI. Like, what if they're not the ultimate winner?
Yeah, I followed this story from the beach last week because, as you know, I took a break, but it was kind of interesting to take a step back. The very simple argument for those that are still bullish on Nvidia and discount the threat of a Google TPU is that Nvidia is still supply constrained. They will sell every single GPU that TSMC can manufacture for them. And their margins are high, so there's no price pressure. There's no suggestion that Nvidia is having to discount to ward off some of that threat from TPU. And, you know, TPU is also not that new a thing. I think this is what's so interesting. It's come up in the news flow because Google has started to do deals with third parties. The latest reported one that spooked the markets was Meta, right? But they had previously tried to make the TPU available to third parties with less success. And right now, from a volume perspective, NVIDIA still holds 90% of the market, which when I grew up in the Bloomberg newsroom studying from you, that's a technical monopoly, right? And that's an enviable position to be in.
It will cut the prices for introductory doses of Zepbound if you pay cash. This is just the latest move in the price war with Novo Nordisk that's getting more and more confusing in terms of pricing for these weight loss drugs. Joining us now to talk about it is someone who understands everything, at least in regards to this industry, Bloomberg Health reporter Madison Muller. So what do we know about Zepbound? Now it's what, the 5 milligram doses, the starter doses are going to be even cheaper.
Exactly. So the beginning doses, the starter doses, which, like you said, people sort of stay on for a month, maybe 2 months. This is, you know, because these drugs cause nausea and some GI side effects, people have to step up. So they can't start at the highest dose. They have to start lower and go up. So what Lilly and Novo are doing is offering some discounts on those starting doses. So Lilly's discounting the price of the first starter dose by $50 and shaving even more off of that second starter dose. And they're keeping the same prices for the higher doses. And this is sort of what we're seeing for Novo as well, which is discounting the first 2 months of treatment even further. A couple of weeks ago, they did that. But for patients, once they get to those actual therapeutic doses that you're supposed to stay on, those prices aren't really changing much.
Right, that's the key word, right? Therapeutic doses. That's the dose at which these things are proven in trials medically functioning, and not the starter dose of 5 milligrams, the transitioning dose of 7.5 milligrams for Zepbound, for Wegovy and Ozempic. It's different, 0.25 and 0.5. But what they're trying to do, I guess, is get you in, give you a taste of the weight loss, and get you kind of stuck in it before you have to pay full dollar for the therapeutic doses.
Right. And it's really hard for patients because I think even though these discounts are good for patients at the end of the day, there's a lot of confusion. I mean, I'm talking to people who are still paying the $500 for Wegovy and Ozempic when they should be paying a lot less at this point. And so hopefully the price will start to come down across the board and these discounts will be more uniform. I mean, Lilly and Novo both also struck deals with the Trump administration last month to bring down the price of these these drugs starting next year. And so hopefully some of these discounts will start to be a little bit more universal. But the hard thing is that insurance coverage is still pretty patchy. And so there are a lot of insurers that don't cover these medications at the moment. And that's why Lilly and Novo are having to discount the drugs the way that they are.
Also, do they want to get rid of some of the stock before someone comes out with a pill that's more popular or a shot that you only take once every 3 months instead of once a week?
Right. I mean, that's the other thing is that pills are coming, and that's going to put additional pricing pressure on this whole category. I mean, we're expecting pills probably next year. Lilly and Novo are both working on their own versions, and the starting doses of those are expected to be even lower, around $150 a month. And that's part of the Trump administration deal as well. But that's, another expectation is that those will be really widely available to patients. It'll be interesting, though, because obviously the demand for these shots is really, really high. So whether or not people will switch over to the pills or whether that will open sort of a whole new market of patients sort of remains to be seen.
BlackRock, writing this: "We believe the peak in defaults in the public credit market is behind us." Amanda joins us now. Amanda, thank you so much for being with us.
Thank you for having me.
This is the big question, right? How much are people pricing to perfection credit at a time when potentially defaults are going to inflect upward? There's been a lot of debt issuance in the tech space, and there's a feeling that private credit has gotten a little bit heady.
Okay, so I think there are a couple things to note. One is we often get asked in the corporate default market or corporate credit market when the peak in defaults is actually going to arrive. And what we point investors to is the data that actually shows in the leveraged loan market, for example, defaults peaked in November of 2024 at 7.7%, which is actually a fairly high number. That's using Moody's data, issuer-weighted trailing 12 months. But the point is that we think the peak in trade policy uncertainty is likely behind us. We think the peak in growth concerns is behind us, and we think the peak in debt service cost headwinds from higher interest rates is behind us. So when you put those three things together, coupled with a good enough growth backdrop in 2026, it's hard for us to envision a new peak in corporate credit defaults. And again, keeping in mind that we've already had kind of this flush in 2024 because of the high borrowing costs. I think coupled with that, our view for corporate credit, both liquid and private, is one of dispersion but not widespread market disruption. And I think that's really the key point to keep in mind.
Hello, I'm Caroline Hepker, introducing you to the new Stock Movers report from Bloomberg. There are so many big names in equities to keep track of, and our Stock Movers report is the best way to find out which individual names are making the biggest moves every day. Stock Movers consists of short audio reports, they're 5 minutes or less, delivered right to your podcast feed throughout the day. We'll bring you conversations on the day's biggest winners and losers in equity markets and explain the news and the data that's driving those gains and losses. Listen a couple of times throughout the day to find out what's moving equities and why. Just search for Stock Movers on Spotify, Apple Podcasts, or anywhere you listen. Get the latest stock news and data backed by reporting from Bloomberg's 3,000 journalists and analysts across the globe. Subscribe to Stock Movers wherever you get your podcasts.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with the latest on the next chairman of the Federal Reserve. President Trump has not announced his choice yet, but a top institutional investor says even if frontrunner Kevin Hassett is appointed, he might not be able to deliver the rapid pace of interest rate cuts that the president would like. Gregory Peters, co-chief investment officer at PGIM Fixed Income, told Bloomberg Hassett wouldn't have the power to deliver cuts on his own.
Does he have the credibility within the committee to drive consensus? I don't think he has that credibility. I think that's what the bond market is telling you. But it's important to remember that it's a full committee, and you have to have the confidence of the committee to drive consensus, and I don't know if he has it.
PGIM's Greg Peters also says if Hassett gets the job, questions about the Fed's independence will remain a major concern.
Well, Nathan, if Hassett does become the next Fed chair, Bloomberg News has learned President Trump's aides and allies are discussing the possibility of making Treasury Secretary Scott Bessent the top White House economic advisor. That would be in addition to his current job. If Bessent is also named to the National Economic Council, he would become the chief arbiter of the administration's economic portfolio, spanning both the Treasury Department and White House. It would also give Bessent a West Wing office, granting him even more physical proximity to the president.
Now, Karen, let's get to the latest on efforts to end the war in Ukraine. President Donald Trump is reacting to the latest talks in Moscow with U.S. envoys. He's describing them as reasonably good.
President Putin had a very good meeting yesterday with Jared Kushner and with Steve Witkoff. What comes out of that meeting, I can't tell you, because it does take two to tango.
President Trump spoke yesterday from the Oval Office after the Kremlin described the talks as very useful, but without breakthroughs on some of its demands around territory and Ukraine's bid to join NATO. We get more from Bloomberg's Greg Sullivan.
He did seem to moderate his tone a bit more and express a little less confidence that a deal is at hand. That's hardly surprising given that there have been several rounds of talks recently, all of which have ended inconclusively. Moscow throughout this process has stuck to hardline demands that Kyiv will not accept and has shown little sign of backing away from those demands, begging the question, how do the two sides reach a consensus?
Bloomberg's Greg Sullivan reports U.S. envoys Steve Witkoff and Jared Kushner will continue the discussions today with a Ukrainian negotiator in Miami.
Well, back in Washington, Nathan, Defense Secretary Pete Hegseth is facing new pressure over controversy from earlier this year. The Pentagon's acting inspector general has concluded that Hegseth risked endangering American troops when he shared attack plans against Houthi rebels on the Signal messaging app. The watchdog's report was delivered to the Senate Armed Services Committee yesterday. Jack Reed is the committee's top Democrat.
I think the most compelling thing I've heard is a conclusion that he jeopardized the lives of pilots that were going into action by releasing critical data. All of this adds up to very, very poor judgment.
Democratic Senator Jack Reed. Hegseth says he only texted updates that did not put anyone at risk, and he was authorized to declassify any material in the chat. The IG's report disagrees with that claim, but a Pentagon spokesman says the report is, quote, total exoneration, and it proves no classified information was shared. The new attention on the Signal chat comes as Hegseth is already under scrutiny over a second strike order that killed survivors on board a suspected drug boat in the Caribbean.
Turning from the Caribbean now to Asia, Karen, a new poll says a majority of Americans back the U.S. military defending Taiwan against a potential invasion from mainland China. The survey conducted by the nonprofit Ronald Reagan Institute found 60% of Americans would support committing U.S. forces to Taiwan's defense.
Meanwhile, Nathan, Chinese leader Xi Jinping met with French President Emmanuel Macron in Beijing at a time when relations between the EU and China have been under strain. The two leaders have discussed issues including economic ties, trade tensions, Taiwan, and the war in Ukraine. Xi, speaking through an interpreter, described their talks as frank, fruitful, and friendly.
Today, the world is undergoing profound changes, unseen in a century at an accelerated pace. And humanity once again stands at a crossroads. China and France should demonstrate their sense of responsibility, uphold the banner of multilateralism, see through the fog of uncertainty, and firmly stand on the right side of history.
On the issue of Ukraine, Xi said that China hopes a fair, binding agreement acceptable to all parties can be reached. Those comments came as Macron renewed his call for Xi to back Europe's stance on Ukraine and warned against the disaggregation of the world order. Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. Giannis Antetokounmpo in the news with reports that he's unhappy with the Bucks' sub-500 record, and he's in talks with the team about getting traded, and his first desire is to go to the Knicks. The Bucks then hosted the Pistons, and Giannis, 3 minutes into the game, hurt his calf, headed for an MRI. The Bucks still won the game. Chris Paul released by the Clippers, said to be friction with Coach Ty Lue. The game tonight in the NFL is Dallas at Detroit, a big one in the NFC. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
Hi, I'm Christopher Walljasper in Chicago. It's Thursday, December 4th. Today, federal agents launch an immigration crackdown in New Orleans. Trump orders enhanced vetting for H-1B visa applicants. Netflix says its bid for Warner Brothers Discovery could mean lower costs for consumers. And Putin heads to India in his first visit in 4 years, with deals on his mind. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes, 7 days a week. U.S. immigration agents have kicked off an operation in New Orleans, Louisiana, to arrest immigrants in the country illegally. It's the latest Democratic-led city to be targeted by President Trump's deportation efforts. Some residents are already bracing for the crackdown. A woman who asked that we only use her first name, Abby, told our reporter Ted Hessen that she's already set up makeshift beds in her family's restaurant so that they can avoid traveling between home and work for fear of being profiled and detained. Here's Ted.
She's feeling a lot of fear in the moment. She doesn't have legal status, and several of her family members are in the same situation. They came to the U.S. from Mexico 20 years ago, but haven't been able to find a path to legal status. But her 10-year-old son was born here in the U.S., and he's a citizen.
¿Qué vas a hacer con tu hijo? No tenemos un plan porque, pues.
And when I asked her if she has a plan for what she would do if she was arrested and her son separated from her, she said, at least at the moment, she doesn't even know what a plan would be. She thinks her son would stay in the U.S., but clearly it's something that's difficult for her to think through. And this sort of situation that no one wants to think about, the idea that you could be sent to a country that you haven't been to for 2 decades, and that your son would be forced with the decision of either going there with you or remaining here in the U.S.
The operation is expected to run through the end of the year. Trump says the National Guard will also be deployed to the city in coming weeks. And speaking of immigration, a Reuters exclusive. The Trump administration is ordering enhanced screening of H-1B visa applicants for any involvement in what they call censorship. A State Department memo sent this week tells consular offices to review LinkedIn profiles and resumes of applicants and their families looking for work in content moderation, fact-checking, or online safety. The memo says anyone, quote, responsible for or complicit in censorship or attempted censorship of protected expression in the United States should be considered for rejection.
The policy will hit tech workers, mainly from India and China, in an industry that's been crucial to Silicon Valley's growth. It's the latest example of Trump making free speech a foreign policy priority, and it could complicate hiring for the tech companies whose leaders backed his campaign. A Pentagon investigation has faulted Defense Secretary Pete Hegseth for using Signal on his personal phone to send information about planned strikes in Yemen last March. The review says the communication could have endangered U.S. troops if intercepted. That's according to two people familiar with the document. The Pentagon's Inspector General did not weigh in on whether the information Hegseth posted was classified. Hegseth took to X to respond, posting, "No classified information, total exoneration, case closed." The report is expected to be publicly released and comes at a time when Hegseth is under scrutiny of his leadership overseeing deadly strikes against suspected drug vessels in the Caribbean. A bid by Netflix to buy up both the film studios and streaming services of Warner Bros. Discovery could mean one login for customers wanting both Netflix and HBO Max. Netflix is arguing the acquisition would actually reduce costs for their customers, despite concerns from antitrust regulators. Companies with smaller streaming services, like Comcast, which owns NBC's Peacock, are also vying to buy up Warner Bros. Assets to try and compete with top streamers like Netflix and Disney+. Sherry Redstone, the former chairperson of Paramount Global, spoke this week at Reuters' Next conference in New York City.
So I think we're going to see a lot of successful integrations and also ones that become more challenged.
Redstone says Warner Brothers' real value to Netflix is in its library of TV and film offerings, not its streaming customers.
I don't know how it will end up with Warner Brothers, who will get it. But what's interesting, you see those of us who have traditionally been in the content creating business, and then companies like Netflix, who are a great distribution company, but now realizing the importance of creating content.
And if you missed the full discussion with Sherry Redstone at yesterday's Next conference, don't worry. There's a full day of great discussions today as well. Topics include the future of TV with the head of NBC and Michael Schur, the writer behind Parks and Rec, Brooklyn Nine-Nine, and The Good Place. Our space reporter, Joey Roulette, will moderate a panel on the geopolitics of space, and a whole lot more. Kim Vanell is co-hosting the conference, and you can follow the action live on Reuters.com as well as the app. There's a link to the live stream in today's show notes. And for markets today, we've got Morning Bid's Amanda Cooper. Amanda, what have you got for us today?
Hi there, thank you. Today we're talking about the dollar and how it's had its worst day since October. We're also taking a look at a Japanese government bond auction, which sounds in the weeds, but it's actually very relevant for anybody watching markets. And finally, we look at Microsoft, whose shares took a bit of a dent yesterday on reports about its software targets. Head over to the podcast for more.
Thanks, Amanda. Be sure to ask your smart speaker for Reuters Morning Bid or listen along wherever you get your podcasts. You can also watch it on Spotify. Vladimir Putin arrives in India today for his first visit in 4 years. The Russian president will be pushing for more sales of Russian oil, missile systems, and fighter jets. But Indian officials are worried that any fresh deals with Moscow could trigger a reaction from President Trump. Mark Trevelyan is our lead writer for Russia and says India will have to walk a tightrope as it considers any potential deals.
So this is taking place at a sensitive moment in the peace talks with Ukraine. For Putin, this is a rare chance actually to, show himself on the international stage. It's only the third major visit he's made this year outside countries of the former Soviet Union. Since the Russian invasion of Ukraine, India sharply stepped up its purchases of Russian oil, buying that oil at a discount. Trump in August doubled the tariffs on Indian goods to punish India for this. And so we are seeing a fall in Indian purchases of Russian oil. This month they're set to hit a three-year low after Trump also imposed sanctions on two big Russian oil companies. So oil will be an important part of these talks, but Russia is confident that it can find ways of continuing to sell its oil to India. Apart from the oil question, Russia is a big seller of missile systems and fighter jets to India. However, India more recently has been diversifying its suppliers. It buys arms also from the United States, and it's trying to produce more of its own equipment. So Russia faces a challenge there to push for more sales. And there could be something interesting on the question of migrant workers from India, because there's a shortage of workers in the Russian economy because of the demands of the war and the pressure on the defense industry, and also the sheer number of people who've gone to fight in Ukraine. So it needs foreign workers, and India is one of the countries from which it's keen to attract these people.
Democrats on the House Oversight Committee have released video and photos of Little St. James, the private island owned by Jeffrey Epstein. They show a pool cabana and several bedrooms. Last week, President Donald Trump signed legislation ordering the Justice Department to release documents from its long-running investigation. The material could shed more light on the activities of Epstein, who socialized with Trump and other public figures before his 2008 conviction of soliciting a minor for prostitution. And for today's recommendation, back to the Reuters Next conference for a recommended listen. Yesterday, our Econ World podcast host, Carmel Crimmins, hosted a live edition of the show from New York. If you missed it, you can check it out by following the link in the podcast description. For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favorite podcast player. If you're listening on a smart speaker, just ask for the latest news from Reuters 7 days a week. We'll be back tomorrow with our daily headline show.
Macy's today, they were the first ones that said, let's put things on sale Friday. What did you observe today in the 2025 Macy's?
Couple things. First, thank you so much for having me, and hope you had a great Thanksgiving. What I saw at Macy's, it's a different type of Black Friday than it was in the past. The reason why? Crowds and traffic, the buzz doesn't kick up until later in the day. And that's for a lot of retailers. Macy's opens at 6 a.m., but others open later. What did I see at Macy's that was different? 40% newness. Labubu is the hottest thing out there. Still hot. There's a Pop Mart in-store shop at Macy's. The other things that are new and different at Macy's, different brands also. Whether it's cosmetics brands, they have a bunch of new cosmetics brands that are different. Whether it's also the engagement with newer brands like the Donna Karens of the world that are there, Rag & Bone that's there. It's been exciting to see the formation of it, but it's always promotional. And all the tracking we've done, we're not seeing a much different link between the level of promotions this year versus last year so far.
So, I mean, retail analysts like Dana Telsley, this is arguably the most important day of the year.
Super Bowl of the year for me.
Super Bowl of the year for Dana. And clients are calling her and texting her all day. What are you seeing? Because they know she's out at the stores, and they want to know what she's seeing out there. How do you expect this holiday season to be, and just in terms of dollars for the retailers? Are the retailers optimistic here?
I think they're cautiously optimistic. you really have a bifurcated consumer. I mean, that high end is spending. Obviously, you've seen the benefits of the stock market, the wealth effect that Ed just talked about. On the low end, the pressure points, obviously prices have gone up. Retailers are striving to make sure that opening price point items stay as close as possible and no increases. But you are seeing consumers search for value, search for more promotions in order to drive conversion. And that's why what the theme of Holiday 25 is, newness and value. Offer something new, offer value, and you'll get conversion.
Ed Yardeni, one top strategist on Wall Street. Dana Telsey, top retail analyst on Wall Street. What do they have in common, Tom? C.J. Lawrence. What is it about that
You were at
place?
C.J. Lawrence.
I was at C.J. Lawrence.
I didn't know that.
I loved it. I didn't like it there. It was awesome place, great people.
The best research on Wall Street
It
back
was
in the day.
like religion, folks.
Crazy.
Those of you younger don't understand this. You used to get things on paper. And there was that green ink of C.J. Lawrence, which had an authority like no one.
Dana, is there one category that is going to drive this year's sales, or is it more broadly based, do you think?
I think it's always about outerwear when it gets cold. It's about apparel. But you got some other new things out there. The Aura rings are very popular.
See, I told you, Lisa, you got to get the Aura rings.
Meta glasses are very popular.
Really?
And what about the Labubu dolls?
Oh, man.
For all ages and income levels.
In the time we've got left, I want you to talk about your heritage. Fifth Avenue's getting blown up. Prada bought a zillion square feet. You got the whole Louis Vuitton with the rebuild with the carriage out front.
Great.
And all that. You as a child standing in front of the Bergdorf Goodman windows, what was it like to be 4 and 5 years old? Nothing's changed, right? It's still the same
Bergdorf
magic.
looks still the same, but it's still the Aura. And having that snowflake above 57th Street with the Empire State Building in the background with different colors off the top, there's nothing in the world like it.
With troubled luxury, will we see mergers this year?
I don't know if you see mergers. I think you see more companies opening more of their own stores. You've seen some divestitures. You look at, obviously, Versace was sold to Prada. You've seen that. Let's see what happens with Giorgio Armani, given his passing.
I got to give you the same question I gave the wonderful Steve Sadov, who was with us in the last hour. What would you do with Gucci?
Oh, I think basically you need to bring Gucci back to its heritage and be able to update it and modernize it, whether different colors, different fabrics. You need to tell a communicative story virtually and visually and have brand ambassadors that everyone wants to follow.
Do we have enough stores, or are we still shrinking the footprint of stores in this country? Where are we in that?
Store footprint is basing out. We've already closed a lot of stores. If anything, stores may be smaller. There's new engagement, certainly with buy online, pickup in store, and their activations. You've seen it in luxury with the Christian Dior store that opened, with Hermes that opened, but you're even seeing it with other stores too. Check out Aritzia. It's a destination.
Oh, that's how you pronounce that.
Aritzia.
I see
Lisa
that.
Mateo's all in on that, right?
Oh, love their jeans. I just went shopping. I went to Soho with my daughter.
Well, what about puffer jackets? It is cold outside.
Yes.
Puffer jackets?
Wait, did the interview just get taken over?
Lisa Mateo's in charge.
I think so. Paul mentioned this the other day. Still, for the haves, it's Summit. What's it called? Summit Hills Mall.
Short Hills.
Short Hill Mall.
Yep.
in near Summit, New Jersey. Chestnut Hill Mall in Boston. Those Highland Park, whatever, in Dallas. Where are they in 10 years?
They're going to be even more curated. They're going to have more special brands, and they're going to have more food and activities because people are going to want to gather there.
That's what Jamie
very
Dimon did.
special.
Listen to Danny Tulsi, put food and activities at the JP Morgan building. You're single Best Buy here. We got to make some money.
I think you're still going to see TJX do well. I like Steve Madden also.
Steve Madden, please discuss that. He's
Brown
back?
suede boots. They're back. They also have a Kurt Geiger acquisition that's going to add to sales and margins. Very exciting for 2026 and beyond.
policy positions has been, of course, immigration. And we're learning just over the last few hours that President Trump plans to ratchet up some of those restrictions, calling for an additional crackdown on immigration in a pair of Truth Social posts where he writes that he would, quote, permanently pause migration from all third world countries. This comes following the shooting of 2 National Guard members in Washington on Wednesday. Joining us right now is Terry Haynes, who heads Pangea Policy. And Terry, I do want to start with some of the president's comments and rhetoric over the last couple of days on the heels of what we should point out is a very tragic shooting that we saw on Wednesday of those 2 National Guard members. 2 National Guard members sent there effectively by the president from West Virginia, or at least on his orders. And now the fallout from this shooting, which seems to involve a suspect with ties to Afghanistan and, quite frankly, ties to the U.S. government as well. What does an immigration crackdown, if at all, accomplish?
Well, I think what's happening here, Romaine, is the president, as he normally does, is taking an immediate position that's very action-oriented and kind of very clean and pure, and doesn't get down into the second and third order issues that involve implementation or anything else. What I found in the middle of the rhetoric and what will happen, I think, immediately here is there will be some kind of a freeze. But the most important thing to take from the president's statement yesterday, I think, is that the status of a lot of these things are under review. And in Washington, review is usually code for we're going to take a step back and take a more nuanced look at this. So I think what's going to end up happening is you're going to have some immediate action by the president on a temporary basis, but that they will take a much closer look and a much more case-by-case look going forward at a variety of different cases. And I think also it's worth mentioning that I'm sure the Afghan community in the United States, particularly those who came here since 2021, feel very much a threat this morning. And I'm sorry about that. And at the same time, I think what will end up happening is that what will be found is that the vast majority of people who have come here, whether from Afghanistan or other countries, have done so legally under proper process. Let's not also forget that Congress is heavily involved in this, and Congress has the ultimate authority over immigration policy. So I expect some coordination with Congress as well.
Is there a sense here, with regards to the immigration policy, it's one thing to say we're pausing any sort of new entry of folks, but you mentioned obviously the Afghan community here, and we've seen with at least past immigration policy positions by this president this year that sometimes those things fanned out, not just so much to the people coming into this country, but people who are already here. Do you think we are going to see, I guess, an additional sort of level of deportations because of the issues that transpired over the last couple of days?
I think as a practical matter, that's unlikely, Romaine. You've got to say a couple of things. First, let's remember that the administration already makes much out of the fact that illegal immigration into this country is basically stopped. So there's not much more to do there on that front. So what needs to happen now is they need to kind of cull, parse, understand better who's in the country and who might be a threat. What's been found very generally from a lot of these immigration sweeps is that the vast majority of these people have not had criminal records, have not had not be seen as a threat of any kind. If that's any indication of what they're going to find from these reviews, I think the vast majority of people who have come here are going to be okay.
Yeah. Terry,
it'll take a while.
Yeah, briefly, we know that he sharply reduced the refugee admissions cap. We understand that there's been a focus on migrants from several significant countries. But the H-1B visas as well, just briefly, how much is this impacting the economy more broadly, do you think?
I think it has some impact, sure. Largely because, Caroline, what ends up happening is just like in any other sector or industry, companies that have been comfortable with the existing system now find themselves jolted. And in a situation like H-1B, where they're relying on these highly skilled folks to come in, these specialists, if you will, that provides a particularly larger jolt. So you've got a situation where all of a sudden, not only can't you rely on a talent pool that you might have been able to rely upon a year ago, for example, but you got a situation where you've really got to scramble to figure out exactly how you're going to manage your business going forward.
Was controversial to begin with. We're not used to having their presence in our city, at least before August, we were not. I know that was not something you were fond of in principle when this deployment happened. How should we react to this news?
Well, first of all, my prayers and the prayers for all of us should go out to the two guardsmen that were shot. It's tragic, never should have happened. And the issue of whether the guardsmen should or should not be there really is secondary at this moment. We'll see what happens with the court case where they will be ordered to leave. I believe it's December 11th. How that conflicts with Hegseth sending another 500 remains to be seen. But the reality is that the guardsmen really had very, very little to do in Washington. In fact, there are many complaints by guardsmen and by those of us that live in Washington, that they were simply standing on street corners, picking up trash from time to time. The bottom line of this is the way to provide security in Washington is to provide additional support to the various police departments that are there. The National Guard, unfortunately, in this case, is paying a very steep price. And I hope that these two guardsmen are going to pull through and pull through and return to health.
Well, here. We are all pulling for these two guardsmen, having just learned that they are hospitalized in critical condition. Congressman, the idea that they were already away from their families, these were guardsmen from West Virginia, we understand, according to the governor of West Virginia. They were away from their families in deployment on Thanksgiving in a Washington that is essentially a ghost town. Lawmakers are gone. The president's at Mar-a-Lago. There's not much happening in the federal city right now. Is it really time to call up an additional 500 troops from their families to come to the Capitol?
The answer is no, it's not the right time. It's not the right time that they were deployed in the first place. As the judge said, there was no legal foundation for their deployment into the city. But you take a look at across the nation, Trump has used the National Guard to assert his authority in cities across the nation. Very, very controversial. And in every city, in California and my cities and other places, there has been a cut in the federal funding to support the police in their operations in the city. In most cities, including Washington, yes, more police are needed. Certainly in the cities that I represent, they're needed. They need support. However, the National Guard is not the right way to provide that kind of security.
not only what we know, but where exactly this happened and who was involved.
You know, it's interesting because D.C. is kind of the opposite of New York when it comes to Thanksgiving, Romaine. This city empties out. It's a ghost town right now. The president's Mar-a-Lago lawmakers are gone. And it's kind of like a Sunday when you drive around on this day before Thanksgiving. So to see this break out in the middle of the day was quite shocking for those who were literally a block from the White House. This happened at 17th and I Streets. If you're with us on Bloomberg TV, you can see the intersection right near Farragut Square, if you know where that is, just a couple of blocks away from the actual entrance of the White House. Now, this is something that's just unfolding, and we can tell you that an arrest has been made. There were concerns about a shooter at large here. To your point, Romaine, the president has been briefed on this, but he's not in the White House. And J.D. Vance, the vice president, who, of course, lives up at the Naval Observatory, is in Kentucky today. Maybe he'll add a little bit more to this when he speaks a bit later on. But this is something that might involve Homeland Security as well. We saw Kristi Noem on Twitter a short time ago saying that she has been briefed on this and they're working with local law enforcement. We can actually look right out the window here, Romaine. It took place only a couple of blocks from our Washington, D.C. bureau, and they're closing streets down. There are a lot of police and emergency vehicles spread out around the neighborhood.
Well, Joe, as you say, this is a fluid situation, so there's a lot we don't know right now. But talk to us about the fact that the National Guard was deployed at all, because that in and of itself is a bit of an unusual situation.
Well, that's true, and it was a very controversial one when President Trump decided to deploy National Guard troops to help fight crime, was what he said at the time, not unlike what we have seen in some other cities here. But their deployment, which began in August, was recently ruled illegal by a federal judge. They're still walking the streets here because they're allowed to be deployed pending appeal. But no, this is not something that we're used to seeing. When we walk to work in the morning, we see sometimes large groups of National Guard troops walking around. They've been doing everything from cleaning up parks to helping support immigration authorities in town. And to see this happen the day before Thanksgiving, knowing that they're away from their families in many cases, really is a tragic situation today.
Joe, I know we're still waiting to hear from the president. And you also mentioned Vice President J.D. Vance, who's in Kentucky, the president himself down in Florida. Have we heard from any other officials, either from the White House or Congress, in response to this shooting?
Just as I mentioned, the Department of Homeland Security and Secretary Noem was pretty quick to respond here. We haven't heard much else other than Press Secretary Caroline Leavitt, and that is a single line. As she said, the White House is aware and actively monitoring this tragic situation. I'm sure they'll be updating the president as we learn more here. But this just happened a very short time ago. And as I mentioned, when J.D. Vance speaks, usually at a moment like this, he's in Kentucky to speak to troops, as a matter of fact, around Thanksgiving. Sometimes they'll give us a status update, so we'll let you know.
Hey, just real quickly, Joe, I mean, you mentioned the location of this. And for people that aren't familiar, I mean, this is near the White House. It's in a downtown district, a lot of office buildings. Violent crime on that particular block, that particular square, is incredibly rare, as having lived in D.C. for years here. Were there a lot of people out on the street at the time that this happened?
That's I guess the point I was trying to make a bit earlier, is that there are so few people downtown today. You don't have that lunch crowd out there, Romaine, because so many offices are empty. So maybe we'll consider that a good thing, that Farragut Park there that you can see in our shot on Bloomberg TV was largely empty, because normally you've got a big area where buses drop people off there to get onto the metro, and you can have, hundreds of people lining that sidewalk on another day. So maybe we'll call that a win so far. But you can see the crime tape is up. National Guard troops and police are out.
Deaths cleanest in years. So give us a sense here.
This is Caroline Hyde.
And I'm Ed Ludlow, inviting you to join us for Bloomberg Tech, a daily podcast focusing exclusively on technology, innovation, and the future of business.
Every weekday, we bring you the top headlines from the world's biggest tech companies.
From finance to defense, AI to entertainment, and from startups to the Magnificent Seven.
We highlight the latest stories of the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets.
We do this all every weekday, then bring you the most important conversations and analysis in our podcast.
Search for Bloomberg Tech on YouTube, Apple, Spotify, or anywhere else you listen.
Join us every afternoon on your commute home and stay ahead of the tech news cycle.
That's the Bloomberg Tech Podcast. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. Subscribe today, wherever you get your podcasts.
News when you want it with Bloomberg News Now. I'm Karen Moscow. Well, Kevin Hassett is the frontrunner to be appointed as the next chair of the Federal Reserve. There are still questions that are persisting on whether he's able to deliver the rapid pace of easing that President Trump would like. Gregory Peters, co-chief investment officer at PGIM Fixed Income, tells Bloomberg that Hassett would not have the power to deliver cuts on his own.
Does he have the credibility within the committee to drive consensus? I don't think he has that credibility. I think that's what the bond market is telling you. But it's important to remember that it's a full committee, and you have to have the confidence of the committee to drive consensus, and I don't know if he has it.
And that's PGIM's Greg Peters, who also says if Hassett gets the job, questions about the independence of the Fed remains a major concern for investors. If Hassett does become the next Fed chair, Bloomberg News has learned President Trump's aides and allies are discussing the possibility of making Treasury Secretary Scott Bessent the top White House economic advisor, and that would be in addition to his current job. Now the latest on the efforts to end the war in Ukraine. President Trump says his envoys, Steve Witkoff and Jared Kushner, had a, quote, reasonably good meeting with Russian President Vladimir Putin in Moscow, but he admits he does not know what the outcome will be on ending the war in Ukraine. As the president puts it, it takes two to tango.
You know, Ukraine, I think we have something pretty well worked out with them. They're very satisfied, considering.
And President Trump spoke from the Oval Office as talks continue on the U.S.-backed plan to stop the fighting. Bloomberg's Greg Sullivan has more.
Witkoff and Kushner, who were obviously just in Moscow, are set to meet with a top Ukrainian negotiator today in Florida. They'll likely discuss the outcome of the talks, the next steps. But what's interesting here is that the next steps may depend on Trump himself and whether he decides to apply pressure to either side to back away from their current positions to try to reach a deal. And if he does apply pressure, what is that pressure and to which side does he apply it?
And that's Bloomberg Russia editor Greg Sullivan. Meanwhile, Russian President Vladimir Putin says some proposals in the U.S. plan to end the war in Ukraine are unacceptable to the Kremlin, and that suggests a deal is still some ways off despite intense diplomacy by U.S. envoys. Elsewhere in Washington, the Pentagon's acting inspector general has concluded Defense Secretary Pete Hegseth risked endangering American lives by sharing attack plans in Yemen on the Signal app. The issue erupted earlier this year when the Atlantic magazine reported its editor, Jeffrey Goldberg, was inadvertently added to Hegseth's Signal chat. Jack Reed is the ranking Democrat on the Senate Armed Services Committee.
One of the ironies here is if someone else besides Secretary Hegseth did it, they would likely be charged under the UCMJ or other federal law.
And that's Senate Democrat Jack Reed. Now, Hegseth says he was authorized to declassify anything on the chat. The Pentagon watchdog's report disputes that. A Pentagon spokesman says the report proves nothing classified was shared and is a, quote, total exoneration of Hegseth. The Navy admiral, who reportedly issued orders to fire upon survivors of an attack on an alleged drug boat, is set to brief Congress. Lawmakers overseeing national security are expected to receive a classified briefing today from Admiral Frank Mitch Bradley about the boat strike. It could be a crucial moment in the unfolding investigation into how Defense Secretary Pete Hegseth handled the military operation in international waters near Venezuela. An influential panel of U.S. vaccine advisors is expected to reverse a long-standing recommendation that babies receive hepatitis B shots within 24 hours of birth. It's a change public health experts say is all but certain to endanger children. The decision would be the most consequential action taken by the Advisory Committee on Immunization Practices since the group was recast under U.S. Health and Human Services Secretary Robert F. Kennedy Jr. earlier this year. Sales of luxury homes in Manhattan jumped in November, and that's countering fears that the election of Zohran Mamdani as mayor would drive out wealthy residents. Buyers signed contracts on 176 homes in Manhattan priced at $4 million or more in November. That's up 25% from the month prior, and this is according to appraiser Miller Samuel and brokerage Douglas Elliman. Meta Platforms has been hit by a full-scale European Union antitrust investigation over how its AI features in WhatsApp may be harming competition. The European Commission said it's concerned that new policies implemented by Meta for its WhatsApp AI tools may prevent rival AI providers from offering their business services through WhatsApp in Europe. Meta has denied the claims. And Alphabet investors are growing increasingly confident that the company's semiconductors could represent a significant driver of future revenue for the Google parent. Gil Luria, head of technology research at D.A. Davidson, estimates if Alphabet gets serious about selling its TPUs or tensor processing units, it could capture 20% of the artificial intelligence market over a few years, which would make it a roughly $900 billion business. Futures this morning, they are little change to higher. This is after the S&P 500 climbed in 7 of the past 8 sessions as traders bet that a Federal Reserve interest rate cut will help drive a global rally into year-end. S&P futures are little change, though, this morning. So are NASDAQ futures. Dow futures up 0.1%, and the 10-year Treasury yield at 4.08%. That's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
Hello, I'm Caroline Hepker, introducing you to the new Stock Movers report from Bloomberg. There are so many big names in equities to keep track of, and our Stock Movers report is the best way to find out which individual names are making the biggest moves every day. Stock Movers consists of short audio reports, they're 5 minutes or less, delivered right to your podcast feed throughout the day. We'll bring you conversations on the day's biggest winners and losers in equity markets and explain the news and the data that's driving those gains and losses. Listen a couple of times throughout the day to find out what's moving equities and why. Just search for Stock Movers on Spotify, Apple Podcasts, or anywhere you listen. Get the latest stock news and data backed by reporting from Bloomberg's 3,000 journalists and analysts across the globe. Subscribe to Stock Movers wherever you get your podcasts.
This is Scarlett Fu.
And I'm Paul Sweeney, inviting you to join us for the Bloomberg Intelligence Podcast.
Every day, we harness the power of Bloomberg Intelligence to bring you deep dives into the companies that are moving markets, from publicly traded companies like Apple to those that are privately owned but known by everyone on Earth, like OpenAI.
Now, I helped to build Bloomberg Intelligence to what it is today, Scarlett, and now our analysts are the best in the world, covering more than 2,000 global companies.
That is your legacy, Paul, and we speak to those in-house experts every day. They are Bloomberg's go-to authorities on sectors, companies, and legal processes.
And we do it all live each weekday, then bring you the best conversations in our daily podcast.
So be sure to search for Bloomberg Intelligence on YouTube, Apple, Spotify, or anywhere else you listen.
Listen in the afternoons on your way home from work to catch up on the market news you missed during the business day.
That is the Bloomberg Intelligence Podcast. I'm Scarlett Fu.
And I'm Paul Sweeney. Subscribe today wherever you get your podcasts.
Just a reminder that the biggest gainer in the after-hours trade, that is Salesforce. Some ratification of the AI trade, and we're going to get another read on that tomorrow out of Hewlett-Packard Enterprise, which is scheduled to report earnings. We're also going to get earnings out of companies like Ulta, Dollar General, and Kroger, so a little bit more of a read on the consumer as well. At 7:30 a.m., we are going to get challenger job cut data. At 8:30 a.m., we're going to get that official jobless claims data out of the government. That's the weekly data here as we try to do a bit of a catch-up after the government shutdown disrupted most of those releases. And then at 12:30 p.m. Eastern time, I'm told that the Fed's Mickey Bowman is scheduled to speak. Now, keep in mind, the Fed is in a blackout period, so she can't speak specifically about economic conditions and economic policy, or monetary policy, I should say, but she will address some issues with regards to bank supervision and regulation. As we wrap up our coverage here on The Close on this Wednesday afternoon, just a reminder that the biggest gainer in the after-hours trade, that is Salesforce. Some ratification of the AI trade, and we're going to get another read on that tomorrow out of Hewlett-Packard Enterprise, which is scheduled to report earnings. We're also going to get earnings out of companies like Ulta, Dollar General, and Kroger, so a little bit more of a read on the consumer as well. At 7:30 a.m., we are going to get challenger job cut data. At 8:30 a.m., we're going to get that official jobless claims data out of the government. That's the weekly data here as we try to do a bit of a catch-up after the government shutdown disrupted most of those releases. And then at 12:30 p.m. Eastern time, I'm told that the Fed's Mickey Bowman is scheduled to speak. Now, keep in mind, the Fed is in a blackout period, so she can't speak specifically about economic conditions and economic policy, or monetary policy, I should say, but she will address some issues with regards to bank supervision and regulation. As we wrap up our coverage here on The Close on this Wednesday afternoon, just a reminder that the biggest gainer in the after-hours trade, that is Salesforce. Some ratification of the AI trade, and we're going to get another read on that tomorrow out of Hewlett-Packard Enterprise, which is scheduled to report earnings. We're also going to get earnings out of companies like Ulta, Dollar General, and Kroger, so a little bit more of a read on the consumer as well. At 7:30 a.m., we are going to get challenger job cut data. At 8:30 a.m., we're going to get that official jobless claims data out of the government. That's the weekly data here as we try to do a bit of a catch-up after the government shutdown disrupted most of those releases. And then at 12:30 p.m. Eastern time, I'm told that the Fed's Mickey Bowman is scheduled to speak. Now, keep in mind, the Fed is in a blackout period, so she can't speak specifically about economic conditions and economic policy, or monetary policy, I should say, but she will address some issues with regards to bank supervision and regulation. As we wrap up our coverage here on The Close on this Wednesday afternoon, just a reminder that the biggest gainer in the after-hours trade, that is Salesforce. Some ratification of the AI trade, and we're going to get another read on that tomorrow out of Hewlett-Packard Enterprise, which is scheduled to report earnings. We're also going to get earnings out of companies like Ulta, Dollar General, and Kroger, so a little bit more of a read on the consumer as well. At 7:30 a.m., we are going to get challenger job cut data. At 8:30 a.m., we're going to get that official jobless claims data out of the government. That's the weekly data here as we try to do a bit of a catch-up after the government shutdown disrupted most of those releases. And then at 12:30 p.m. Eastern time, I'm told that the Fed's Mickey Bowman is scheduled to speak. Now, keep in mind, the Fed is in a blackout period, so she can't speak specifically about economic conditions and economic policy, or monetary policy, I should say, but she will address some issues with regards to bank supervision and regulation. As we wrap up our coverage here on The Close on this Wednesday afternoon, just a reminder that the biggest gainer in the after-hours trade, that is Salesforce. Some ratification of the AI trade, and we're going to get another read on that tomorrow out of Hewlett-Packard Enterprise, which is scheduled to report earnings. We're also going to get earnings out of companies like Ulta, Dollar General, and Kroger, so a little bit more of a read on the consumer as well. At 7:30 a.m., we are going to get challenger job cut data. At 8:30 a.m., we're going to get that official jobless claims data out of the government. That's the weekly data here as we try to do a bit of a catch-up after the government shutdown disrupted most of those releases. And then at 12:30 p.m. Eastern time, I'm told that the Fed's Mickey Bowman is scheduled to speak. Now, keep in mind, the Fed is in a blackout period, so she can't speak specifically about economic conditions and economic policy, or monetary policy, I should say, but she will address some issues with regards to bank supervision and regulation. As we wrap up our coverage here on The Close on this Wednesday afternoon, just a reminder that the biggest gainer in the after-hours trade, that is Salesforce. Some ratification of the AI trade, and we're going to get another read on that tomorrow out of Hewlett-Packard Enterprise, which is scheduled to report earnings. We're also going to get earnings out of companies like Ulta, Dollar General, and Kroger, so a little bit more of a read on the consumer as well. At 7:30 a.m., we are going to get challenger job cut data. At 8:30 a.m., we're going to get that official jobless claims data out of the government. That's the weekly data here as we try to do a bit of a catch-up after the government shutdown disrupted most of those releases. And then at 12:30 p.m. Eastern time, I'm told that the Fed's Mickey Bowman is scheduled to speak. Now, keep in mind, the Fed is in a blackout period, so she can't speak specifically about economic conditions and economic policy, or monetary policy, I should say, but she will address some issues with regards to bank supervision and regulation. As we wrap up our coverage here on The Close on this Wednesday afternoon, just a reminder that the biggest gainer in the after-hours trade, that is Salesforce. Some ratification of the AI trade, and we're going to get another read on that tomorrow out of Hewlett-Packard Enterprise, which is scheduled to report earnings. We're also going to get earnings out of companies like Ulta, Dollar General, and Kroger, so a little bit more of a read on the consumer as well. At 7:30 a.m., we are going to get challenger job cut data. At 8:30 a.m., we're going to get that official jobless claims data out of the government. That's the weekly data here as we try to do a bit of a catch-up after the government shutdown disrupted most of those releases. And then at 12:30 p.m. Eastern time, I'm told that the Fed's Mickey Bowman is scheduled to speak. Now, keep in mind, the Fed is in a blackout period, so she can't speak specifically about economic conditions and economic policy, or monetary policy, I should say, but she will address some issues with regards to bank supervision and regulation. As we wrap up our coverage here on The Close on this Wednesday afternoon, just a reminder that the biggest gainer in the after-hours trade, that is Salesforce. Some ratification of the AI trade, and we're going to get another read on that tomorrow out of Hewlett-Packard Enterprise, which is scheduled to report earnings. We're also going to get earnings out of companies like Ulta, Dollar General, and Kroger, so a little bit more of a read on the consumer as well. At 7:30 a.m., we are going to get challenger job cut data. At 8:30 a.m., we're going to get that official jobless claims data out of the government. That's the weekly data here as we try to do a bit of a catch-up after the government shutdown disrupted most of those releases. And then at 12:30 p.m. Eastern time, I'm told that the Fed's Mickey Bowman is scheduled to speak. Now, keep in mind, the Fed is in a blackout period, so she can't speak specifically about economic conditions and economic policy, or monetary policy, I should say, but she will address some issues with regards to bank supervision and regulation. As we wrap up our coverage here on The Close on this Wednesday afternoon, just a reminder that the biggest gainer in the after-hours trade, that is Salesforce. Some ratification of the AI trade, and we're going to get another read on that tomorrow out of Hewlett-Packard Enterprise, which is scheduled to report earnings. We're also going to get earnings out of companies like Ulta, Dollar General, and Kroger, so a little bit more of a read on the consumer as well. At 7:30 a.m., we are going to get challenger job cut data. At 8:30 a.m., we're going to get that official jobless claims data out of the government. That's the weekly data here as we try to do a bit of a catch-up after the government shutdown disrupted most of those releases. And then at 12:30 p.m. Eastern time, I'm told that the Fed's Mickey Bowman is scheduled to speak. Now, keep in mind, the Fed is in a blackout period, so she can't speak specifically about economic conditions and economic policy, or monetary policy, I should say, but she will address some issues with regards to bank supervision and regulation. As we wrap up our coverage here on The Close on this Wednesday afternoon, just a reminder that the biggest gainer in the after-hours trade, that is Salesforce. Some ratification of the AI trade, and we're going to get another read on that tomorrow out of Hewlett-Packard Enterprise, which is scheduled to report earnings. We're also going to get earnings out of companies like Ulta, Dollar General, and Kroger, so a little bit more of a read on the consumer as well. At 7:30 a.m., we are going to get challenger job cut data. At 8:30 a.m., we're going to get that official jobless claims data out of the government. That's the weekly data here as we try to do a bit of a catch-up after the government shutdown disrupted most of those releases. And then at 12:30 p.m. Eastern time, I'm told that the Fed's Mickey Bowman is scheduled to speak. Now, keep in mind, the Fed is in a blackout period, so she can't speak specifically about economic conditions and economic policy, or monetary policy, I should say, but she will address some issues with regards to bank supervision and regulation. As we wrap up our coverage here on The Close on this Wednesday afternoon, just a reminder that the biggest gainer in the after-hours trade, that is Salesforce. Some ratification of the AI trade, and we're going to get another read on that tomorrow out of Hewlett-Packard Enterprise, which is scheduled to report earnings. We're also going to get earnings out of companies like Ulta, Dollar General, and Kroger, so a little bit more of a read on the consumer as well. At 7:30 a.m., we are going to get challenger job cut data. At 8:30 a.m., we're going to get that official jobless claims data out of the government. That's the weekly data here as we try to do a bit of a catch-up after the government shutdown disrupted most of those releases. And then at 12:30 p.m. Eastern time, I'm told that the Fed's Mickey Bowman is scheduled to speak. Now, keep in mind, the Fed is in a blackout period, so she can't speak specifically about economic conditions and economic policy, or monetary policy, I should say, but she will address some issues with regards to bank supervision and regulation. As we wrap up our coverage here on The Close on this Wednesday afternoon, just a reminder that the biggest gainer in the after-hours trade, that is Salesforce. Some ratification of the AI trade, and we're going to get another read on that tomorrow out of Hewlett-Packard Enterprise, which is scheduled to report earnings. We're also going to get earnings out of companies like Ulta, Dollar General, and Kroger, so a little bit more of a read on the consumer as well. At 7:30 a.m., we are going to get Challenger job cut data. At 8:30 a.m., we're going to get that official jobless claims data out of the government. That's the weekly data here as we try to do a bit of a catch-up after the government shutdown disrupted most of those releases. And then at 12:30 p.m. Eastern Time, I'm told that the Fed's Mickey Bowman is scheduled to speak. Now, keep in mind, the Fed is in a blackout period, so she can't speak specifically about economic conditions and economic policy, or monetary policy, I should say, but she will address some issues with regards to bank supervision and regulation. As we wrap up our coverage here on The Close on this Wednesday afternoon, just a reminder that the biggest gainer in the after-hours trade, that is Salesforce. Some ratification of the AI trade, and we're going to get another read on that tomorrow out of Hewlett-Packard Enterprise, which is scheduled to report earnings. We're also going to get earnings out of companies like Ulta, Dollar General, and Kroger, so a little bit more of a read on the consumer as well. At 7:30 a.m., we are going to get Challenger job cut data. At 8:30 a.m., we're going to get that official jobless claims data out of the government. That's the weekly data here as we try to do a bit of a catch-up after the government shutdown disrupted most of those releases. And then at 12:30 p.m. Eastern Time, I'm told that the Fed's Mickey Bowman is scheduled to speak. Now, keep in mind, the Fed is in a blackout period, so she can't speak specifically about economic conditions and economic policy, or monetary policy, I should say, but she will address some issues with regards to bank supervision and regulation. As we wrap up our coverage here on The Close on this Wednesday afternoon, just a reminder that the biggest gainer in the after-hours trade, that is Salesforce. Some ratification of the AI trade, and we're going to get another read on that tomorrow out of Hewlett-Packard Enterprise, which is scheduled to report earnings. We're also going to get earnings out of companies like Ulta, Dollar General, and Kroger, so a little bit more of a read on the consumer as well. At 7:30 a.m., we are going to get Challenger job cut data. At 8:30 a.m., we're going to get that official jobless claims data out of the government. That's the weekly data here as we try to do a bit of a catch-up after the government shutdown disrupted most of those releases. And then at 12:30 p.m. Eastern Time, I'm told that the Fed's Mickey Bowman is scheduled to speak. Now, keep in mind, the Fed is in a blackout period, so she can't speak specifically about economic conditions and economic policy, or monetary policy, I should say, but she will address some issues with regards to bank supervision and regulation. As we wrap up our coverage here on The Close on this Wednesday afternoon, just a reminder that the biggest gainer in the after-hours trade, that is Salesforce. Some ratification of the AI trade, and we're going to get another read on that tomorrow out of Hewlett-Packard Enterprise, which is scheduled to report earnings. We're also going to get earnings out of companies like Ulta, Dollar General, and Kroger, so a little bit more of a read on the consumer as well. At 7:30 a.m., we are going to get Challenger job cut data. At 8
क्रूड ऑयल नेचुरल गैस में नई एंट्री, नेचुरल गैस में लगा हुआ है ट्रेड। नई एंट्री क्या लगा रखा है, जो ट्रेड वही सेम है और कुछ नया ट्रेड तो चल नहीं रहा है। नीचे आ जाता थोड़ा सा क्रूड ऑयल तो वापस बाइंग प्लान करना, ऊपर से वापस सेल कर सकते हैं। अब तो सीधा डेटा आने वाला है, फिर 8 बजे यूएस मार्केट ओपन होगा, मोस्टली उसके बाद ही शायद मूव करे। 7 PM के डेटा का वेट कर लो। अनएम्प्लॉयमेंट क्लेम्स का डेटा है, 3 मिनट में आने वाला है, इम्पैक्ट करेगा मार्केट को।
to bank supervision and regulation. As we wrap up our coverage here on The Close on this Wednesday afternoon, just a reminder that the biggest gainer in the after-hours trade, that is Salesforce. Some ratification of the AI trade, and we're going to get another read on that tomorrow out of Hewlett-Packard Enterprise, which is scheduled to report earnings. We're also going to get earnings out of companies like Ulta, Dollar General, and Kroger, so a little bit more of a read on the consumer as well. At 7:30 a.m., we are going to get Challenger job cut data. At 8:30 a.m., we're going to get that official jobless claims data out of the government. That's the weekly data here as we try to do a bit of a catch-up after the government shutdown disrupted most of those releases. And then at 12:30 p.m. Eastern Time, I'm told that the Fed's Mickey Bowman is scheduled to speak. Now, keep in mind, the Fed is in a blackout period, so she can't speak specifically about economic conditions and economic policy, or monetary policy, I should say, but she will address some issues with regards to bank supervision and regulation. As we wrap up our coverage here on The Close on this Wednesday,
Hi, I'm Christopher Walljasper in Chicago. It's Thursday, December 4th. Today, federal agents launch an immigration crackdown in New Orleans. Trump orders enhanced vetting for H-1B visa applicants. Netflix says its bid for Warner Brothers Discovery could mean lower costs for consumers. And Putin heads to India in his first visit in 4 years, with deals on his mind. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes, 7 days a week. U.S. immigration agents have kicked off an operation in New Orleans, Louisiana, to arrest immigrants in the country illegally. It's the latest Democratic-led city to be targeted by President Trump's deportation efforts. Some residents are already bracing for the crackdown. A woman who asked that we only use her first name, Abby, told our reporter Ted Hessen that she's already set up makeshift beds in her family's restaurant so that they can avoid traveling between home and work for fear of being profiled and detained. Here's Ted.
She's feeling a lot of fear in the moment. She doesn't have legal status, and several of her family members are in the same situation. They came to the U.S. from Mexico 20 years ago, but haven't been able to find a path to legal status. But her 10-year-old son was born here in the U.S., and he's a citizen.
¿Qué vas a hacer con tu hijo?
No tenemos un plan porque, pues,
And when I asked her if she has a plan for what she would do if she was arrested and her son separated from her, she said, at least at the moment, she doesn't even know what a plan would be. She thinks her son would stay in the U.S., but clearly it's something that's difficult for her to think through. And this sort of situation that no one wants to think about, the idea that you could be sent to a country that you haven't been to for 2 decades, and that your son would be forced with the decision of either going there with you or remaining here in the U.S.
The operation is expected to run through the end of the year. Trump says the National Guard will also be deployed to the city in coming weeks. And speaking of immigration, a Reuters exclusive. The Trump administration is ordering enhanced screening of H-1B visa applicants for any involvement in what they call censorship. A State Department memo sent this week tells consular offices to review LinkedIn profiles and resumes of applicants and their families looking for work in content moderation, fact-checking, or online safety. The memo says anyone, quote, responsible for or complicit in censorship or attempted censorship of protected expression in the United States should be considered for rejection. The policy will hit tech workers, mainly from India and China, in an industry that's been crucial to Silicon Valley's growth. It's the latest example of Trump making free speech a foreign policy priority, and it could complicate hiring for the tech companies whose leaders backed his campaign. A Pentagon investigation has faulted Defense Secretary Pete Hegseth for using Signal on his personal phone to send information about planned strikes in Yemen last March. The review says the communication could have endangered U.S. troops if intercepted. That's according to 2 people familiar with the document. The Pentagon's Inspector General did not weigh in on whether the information Hegseth posted was classified. Hegseth took to X to respond, posting, "No classified information, total exoneration, case closed." The report is expected to be publicly released and comes at a time when Hegseth is under scrutiny of his leadership overseeing deadly strikes against suspected drug vessels in the Caribbean. A bid by Netflix to buy up both the film studios and streaming services of Warner Brothers Discovery could mean one login for customers wanting both Netflix and HBO Max. Netflix is arguing the acquisition would actually reduce costs for their customers, despite concerns from antitrust regulators. Companies with smaller streaming services, like Comcast, which owns NBC's Peacock, are also vying to buy up Warner Brothers assets to try and compete with top streamers like Netflix and Disney+. Sherry Redstone, the former chairperson of Paramount Global, spoke this week at Reuters' Next conference in New York City.
So I think we're going to see a lot of successful integrations and also ones that become more challenged.
Redstone says Warner Brothers' real value to Netflix is in its library of TV and film offerings, not its streaming customers.
I don't know how it will end up with Warner Brothers, who will get it. But what's interesting, you see those of us who have traditionally been in the content creating business, and then companies like Netflix, who are a great distribution company, but now realizing the importance of creating content.
And if you missed the full discussion with Sherry Redstone at yesterday's Next conference, don't worry. There's a full day of great discussions today as well. Topics include the future of TV with the head of NBC and Michael Schur, the writer behind Parks and Rec, Brooklyn Nine-Nine, and The Good Place. Our space reporter, Joey Roulette, will moderate a panel on the geopolitics of space, and a whole lot more. Kim Vanell is co-hosting the conference, and you can follow the action live on Reuters.com as well as the app. There's a link to the live stream in today's show notes. And for markets today, we've got Morning Bid's Amanda Cooper. Amanda, what have you got for us today?
Hi there, thank you. Today we're talking about the dollar and how it's had its worst day since October. We're also taking a look at a Japanese government bond auction, which sounds in the weeds, but it's actually very relevant for anybody watching markets. And finally, we look at Microsoft, whose shares took a bit of a dent yesterday on reports about its software targets. Head over to the podcast for more.
Thanks, Amanda. Be sure to ask your smart speaker for Reuters Morning Bid or listen along wherever you get your podcasts. You can also watch it on Spotify. Vladimir Putin arrives in India today for his first visit in 4 years. The Russian president will be pushing for more sales of Russian oil, missile systems, and fighter jets. But Indian officials are worried that any fresh deals with Moscow could trigger a reaction from President Trump. Mark Trevelyan is our lead writer for Russia and says India will have to walk a tightrope as it considers any potential deals.
So this is taking place at a sensitive moment in the peace talks with Ukraine. For Putin, this is a rare chance actually to, show himself on the international stage. It's only the third major visit he's made this year outside countries of the former Soviet Union. Since the Russian invasion of Ukraine, India sharply stepped up its purchases of Russian oil, buying that oil at a discount. Trump in August doubled the tariffs on Indian goods to punish India for this. And so we are seeing a fall in Indian purchases of Russian oil. This month they're set to hit a 3-year low after Trump also imposed sanctions on 2 big Russian oil companies. So oil will be an important part of these talks, but Russia is confident that it can find ways of continuing to sell its oil to India. Apart from the oil question, Russia is a big seller of missile systems and fighter jets to India. However, India more recently has been diversifying its suppliers. It buys arms also from the United States, and it's trying to produce more of its own equipment. So Russia faces a challenge there to push for more sales. And there could be something interesting on the question of migrant workers from India, because there's a shortage of workers in the Russian economy because of the demands of the war and the pressure on the defense industry, and also the sheer number of people who've gone to fight in Ukraine. So it needs foreign workers, and India is one of the countries from which it's keen to attract these people.
Democrats on the House Oversight Committee have released video and photos of Little St. James, the private island owned by Jeffrey Epstein. They show a pool cabana and several bedrooms. Last week, President Donald Trump signed legislation ordering the Justice Department to release documents from its long-running investigation. The material could shed more light on the activities of Epstein, who socialized with Trump and other public figures before his 2008 conviction of soliciting a minor for prostitution. And for today's recommendation, back to the Reuters Next conference for a recommended listen. Yesterday, our
Today, the dollar nurses its worst day since October as markets fret an analysis. I'm Amanda Cooper in London.
And I'm Mike Dolan. It's Thursday, December 4.
Mike, so let's kick off taking a look at the dollar that was really doing reasonably well for the past few weeks, but has hit a stumbling block.
Yeah,
what's going on there?
We've had several days of downshift. Most obviously, we're awaiting a Fed cut later this month, actually next week, virtually fully priced in. But we're getting two things happening at the same time. Some of the high-frequency US data, we are getting some US data at long last, is showing that the weakness in the labor market is persistent. Yesterday, we had a drop in private sector payrolls for November, which was quite alarming because it was unexpected. And it showed also that there was quite considerable job shedding going on among small businesses in the US, which spoke to a greater problem in the broader labor market. We get an update on weekly jobless later today, but it's all building that picture because the Fed has been obsessing about the labor market and how weak it is. So that's the first thing hitting the dollar. The second thing, of course, is that the new Fed chair is almost been announced, and we've talked about this for many days now. There is a fear in the backdrop that a more political appointee, likely to be Kevin Hassett, at least if you believe the bookmakers, then that will lead to even further rate cuts next year. So dollars feeding off of all this, notably against Chinese yuan, as well as the euro, sterling, and the Swiss franc.
Absolutely, yeah. And I think there's some truth in the US sneezes and the rest of the world catches a cold. And it feels like the market's at that tipping point, doesn't it? Where bad news is good news in that it means Fed rate cuts, it means more stimulus and so on. But at some point, that tipping point passes and bad news becomes bad news. I'm wondering if perhaps we are at that point, people thinking perhaps more about not just next week's rate cut or even next year's rate cuts, but what this is all going to mean for things like, for example, government finances, for economic growth and so on. A lot of focus on long-dated treasuries and, by extension, long-dated bonds, which is one of the things that we're looking at today, right?
Yeah, well, that's kind of an interesting segue. I think Japan, this would normally be a fairly routine event in most years that a government sells an auction of long-dated debt, but it's been the focus all year, particularly in Japan. There's a fiscal stimulus going on there. There's a concern that the new prime minister may lean on the Bank of Japan to not raise interest rates, but we have to wait for December 18 for that final decision. So the idea that Japan suddenly has drawn such a comfortable amount of investors for its new sale of 30-year debt may seem slightly in the plumbing, but it does matter because there has been a huge concern about demand for long-dated government debt due to the rising debt piles everywhere. And Japan is further down that pike than most governments. So what happens there does have an implication, I think, for government bonds everywhere. And there is also the very big issue about Japanese money that's invested overseas. If there's some indication that that money is coming home, then it does matter more broadly for world markets.
So on to Microsoft, another thing that we're looking at today, and that sort of flip-flopping in the stock yesterday. There's this report out that there's the company cutting its software sales targets. Microsoft, of course, came out and denied it. But the stock ended the day down 2.5%, is no doubt in focus in this morning's pre-market. This kind of speaks a lot to the, for all the attraction of the Magnificent Seven, for all that they're carrying a lot of the S&P 500 right now. There's fragility there, right?
Yeah, there's a lot of fragility, I think, because those huge mega cap stocks are so richly valued. And we are coming to also a year-end period where I think maybe many people looking to rotate and think of what their plans for 2026 might be. And it was notable yesterday that even though Microsoft stumbled on what seemed like, again, a relatively small detail, that the small caps in Wall Street, the Russell 2000 index, had one of their best days in months.
I think this is what you get in a market that's priced for perfection. For today's recommended read, check out Mike's column on whether the AI boom can knock the US economy from a 150-year trend. The link is in the show notes. For more on any of today's stories, head to Reuters.com or the Reuters app. Follow us on your favorite podcast player, and if you're on a smart speaker, just ask for the latest market news from Reuters 7 days a week.
We'll be back tomorrow.
I'm Nell Mackenzie in London.
And I'm Mike Dolan. It's Wednesday, December 3rd.
So tell us about the latest with the new Fed chair.
Oh, it's become a bit of a saga now, isn't it? We've been waiting all year to see what Trump would do when Jay Powell finally, his term ends in May. We got last week, I think, an indication of when that might come. And there's been interviews going on for weeks and months. Scott Bessent said there may be an announcement by Christmas. And then Trump himself said, no, he wasn't going to make an announcement or make a pick until early next year.
Always winter, never Christmas.
And then within hours, he introduced Kevin Hassett, his chief economic advisor, as the potential new Fed chair, which I think most people assumed was the green light. And certainly the betting markets saw it that way. They moved on Polymarket from about 55% chance for Hassett taking the job to about 85%. However, we do have an interesting problem for the next 5 months, because if Hassett is indeed the new Fed chair, if he's given the nod, then he coexists. He's the shadow Fed chair until May, along with Jay Powell at the top of the Fed. So that could be extremely confusing and potentially volatile for markets.
More mixed messages.
Yeah. And you have to wonder now what Hassett how he would behave.
We know he's a glass half full guy, right? What else do we know about
Well,
him?
he comes from the White House and he is very close to President Trump and has been all year as he's started his second term. So the running assumption is that he will try to push through the president's preference and his very significant call for 200 to 300 basis points of interest rate cuts, which is well below where the markets are even priced at the moment. So how he behaves in that regard and what he says, certainly before he takes the job, assuming he gets it in May, will increasingly become a market factor going forward.
Well, big market factor today is the lack of a Ukraine peace deal. We had over 4 hours, almost 5 hours of negotiations in Moscow without a tangible result. It's an interesting development, particularly for the price of oil, which yesterday had fallen almost $1 on the prospect of a peace deal, and now is back up 75 cents or so in markets this morning. I think we're looking for how far oil can go.
What are people saying about that? I mean, clearly this is not on a timeline that certainly President Trump would have hoped for. He was talking about a deal by Thanksgiving only last week. If there was a breakthrough, if we got a peace deal, if we got an end to the war in Ukraine, what are people saying about the oil price? Where would it go?
Well, we have a few low estimates. I think Goldman was saying $50. JP Morgan said as low as 30. I have a hedge fund manager who's looking for it at 20. We are looking for the bottom of the oil price, because we have to remember it's not just OPEC, which has made the world awash in oil these days. You've got a lot of non-OPEC oil producers. So you've got, Venezuela, which may or may not, depending on conflict, come online. And Venezuela makes the kind of oil that we like to see made into gasoline, which, right, goes in our cars. And you've got Canada, you've got the U.S. Permian Basin shale producers, and then Russia, which before this conflict was the world's biggest producer of oil. So literally, we could be swimming in oil. Okay. which will be a huge price mover. Although we had some huge price movers overnight, Mike. Why don't you tell us about those?
Yeah, biggest mover on Wall Street last night was Boeing, stock up 10%. Quite a move for such a large industrial stock. Plane maker says its deliveries next year will be growing, but most significantly for the market, I think it will be in a positive free cash flow. And that really has rocketed the stock, which had been underperforming the broader market right up to this point and has had a torrid few years for a whole series of different reasons and outages and problems and well documented. But this seems, the return to a positive free cash flow seems to mark the beginning of the end for Boeing's troubles. And in the backdrop, its big European rival Airbus is having its problems this week as well. So issues with software and fuselage problems, which are causing a considerably turbulent beginning to December for it. So positive for Boeing for a change, perhaps. So it's now back roughly trading where the market would be putting the broader index.
Well, it sounds like a mixed result for those plane manufacturers. For today's recommended read, check out Mike's column on the risks related to hedge fund trading and sovereign bond markets. The link is in the show notes. For more on any of today's stories, head to Reuters.com or the Reuters app. Follow us on your favorite podcast player, and if you're on a smart speaker, just ask for the latest market news from Reuters 7 days a week.
We'll be back tomorrow.
back in, it was October 19th, 2022, just a walk down memory lane. And I'd been listening to Vinay and others, and I tweeted out the following because the CDC had just added the COVID vaccine to its list of mandatory or recommended school vaccinations. And I tweeted out the following: a scary number of kids are dying after taking the COVID vax from myocarditis, among other injuries. How dare the CDC add this to its list of school vaccinations? Don't listen. Be very careful with your teenage boys in particular, but girls too. These are not honest brokers. This is dangerous, with an exclamation point. The shitstorm that rained down upon me was massive and ongoing. I'll just give you a couple. The Daily Beast, which is literally wrong about everything all the time, tweeted out Megyn Kelly's anti-vax lies are a threat to public health. Daily Beast, you fucking got kids killed. You got kids killed. I saved lives. This show saved lives, without question. The Hill, Megyn Kelly faces backlash over COVID tweet. It went on and on. Kara Swisher, Silicon Valley, speaking of Silicon Valley, this was the issue. Not long after this, literally 2 days after this, Vinay Prasad I'd been listening to, literally 2 days after this, my sister died, not of COVID. It's a long story, but she died. And I was supposed to do Kara Swisher's podcast and I had to cancel. So my assistant texted her saying she has a family emergency. She didn't, give up the farm. And Kara Swisher wrote back, oh, I'm sure it's a family emergency and not just she's afraid to come on now, given the storm around her stupid COVID tweets.
I'm really sorry.
And Abby was like too polite to just shove it down her throat and say, actually, her sister's dead. And by the way, when she found out, she wasn't apologetic. She didn't say, oh my God, I'm such an asshole. Sorry for being such a jerk. Anyway, that's what was happening. That was the reaction to that, Chamath.
It's
a huge storm around me telling the truth. Yeah. And I did a whole talking points memo on it the very next day, a whole talking points, giving the examples of what I was talking about, kids who were dying from this. And now we have the FDA finally coming out, about to put a black box warning on this thing, saying it was all true. Where's the media accountability? Where's the apology from The Hill, The Daily Beast, from Kara Swisher? Why won't any of the dishonest?
I want to say on the record here that the subject line of the calendar invite for this recording session is FOIA: Epstein/Santa. It makes me wonder, wouldn't that just be the ultimate kick in the face of 2025 that Santa Claus is on the Epstein list?
Well, for the record, we're not talking about Santa right this second. That's a different episode. I want to talk about how the FBI turned over dozens of emails to me that revealed details about how hundreds of the Bureau's special agents and personnel from the Freedom of Information Act office reviewed and processed the Epstein files earlier this year. Plus, the best chance for getting the Epstein files released. Let's go! I'm investigative journalist Jason Leopold. I spend most of my days getting documents from the government.
I'm attorney Matt Topic, and I fight them in court to open their files when they don't want to.
From Bloomberg and No Smiling, this is Disclosure, a podcast about prying loose government secrets, the Freedom of Information Act, and the unexpected places that takes us. Now, before we get into the documents I recently pried loose and the rest of it, let's just recap what happened in Epstein land these last few weeks. So, Matt, Congress has now passed a bill which is called the Epstein Files Transparency Act that compels the Department of Justice to release their files on Jeffrey Epstein within 30 days. And President Trump has already signed that into law.
Yeah, I thought that the speculation about would Trump sign it or not, what's kind of funny is like he has the power himself to order the DOJ to release this. He doesn't need Congress in order to do that. It seems like it's taking an act of Congress to make them do it, but it always felt a little weird to me like he's signing a bill that's saying do what you ought to be doing.
Yeah, he could have released this at any time by just calling for the Justice Department to release it, which is exactly what he's done on other high-profile political matters earlier this year.
Donald Trump has just said that he is going to release the files around the death of President JFK tomorrow.
The Trump administration has gone public with more than 230,000 pages of records related to Dr. Martin Luther King Jr.'s assassination.
But what's interesting about this Epstein Transparency Act is what it allows the Justice Department to do. And it allows them to withhold certain information, particularly information within these files that could interfere with an ongoing law enforcement investigation, which in FOIA land, Matt, we like to refer to as the B7A.
Well, B7A. But the investigations that would be the predicate for that are what? Like the president had requested that Attorney General Pam Bondi open some investigations into Bill Clinton and some other Democrats or democratically inclined people that I believe the Truth Social post or whatever it was he posted it in, like specifically referred to Democrats. So just openly saying, I want you to investigate some Democrats about this. And not surprisingly, they're going to do that, it seems.
But that directive by Trump came 1 week prior to the passage of this bill. And what we don't know is, what does an investigation like that look like? What are they going to investigate? So Trump delivering this directive via Truth Social to Pam Bondi. So that means that, whatever Epstein files they may have that relate to these folks could arguably be withheld.
Yeah, I mean, I think that if they pull that, there's a lot of angry people already about all this. If they now pull the rug out again and say, hardly release anything because of these ongoing investigations, I don't know what's going to happen. I think there's going to be a lot of people that are going to be very upset about that.
So, Matt, this kind of gets at a fundamental question when we talk about the release of the Epstein files. When we say Epstein files, what are we actually talking about? This is a guy who was investigated by federal authorities starting around the mid-2000s. He signed a controversial plea deal and did some light prison time. And then he was arrested again in 2019 and accused of sex trafficking minors. And the idea is that those investigations threw up a lot of paperwork, presumably about interviews with victims, evidence, names of associates, and co-conspirators. So now, with the Epstein Files Transparency Act, there's going to be a lot of discussion of what gets released and what may get withheld. So the point of this, Matt, is that over the past year, I've been doing some document requests and following some other FOIA actions related to Epstein. And it all helps us get a handle on what's in the Epstein files and how the government has been handling them. And as you know, Matt, this has been building since Trump took office again in January. A lot of Trump supporters want this information out in the public, and Trump seemed to say during the campaign that he'd do that. But by the summer, that was looking less likely. So in July, the Justice Department and FBI released a joint statement that said, "It is the determination of the Department of Justice and the Federal Bureau of Investigation that no further disclosure would be appropriate or warranted."
Cue the outrage.
Yeah.
Right? I mean, there are a lot of people for whom this is the most important issue in American politics right now.
Well,
and you're just telling them, we changed our mind. There's nothing to see here. Move on.
Yeah. And this is the biggest political story of the year. So earlier this year, I filed a wide-ranging FOIA request for everything related to the processing of the Epstein files. I was really interested in how the records were processed, and I was even more interested within the context of how everything went down with the rollout of the Epstein files earlier this year. What I was hoping was to get a look at what was going on behind closed doors with the Epstein records, going back to the beginning of the new administration. And remember, Matt, just a few weeks after Trump was inaugurated, back in February, his brand new Attorney General, Pam Bondi, calls a group of right-wing influencers to the White House for an event because she has something to give them.
They walked out of the White House holding binders
and hands them binders.
Look at what we got today.
That say Epstein files, phase 1.
See that right there? That's the Epstein files.
Bondi has this kind of grand rollout. And so shortly thereafter, I mean, I want to say more, like almost immediately thereafter, the MAGA crowd goes nuts.
We frankly assumed this had at least some smoking guns. And now
it's a backlash.
That's not what's in this binder at all.
It's a backlash against Bondi. It's a backlash against the FBI.
It is the biggest disappointment, I think, that you'll find.
Because it turns out that these documents that were in the binder had been previously released in court cases and previously released by the FBI. So it ignited a firestorm.
This is kind of their own folks, right? They invite all these people that are kind of from the MAGA world. And do they think they're so stupid that they're not going to realize that these documents have already been out there? I mean, of course, folks are going to pick over every document. And like, was this just incompetence, or were they trying to pull a fast one? Or
well, I don't think they actually pulled a fast one. I just don't think they actually even looked at any of the files they were going to release. And so what happened after that is Bondi, who had been really embarrassed by this, fires off a letter.
In a letter to FBI Director Kash Patel, the AG demanding the release of the Bureau's full and complete Epstein files.
So she's throwing Kash Patel kind of under the bus here. Like, hey, what are you guys doing? This stuff has already been released.
Exactly. And she kind of blamed him for this. She says, I repeatedly questioned whether this was the full set of documents responsive to my request. And as she later explains on Fox News,
you're looking at these documents going, these aren't all the Epstein files.
Bondi's letter to Patel goes on to say that she knows there are more Epstein documents. She writes she has a source in the FBI field office in New York who told her so.
And so a source said, whoa, all this evidence is sitting in the Southern District of New York. Shock.
So she then tells Kash Patel that he has until February 28th to have the FBI deliver the full and complete Epstein files to her office.
And we got hopefully all of them Friday at 8 a.m., thousands of pages of documents.
And she goes on to say that she wants a full investigation as to why her order to the FBI originally wasn't followed.
Kash is going to get me and himself really a detailed report as to why all these documents and evidence had been withheld. And, we're going to go through it as fast as we can.
So, Matt, as you know, I actually asked for that detailed report, but they withheld it under a FOIA exemption. But as I reported earlier this year for Bloomberg, after all this happens, Kash Patel directs FBI agents from the New York field office, the Washington, D.C. field office, and personnel from the Records Information Dissemination Section, or RIDS. Those are the folks that process FOIA requests, and they were all holed up in a facility in Virginia, which is called the Central Records Complex. So what do I mean by processing? Well, when reviewing documents for eventual release, FOIA officers have to determine what can be released and what needs to be withheld using 9 exemptions under the FOIA. For example, they would withhold information based on someone's personal privacy or an ongoing investigation. And they begin processing these Epstein files, right? They're pulling all-nighters. They're, working 20-hour shifts just to process the Epstein files. So I was really interested in what was taking place behind the scenes. How these requests were processed, how much money they spent on FBI personnel.
So this is like a meta request, right? Like you're trying to get, it's a FOIA about a FOIA.
Yes.
So most agencies, as they're processing requests, they have some kind of a database that they keep track of all the steps. Received request, forwarded to analyst. Analyst ran search, 42,000 search results, narrowed with search terms, sent extension letter to requester. Like all those little details from a lot of agencies get tracked in some kind of a centralized database, and we usually refer to those as processing notes.
And that's informative because you sort of learn how these requests are processed and maybe even, learn about a record-keeping system. So I find that to be good information to get insight into how the agency is handling a FOIA request.
It kind of reminds me of like the updates or texts I get from United Airlines about what's going on with my checked bag. Like it'll say it's like
exactly
gone through screening. He's been loaded onto the plane. It's like it's on the cart,
Yeah.
But about way more detailed than that.
So I filed multiple FOIA requests over the summer, and then Bloomberg sued to compel the release of these records. And recently, the FBI released about 60 pages of emails and other documents I asked for related to the processing of the Epstein files.
So what do you got?
We have a bunch of emails, and they're kind of heavily redacted, but there is still a lot of info in here. And there's some real interesting takeaways here.
So let's go through the timeline here. So where does the story of the emails begin?
It begins in early March 2025, this year. There's an email here from the assistant director of the Information Management Division. It's dated March 10th. And it says that we are prepared to receive boxes tomorrow as New York agents are traveling to the Washington field office in the morning and will arrive to Winchester, that's the location of the Central Records Complex, where they will start photographing and we will start scanning and processing the physical files. Why do you think that they were photographing the files?
Well, that's interesting because like regular paper documents, you would think they would just scan them. You wouldn't need to photograph them. It suggests that potentially there's some things that aren't like documents. Like there could be physical evidence, right? There could be it could be anything. It could be a beer bottle. It could be a hairbrush, whatever.
Yeah.
They might be taking photos of those physical items that you can't scan, but we're just kind of guessing at that, at least for now.
Yeah, the email goes on to say, once I see the volume, I'll have a better estimate of processing times, although I suggest we do a rolling delivery to further demonstrate the FBI's commitment to delivery and transparency.
Yeah, interesting.
I mean, I think that's just funny because the FBI wants to demonstrate to the DOJ its commitment to transparency. It also says, by the way, in this email, and again, this is very early, is March 10th. So it says that, in a meeting with the criminal division in New York and Washington field offices, there were questions on the types of redactions the FBI should apply to these files. And then there's like just a really long redaction box.
So do we know anything from these emails about like what kinds of records the FBI was reviewing?
Oh, yeah. Yeah. I mean, we do. And it's kind of fascinating. So on one page, they're discussing FBI search warrant execution photos, FBI interview videos, Ghislaine Maxwell's prison security footage, time-lapsed video footage from an office. And in parentheses, it says no persons identified and no crimes observed. Street surveillance footage, aerial footage from FBI search warrant execution, police interview videos.
And you're just salivating, seeing it. You're like, oh man, I got to get this stuff.
And marketing videos.
Marketing videos?
Marketing videos. I mean, this is what's identified
what?
here.
Do we know?
I don't know.
Marketing videos.
It's
is
odd.
Is that Mr. Epstein's like come visit my island kind of marketing videos?
I don't know. I mean, I'm trying to figure out what marketing videos.
Yeah.
Oh, actually, the other thing that's here is they're discussing the prison video of Epstein before he was found dead and after he was found dead. And they discuss this video and 8 terabytes of data related to Epstein. So that is something that they were looking at as well.
So do these documents tell us anything about sort of the interactions between FBI and DOJ? Because this is a little bit of a tense. This is after the binders that really weren't anything new, right? So you got a little bit of an awkward relationship between the FBI and the DOJ. Are they communicating with each other at all here?
Great question. I mean, in these records, it does not appear that they're communicating. And in fact, there's one email that asks the question of, did you happen to send the results of the below review to DOJ at any point? And the response is, we definitely did not provide anything to DOJ, just to HQ headquarters. So it doesn't appear, and this just may be the fact that it's early, at least in these documents that the FBI released, that there's no communication with DOJ. But I also want to note that the FBI did withhold 160 pages in its entirety.
Okay, so not a ton about the DOJ-FBI relationship. So did we learn anything about, did they do this in phases? How did they structure the processing? Yeah, I see reference to phase 1 and phase 2.
Yeah, and so another document here, again, this is all in March. And I think what's noteworthy is the bulk of the work was taking place in March. Almost 1,000 FBI agents and personnel working during the month of March, just plowing through these records. There's an email on Sunday, March 23rd, 2025, 6:43 p.m. So you can already see that they're working on the weekends, right? Stand by. We have identified more files requiring phase 1 review. Please continue to refresh as files will be populated momentarily.
So do we know anything about what those phases mean?
No, unfortunately, the documents don't describe what those phases refer to, what it actually means.
And it looks like, so then upon completion of phase 2, the FBI is going to provide what they call see-through redaction files for DOJ review, which to me reads like FBI is doing the work of identifying what to redact, but they're giving it to DOJ so DOJ can see what the plan is. Is that how you read that?
That's exactly how I read that.
So, Jason, in March, they're doing all this processing. So what's the next kind of big thing that happens?
Well, the next big thing, at least according to these emails, is April 15th, tax day. An email goes out to FBI personnel that says, Kash Patel, quote, asked for status of all remaining Epstein-related reviews.
Makes sense.
Yeah, it makes sense, but there's no response to that email. But Patel is weighing in, right? The director of the FBI wants an update. Where are we at, with the Epstein files?
So when do they finish the review?
So it appears around May 2nd is when they kind of wrap things up. An FBI employee from the New York field office sends an email and attached a document titled Epstein Overview Final that summarized their work.
Well, what does it say?
Unfortunately, the FBI withheld the attachment.
No.
So they withheld those attachments, citing a number of different FOIA exemptions, such as attorney-client privilege, the deliberative process, and others.
So they're taunting you. They're taunting you by telling you what's there, but that you can't have it.
Can I tell you that as I'm reading these files and the subject lines refer to a PowerPoint or a document, I'm clicking. I'm clicking to see if there's any chance that it will magically open up.
Any luck?
It did not.
Bummer.
But importantly to me, this is the biggest standout on these records. So I asked how much money they spent on overtime, for example, for agents who are tasked with processing these records. So go to page 14 of the release.
Okay, so I'm looking at it's a chart, and then the division name column says Business Strategy and Analytics section, Counterintelligence Division, Counterterrorism Division, Criminal Investigative Division, Cyber Division, Directorate of Intelligence, EAD Information, and Technology Branch, Finance and Facilities Division, Human Resources Division. And then everything else is withheld for secret investigative techniques that, if released, would harm some future investigations.
So these are all the divisions that were involved in the review of the Epstein files. And how do we know that? Because the government released an index of what I requested, and the FBI document types is how they refer to it. And this is a resource planning office, that's an office within the FBI, report that documents the premium pay hours. And premium pay is overtime, nighttime differential hours, but more or less you could think of it as overtime. And it's the number of hours they recorded on this project, right? That's how they refer to it, the Epstein files. They refer to it as a special redaction project. And it's during the period of March 17th through March 22nd. So five or 6 days, right?
So they're withholding from you the total amount of pay across each of those.
Right.
But they are giving you the grand total of employees worked, premium pay hours total, and premium expenses. So they don't want to give you the breakdown, I guess, on the theory that somehow you could interfere with an investigation if they knew the specifics of how they staffed this up. But you at least know the totals.
Yeah, and those totals are kind of stunning. There were 934 employees that were involved in the processing and review of the Epstein files. 14,278 premium pay hours worked for a total of $851,344 that the FBI spent on premium pay during the March 17th and March 22nd review of these files. I mean, that's a lot of money. That seems like a ton of money to me for the FBI to spend on this. I mean, it wasn't a national emergency.
Well, it depends who you ask.
Yeah, true.
I mean, I think there's a sizable number of people, and I think they probably are skewing towards Trump supporters for whom, like, this is like
right.
So I'm looking at these numbers. I'm seeing 850,000, and that's just the overtime. So, it's possible that the overtime might only be like maybe half of the total cost. So you could easily be looking at like a couple $1 million total. The people are just working, which means they're not in the field investigating crimes. They're not in the office processing Jason's other FOIA requests. Like, it's sort of, they drop everything. This is what they're doing. And all this work gets done. And then Pam Bondi says there's nothing to see here. So nothing more is going to get released.
Right.
So it sounds like by May 2nd, they've pretty much wrapped up. And then in May, DOJ tells Trump that his name appears in the documents.
Yeah, that's the timing of it. And shortly thereafter, we have this unsigned memo saying that they collected 300 gigabytes of data, which is video, photographs, actual documents, and none of that, not a single document from that trove, can be released.
All right, well, the clock is ticking on the 30-day Epstein Transparency Act deadline. So I guess that work wasn't a waste, because it's going to probably come in pretty handy pretty quickly. It's a good thing that they already did all this back in the summer. Hopefully we're going to start seeing some more stuff.
I want to segue into what may be in the Epstein files. So earlier this year, I wrote about the Under the Radar Freedom of Information Act lawsuit that was filed back in, I think it was 2017. It's a nearly 9-year-old lawsuit that an attorney named Dan Novak filed on behalf of a reporter for what was Radar magazine at the time. This FOIA lawsuit that he filed, they were trying to get, at that time, all of the FBI's Epstein files. And in this lawsuit that had been going on now for nearly 9 years, the FBI released about 1,200 pages of documents. And these are the 1,200 pages, more or less, that have been screenshotted and shared on social media. And
is this the same stuff that was in the famous binders, the
yes.
Pam Bondi binders.
Exactly.
Where people who've been following this are like, what is this trash? We've already seen this.
Right. That's exactly right. So here's what happened. I dig into this case, and the FBI and the Justice Department essentially withheld the vast majority of records, at least 10,000 plus pages, because of an ongoing investigation. First, I should go back and say they denied the request before they moved to a lawsuit. They said to the reporter that you need to have a privacy waiver. You need to get Epstein to sign a privacy waiver before we turn anything over. Right?
And he's still alive then in 2017.
He's still alive. So they're going down the road of privacy waiver and a privacy exemption. They sue, right? And so you know how it is. I mean, we both know how it is. This is dragging out for a while.
But this is really long.
It's really long. The next thing you know, what happens is, I'm fast forwarding here, but Epstein gets arrested. And so now everything is being withheld under B7A, an ongoing law enforcement proceeding. So they're not getting anything. They're still arguing, going back and forth. So these folks just continuously hit roadblocks and roadblocks and roadblocks, and they're just unable to pry anything loose, but they're fighting. They're continuing to fight, right? I respect that.
It's nice to hear you not be mad at other people making FOIA requests and filing lawsuits.
Yeah. I mean, I like when other people file FOIA requests and lawsuits, as long as it's not for the same records I want.
Fair.
So I go into the docket of this FOIA lawsuit that Radar filed, trying to make these Epstein documents public. And on the docket is what's called a Vaughn Index. This specific document is very important as far as the Epstein files are concerned. But before we get into that, Matt, can you explain what a Vaughn Index is and the old FOIA lawsuit that gave rise to it?
Yes, Jason. It comes from a case called Vaughn versus Rosen in, I think, kind of like the 1970s. And what used to happen is agencies would withhold a bunch of stuff, and then they would just dump all the documents on the court in the lawsuit and be like, here you go, court, you tell us. Like, it's called in-camera review, like where the court in chambers, not in public, reviews these documents. So agencies were just kind of like dumping all this stuff. And eventually the courts are like, yeah, we're not cool with that. You've got to make an index of what all these documents are, describe them, at least in some level of generality, and identify the specific exemptions that you're claiming for each one of those. So that has become known as a Vaughn Index. So it's what it sounds like. It's a listing of all the documents. And sometimes the Vaughn Index can have a whole lot of interesting information, even if you can't get the documents.
Right. And we've received many Vaughn indices in our FOIA lawsuits.
Yeah, routinely.
Yeah, and they're extremely valuable just to even have a general overview of what the documents are that they're withholding. So
yeah, who's talking to who and when they're talking. Like, even if you don't know what they're saying, it can be really interesting. Like, oh, this person was involved. Or, that timing is really interesting as to when things were happening. And you can usually get those kinds of details.
Yeah, and I feel like they're newsworthy and you could write a story out of it.
You have written stories out of it.
Oh, yeah. I thought this one was really important, and it doesn't seem like anyone, even knew it was out there. It had some pretty damn good detail of what the documents are that the FBI had as it relates to Jeffrey Epstein. And obviously it's a sliver, but what would be in the Epstein files that are now supposed to be released. And the index says that the FBI processed but withheld information it obtained from confidential sources, letters addressed to then U.S. Attorney for the Southern District of Florida, Alex Acosta. He was the one that ultimately authorized that non-prosecution agreement with Jeffrey Epstein. Subpoenas to MySpace. Remember MySpace?
Oh, yeah.
That's specifically in this Vaughn Index. The handwritten notes of FBI agents, photographs, grand jury subpoenas.
This is all listed out in the Vaughn Index.
Yeah. And bank records, communications with foreign government agencies. I thought that was really, really interesting. Of course, there are 302s. Tell everyone what FBI 302 is.
FBI 302 is a summary of FBI interview with someone.
So in this Vaughn Index, so I counted, right? Because it describes the 302s here. And mind you, this index relates to the investigation that the Justice Department and FBI took on between 2006 and, when Epstein pleaded guilty in 2008. So I counted, and it reveals that the FBI conducted, at least according to this Vaughn Index, 55 interviews with witnesses, victims, potential investigative targets, and importantly, bank records. So I'm hoping we get a chance to see those. But here's what I really zeroed in on, is that it shows that some of the documents that were processed and withheld from Radar magazine are from 2011 and include dozens of photographs and agents' interview summaries of third parties and documents provided to the FBI by confidential sources.
That's 2011.
2011.
When
So
he
it
gets
looked like-
charged in 2019.
No, so we're only talking about the first investigation, right? 2006 through 2008. But it looks like the FBI never really closed it, is that it remained active because there's documents from 2011. So I just wanted to get your take on this because we've dealt with the FBI a lot. Do you think that people may have just been coming in and just collecting evidence and submitting it to the investigative file? Or could this be kind of evidence that the FBI still had an active investigation in 2011, 3 years after Epstein had pled guilty and at that point was already out of jail?
I mean, that's pretty hard to tell. I mean, wouldn't surprise me if victims and others continued to come to the FBI for good reason, dissatisfied with the minimal punishment that he had gotten to that point. And whether the FBI did anything with that, we really don't know, unless the Vaughn Index shows more activity at the time. But if all you have is a listing of a bunch of 302s of witness interviews, that it's hard to really say if they were actively investigating or just sort of passively receiving information.
Right. Yeah. And based on my reporting, the FBI doesn't typically close investigations. They're sort of keeping it open. That's just
that would
my
make
experience,
sense,
right?
These circumstances, that would make perfect sense.
Yeah, and I didn't see anything in the Vaughn Index that indicated there was a case closing memorandum, an actual document there. So I dug into this over the summer. This was during that time where everyone was just kind of clamoring these Epstein files because this was immediately after the Justice Department FBI said, we're not going to release anything. So now Radar Magazine is 8 years into its lawsuit to get the Epstein records. At this point, they know the FBI has reviewed the records, and the FBI and the DOJ say they're not going to release more records. So the Radar lawsuit has some new urgency. It looks like they have a pretty clear path to say, you have to release the records. But then Ghislaine Maxwell appeals her case.
Ghislaine Maxwell, we now see that her attorney renewing his request for the Supreme Court to overturn her conviction.
So there's Radar Magazine again with oh man, this is still an ongoing law enforcement proceeding. So they still can't get anything. And now that the Supreme Court has rejected Maxwell's petition, Dan Novak and Radar Magazine has now appealed to the Second Circuit. And so there's an oral argument set for January 28th. So I still think, Matt, I just want to see what you think. This FOIA case is the best chance of getting anything from the Epstein files versus Congress's Epstein Files Transparency Act.
Yeah, I think for a couple reasons. I mean, first, I think that the Vaughn Index is going to be a check on whatever gets released. If you see that there's things on the Vaughn Index that don't get released, then there's some splaining to do, right? But the lawsuit also has teeth. The Epstein Act has no teeth. If DOJ decides to violate it, there's no private cause of action. You and I can't file a lawsuit over that. You need to have a FOIA case. And so that case could end up being the legal vehicle by which the Epstein Act release actually gets challenged. I mean, there's so many twists and turns to this, and people get charged and people die, and it impacts what can be withheld or not, and it's up and down on appeal and all this stuff going on. And so that's got to be frustrating to go on for that long. But now it almost turns out, it does turn out that it's great.
Right, exactly.
That there is a live active FOIA case right now that can be the vehicle by which, if the DOJ is trying to get away with withholding things, that's how they can be held accountable for that, and how courts can guarantee and the public can guarantee that they're actually releasing everything that they're supposed to release. Because the track record ain't that great so far.
That's kind of how I felt as well. It's this is really the best course of action for the public to kind of see what's going on. It will be interesting if the government argues that Well, Donald Trump has now called for an investigation into Democrats, so we're going to keep withholding it because of an ongoing investigation.
Yeah, and that's, I mean, it depends on how bold they are on trying to make those withholdings. And I think they're, given the memo from July, if I was representing you right now in a case on this and they said, oh, well, there's these investigations, I think you can make the argument that's a sham. They already said that there isn't any predicate to investigate anybody else.
That's right. And DOJ and FBI said in their joint statement from July, quote, there was also no credible evidence found that Epstein blackmailed prominent individuals as part of his actions. We did not uncover evidence that could predicate an investigation against uncharged third parties.
So the fact that they're now claiming they're going to do investigation, it's not a real investigation. So it doesn't count for FOIA purposes. That's how I would argue it. I don't know. I think there's a fair chance of succeeding on that, but no guarantees.
I mean, the timing couldn't be better for Radar Magazine, right? They filed this back in 2017. So they're coming up on 9 years. That's a really long time. But man, the fact that they're still fighting at this very moment where the Epstein files have become the biggest political story of the year, that's wild. So as I mentioned, there's a hearing in the Second Circuit, an oral argument that's scheduled for January 28th.
And let me just explain. So that's the Court of Appeals that covers the trial courts that are in New York and some other adjacent states. The country is divided into a series of different regional courts of appeal. So it's above the trial court and it's before the Supreme Court.
An oral argument? Explain it, Matt.
Oral argument is the parties have filed their briefs and then they come in and they answer the judge's questions and they make their arguments. And those are open to the public. I got a feeling that's going to be a packed courtroom with overflow rooms.
Yeah. And it's interesting because it's coming, it's happening right after kind of the deadline for when the Justice Department is supposed to turn over everything in the Epstein files. So I just want to ask you this question, Matt. So let's say the Justice Department does turn over everything in the Epstein files to Congress as they are required to do under the law. Would those same records be responsive to this FOIA lawsuit?
Well, the scope of that request was like all records from the FBI's investigation, right? All documents relating to the FBI's investigation and prosecution of Jeffrey Epstein. Now, they made the request in 2017.
Yeah.
There could be a dispute about whether documents after that date get included or not. I mean, it certainly would be cut off at whatever point the FBI searched, then that would typically be the cutoff. Sometimes it's the date of the request. Sometimes it's whenever they do the search. So there could be some later stuff like, because when did he die? 2019?
2019.
Yeah, so there's a couple years there.
2019.
There may be a little bit of a delta.
Well, I guess we'll see what happens, whether or not the Justice Department releases the Epstein files to Congress. And I guess we'll see what happens in late January in the Radar FOIA lawsuit for the FBI's files on Epstein. From Bloomberg and No Smiling, this is Disclosure. The show is hosted by Matt Topic and me, Jason Leopold. It's produced by Heather Schroering and Sean Cannon for No Smiling. Our editor for Bloomberg is Jeff Grocott. Our executive producers for Bloomberg are Sage Bauman and me, Jason Leopold. And our executive producers for No Smiling are Sean Cannon, Heather Schroering, and Matt Topic. The Disclosure theme song is by Nick, with additional music by Nick and Epidemic Sound. Sound design and mixing is by Sean Cannon. For more transparency news and important document dumps, you can subscribe to my weekly FOIA Files newsletter at bloomberg.com/FOIA Files. That's FOIA Files. To get every episode early on Apple Podcasts, become a Bloomberg.com subscriber today. Check out our special intro offer right now at Bloomberg.com/podcast offer, or click the link in the show notes. You'll also unlock deep reporting, data, and analysis from reporters around the world. We'll see you again next Tuesday.
Okay. Opening the link.
ओके गाइस, क्रूड ऑयल में प्रॉफिट बुक कर लेना, अब इन्वेंट्री आने वाली है। इन्वेंट्री से पहले रिस्क नहीं लेते। यहाँ पर एक बाइंग एक्सपेक्टेड है क्रूड में। लेट्स सी इन्वेंट्री क्या आती है। यूएस मार्केट तो ओपन हो गया है। नेचुरल गैस की इन्वेंट्री है। ठीक है, क्रूड ऑयल में सेलिंग वाले प्रॉफिट बुक कर सकते हैं। टारगेट डन। रेंज स्टार्ट हो गई है, सपोर्ट की एक्सपेक्टेड है थोड़ी बाइंग। बाकी नेचुरल गैस भी स्लोली स्टडी आ रहा है, मुझे लगता है थोड़ा बहुत रुकना चाहिए नीचे। वापस ऊपर जाता है तो वापस सेल कर सकते हैं वैसे नेचुरल गैस में फिर से। नेचुरल गैस में सेलिंग तो आई है, बट वॉल्यूम वॉल्यूम इतना नहीं है जितना नॉर्मली सेलिंग में होना चाहिए ना। इसका मतलब सेलिंग का प्रेशर ऊपर से जनरेट जरूर हुआ है अपर लेवल पे, बट लोअर लेवल पे थोड़ा बहुत रुक सकता है वापस प्राइस एक बार फिर से पुल बैक देने के लिए। रिजेक्शन अच्छा है, बट 4 आवर की कैंडल भी देखोगे तो अभी भी क्लोजिंग में टाइम है आधा घंटा। इन्वेंट्री भी आने वाली है नेचुरल गैस की 9 बजे, तो देखते हैं अब और कितना मूव करता है बिफोर इन्वेंट्री। वैसे अगर ये नीचे आता है नेचुरल गैस तो नीचे लेवल अच्छा है 412 414 ये नीचे this level is very great for buying again good support area because this is a very good support zone बट काफ़ी दूर का लेवल है ट्रेंड लाइन ब्रेक जरूर हुई है लेट्स सी कंटिन्यू फॉल करता है तो अब ठीक है ये मुझे लग रहा है अभी कल तक यही लेवल रहेंगे यहाँ पर थोड़ा बहुत रुक सकता है बट स्ट्रॉन्ग सपोर्ट नीचे ही है दिस वन जहाँ तक का टारगेट लगा रखा है आज का हाई अब तो रेजिस्टेंस ही बन गया है दैट इज वैसे भी 4 आवर में रेजिस्टेंस था 15 मिनट में नाउ वी कैन कंसीडर डे हाई इज अगेन स्ट्रॉन्ग रेजिस्टेंस जोन तो वापस अगर डे हाई के अराउंड आता है वापस सेल कर सकते हैं दैट इज अ स्ट्रॉन्ग रेजिस्टेंस नाउ बाकी मुझे कोई सपोर्ट तो दिख नहीं रहा है बीच में इसमें है 412 414 के आसपास ही है स्ट्रॉन्ग सपोर्ट नाउ बाकी थोड़ा बहुत यहाँ पर रुकेगा इस पर्टिकुलर जोन पे तो ध्यान रखना यहाँ पर चाहो तो बुक भी कर सकते हो प्रॉफिट ट्रेल कर रहे हो तो ट्रेलिंग भी किया जा सकता है गैस में भी सेलिंग में थोड़ा बहुत बुक करना चाहेंगे तो इस एरिया के आसपास बुक कर लेना रुकेगा थोड़ा बहुत इन्वेंट्री से पहले बाकी इन्वेंट्री देखते हैं क्या आती है फोरकास्ट देखोगे लास्ट टाइम -11 बुलियन थी इस बार -18 लास्ट टाइम से और कम एक्सपेक्ट कर रहे हैं तो फोरकास्ट के अकॉर्डिंग कम आता है, तो डेटा तो बुलिस है, फोरकास्ट बुलिस है। एग्जैक्ट डेटा देखते हैं कितना आता है। इस बार अगर क्रूड ऑयल लोअर एंड से वापस ऊपर आता है तो फिर ये ऊपर के लेवल हैं दोनों ही, वापस वहाँ से सेलिंग का प्लान रखेंगे अगर वापस आ जाता है टाइमली। दैट इज स्टिल अ गुड रेजिस्टेंस जोन।
pre-planned, or how did it go about? How did it happen? And what did you discuss in the car?
Well, we were talking about just the current agenda. It was not pre-planned. We just went outside into the street, and my car was there, and I said,
We're at Kremlin today, and you're about to witness history, a very historic moment. It is said that when two old friends meet, they have their private jokes. They have a lot of banter, they have a lot of fun, and they have a bonhomie or camaraderie. But the others in the room might feel a little uncomfortable. And why do I say this? I say this because as the president of the Russian Federation, Vladimir Putin, meets Prime Minister Narendra Modi in New Delhi, the world will be watching very, very closely. Vladimir Putin is undoubtedly one of the most influential politicians of the world whose decisions don't just affect Russia, but numerous nations across the world. He's a very compelling and enigmatic figure on the world stage. It just doesn't get more exciting than this.
Well, that's right, Anjana. Hello and welcome. I'm Geeta Mohan. We have with us a man who is known to be one of the world's longest serving leaders. He's seen it all through wars and economic recessions, from disintegration of countries to a changed world order, from Boris Yeltsin to Donald Trump, from Atal Bihari Vajpayee to Manmohan Singh to Narendra Modi. He's seen the world change right in front of him, and he's taken Russia through very turbulent times and yet has cemented his position as a force to reckon with. Thank you so much, President, for doing this with us. You're in conversation with India Today and Aaj Tak. That's the President of the Russian Federation for you.
Thank you so much, sir, for joining us on our network. How are you doing?
Надеюсь, что и вам.
मैं उम्मीद करता हूं कि आपको रूस, मॉस्को और क्रेमलिन, जहां हम काम करते हैं, आकर अच्छा लगा होगा। आप देख सकते हैं कि यहाँ पर सब कुछ ठीक ठाक चल रहा है। कुल मिलाकर हमारी आर्थिक स्थिति बेहतर है और मैं इस बात से सबसे ज़्यादा खुश हूँ कि मेरी मुलाकात मेरे दोस्त प्रधानमंत्री मोदी से होने वाली है। भारत में इस मुलाकात को लेकर हम बहुत पहले ही सहमति जता चुके थे। हमारे बीच चर्चा करने को बहुत कुछ है क्योंकि भारत के साथ हमारे साझा सहयोग का विस्तार बहुत बड़ा है। और मैं यहाँ हमारे साथ हमारे साझा सहयोग का विस्तार बहुत बड़ा है और मैं यहाँ हमारे
конечно, не ауру. Это, как мы видим, внедорожник. Они и в автомобиле тоже друг друга еще раз поприветствовали. Ну и сейчас вместе направятся на неформальный ужин. Впереди огромная, насыщенная программа визита, в котором множество самых разных пунктов, множество переговоров, множество соглашений, за которыми, конечно, будет следить весь мир, и мы следим вместе с вами. Уникальные кадры, конечно, Путин и Моди вместе в одном
Hello and welcome. This is the Michelle Hussein Show. I'm Michelle Hussein. I speak with people like Elon Musk.
I think I've done enough.
And Shonda Rhimes.
Oh, that's so cute.
This will be a place where every weekend
LGT's investment solutions allow you to look to the future with confidence.
I don't know how it works.
Their financial future.
Of following that American dream and, raising our kids in our own home.
The majority of people in the United States build their wealth and their financial future with the equity of their home.
A consumer horror story that's becoming all too real for thousands of homeowners.
And these zombie mortgages are robbing people of the equity.
Mortgages that they thought were paid off a long time ago are actually coming back to haunt them, putting some at risk of ending up on the street.
We know it's tens, if not hundreds of thousands of these loans are still out there on the books. This is a hugely profitable business.
We came to this story in part because we got records on one particular private equity firm. We called them the foreclosure files.
And we decided that we had a unique chance to really get inside this business and figure out how it operated.
We can see how much money people are making.
A lot of times they're able to get 10, 20, even 30 or 40 times their initial investment.
The personal wealth of the individuals in some of these firms has ballooned.
We thought it was an American dream, but it's become quite the American nightmare.
Studios, podcasts, radio, news.
It's a nightmare scenario. A debt collector comes calling, saying an old loan you thought you could stop paying off has suddenly come due, with interest.
At the risk of being a super annoying editor, we want to get this out so that we have a runway to do
follow
more.
The story.
Yeah, owning a home is not as necessarily solid as
right.
We all kind of assume. And that plays into the story as well, because that's how these zombie mortgages ended up coming back, right?
I'm Noah Buhire. I'm an investigative data journalist with Bloomberg News, and I've been working for the past couple of months on a story about zombie mortgages. So a zombie mortgage is a loan that was taken out before 2008, typically, that homeowners use to buy their home or pay for home repairs. And then often a decade or so later, after not hearing about that loan for years, a debt collection firm buys it and asks the homeowner to pay back not just the money they took out 10, 15 years earlier, but all the back interest. A key thing in a lot of these cases is if a borrower wasn't getting statements for many years, they may not owe back interest for that time period.
We got kind of a unique perspective into a company that purchases zombie mortgages, ARC-PE. After reviewing almost 1 million documents that we got from Distributed Denial Secrets, they're a journalistic nonprofit that receives and archives hacked and leaked materials in the public interest. We spent months cross-checking the files with public ownership, transaction, loan, and court records, all with the help of a forensic accountant and attorneys who've worked on dozens of zombie cases. It's being portrayed as sort of a passive business of just a typical real estate investment, but we can see how active these sort of debt collectors and debt buyers are and who they're targeting and why.
We're working off of this trove of exclusive stuff that just will feel really fresh.
One of the, I think, the most important things for us right now is what is crucial to the core of what we're trying to do and what is gravy?
If we start drafting, I think it's obvious like what we're missing, right? In terms of anecdotes, is we don't have someone who has like lost their home.
Oh. Wait, Milo. Mimi. Just 30 seconds, 30 seconds. Shh. Toledo is a very small community, very tight-knit. A lot of us look out for each other. All right, guys, come on, let's go. Oh, I'm hungry. Well, that's why the breakfast is ready. We ended up having a child, and we realized that, maybe it's time to get into a house so she could have a backyard to run in. We weren't quite there financially to buy a house, but for some reason we got approved, and the 80-20 loan was what was proposed to us to make it look like we could afford the home.
So at the heart of this phenomena is the 80-20 loan, where borrowers would take out two loans. The first would cover about 80% of the mortgage or down payment. The 20% would cover the remainder of the cost for buying these homes.
Some academic work has basically said that a quarter of all mortgages originated in the US in 2006 had one of these, they call them piggyback arrangements, where people basically took out two home loans when they bought a property. And it's those second loans that are really coming back now to haunt people.
Dow plunged to a record low yesterday.
The housing crisis has spread nationwide.
During the 2008 financial crisis, it was just sort of chaos. There were people filing for bankruptcy.
Home prices fell in all 20 cities of the housing index.
Home prices have dropped to a point where the homeowner owes more on both loans than the house is actually worth.
For the financial security of every American, Congress must act.
Some of these firms that lent this money, they went out of business. You had consolidation in the banking industry. And the net effect of that is that a lot of these old, smaller loans just fell through the cracks.
In 2012, we created a new bottom.
How much more down are house prices going to go?
It actually took until about 2012 for home prices to bottom out nationally. And then it took another 4 years or so until 2016 for them to reach the levels that they were at during their pre-crisis peak.
The people who have bought these second loans for pennies on the dollar can see that there is now money to be made in these homes because they've increased in value so much. Around 2020, during COVID, when home prices really shot up, we see this phenomenon spread across the country. And now it's not just in large urban core centers where housing prices have shot up. It's every community in the country that these loans are now worth going after.
I missed you guys. We got some sun. We got some sun playing out in the lake this weekend.
Vienne is an interesting person who we met through the course of our reporting. And I think her case actually really illustrates that asymmetry of knowledge. So in 2018, ARC bought her loan. And soon thereafter, she got a demand for repayment. The following year, a foreclosure action was filed against her in the local county court in Toledo. By the time this process has started to play out, it's early 2020. The whole world has been plunged into the COVID-19 pandemic. And she's presented with a choice. Do I accept this loan modification that's going to lock me in to all of this back interest and fees, or do I lose the roof over my head?
It was surprising to me because we were current on the first loan, but I don't know if it was a scare tactic to try and get locked into some modification. The amount had already doubled, so it was suspicious to me. I just kind of got really nervous about not paying and not having a home.
One of the things that's so interesting about this trove of documents that we were able to review is we could really understand how one of these businesses organizes itself. So this starts from the process of acquiring these loans, often from banks and other financial firms, to doing the underwriting and due diligence to actually figure out which ones were going to be the best to collect on, to actually having a team of asset managers who were trying to figure out how best they were going to be able to collect on these debts.
It is so explicit that we could see in the spreadsheets that there is, once these pools of loans or loans become profitable, there's even a column that says like in the money, and it was like a yes or no. These are properties that appear in the foreclosure files, right? Yeah. But have not been assigned in the data at this point to ARC, right?
So it's...
Jesus, those are all their loans?
They're all in their books somewhere.
Those are...
That's just 4 states.
No,
that's the data set that we've been using to door knock.
Yeah.
Because then it like focuses you. We've got this huge pool of 10,000 loans. We've knocked on doors where we know it's been assigned to ARC, but the borrower has no idea.
And you ask them, like, have you heard of this company? And they're like, I have no idea. But then in 2 weeks, they might hear, right? They might get a letter. So we've knocked on, between Noah and I, probably like hundreds of doors. You drive around these communities and you can see how widespread it is. This is the financialization of housing. It's really just a number on a spreadsheet. And if you've been paying your first mortgage and they can see what your home's worth, that's a prime candidate for them to sort of swoop in and start foreclosure proceedings. In most cases, they want to get people on a payment plan because they're paying pennies on the dollar on the debt. And then if they can get you on a payment plan, that often includes a down payment, they get money immediately, and then they're getting monthly payments. And then once it's sort of viewed as like good debt, they can sell that again to somebody else. Also, once they get people on a payment plan, the legal rights of the homeowner really start to wash away because like you agree that you owe this money. And so you're now on a plan for debt that you probably didn't owe.
You don't want to think that you're going to be out on the streets with your kids. Our dream was to have a house, and we wanted to maintain the house for our children. So we kind of just signed it away and agreed to the modifications. When you're desperate, that's when, people try to take advantage of you financially.
Why should someone lose their home and all their equity because some Wall Street bro wants to make more money off somebody? Like, making a profit of a 10% return on the investment is just not enough. They need 1,000% returns on their investment. Hi, Miss Holly. How are you? It's Christy Kelly. Most people aren't going to reach out to a lawyer because if they have money to pay a lawyer, they want to pay their mortgage company because they don't want to lose their home. None of my clients have ever said, I don't owe anything. I don't think I should have a mortgage. They all just said, I don't think I owe that much money. And you know what? They're right, because I've actually litigated these cases. I've seen the documents. And part of the problem is consumers dispute that they even owe the debt at all because they received a 1099-C and they thought the debt was canceled. And so why are they now being told they owe not just what they borrowed, but sometimes 2 or 3 times the amount they borrowed?
At the end of 2005, 2006, we were able to finally purchase a home.
It was in a perfect location. It was like 2 minutes from my parents' house from where I grew up. So that was super nice. It just was like the perfect little find for us.
Well, as the economy tanked, for me, business goes down. I'm in the automotive industry, so, you know, people hurt. They're trying to ride their cars out longer and not do the same amount of repairs.
The paycheck's not as
solid.
Well,
we ultimately looked into what our options were.
Yeah, after we filed bankruptcy, we received the 1099, the cancellation of debt. We filed it with our taxes, and we never heard anything further.
The Amables have a really interesting case because their second loan, which they had taken out in 2006 for $98,000, they have an IRS document that says the debt was canceled. And for normal people, I think most of us would see a document that says cancellation of debt and be like, I don't know this anymore.
And you said your first name is Noah?
Yes. With every borrower story that we look in, it's not just the stuff we found in this cache of documents, but there's lots, oftentimes, of public records behind that. And you want to go look at all of those. And you want to look at old bankruptcy filings. You want to look at really anything you can to make sure the stories add up.
Ticket number B244. Please proceed to Station 8.
I hope these aren't sequential.
Hello.
I'm good.
Okay, so this is everything.
Great.
All right, your receipt's on top.
Amazing. Thank you so much. You too.
Please proceed to Station 6.
These are just some docs so I can help fill in the timeline of what happened to the Amables, going all the way back to when they bought their house in 2005. And the key one here is from 2017. It shows when ARC purchased the loan and recorded that with the county. And this is the loan that's at the center of the dispute. I wanted to know, what was the situation with their first mortgage? Were there other things on title that were going to complicate or change the narrative of their story that I wanted more clarification on? Yeah. Thank you so much. Sounds good. Thanks. Bye. Hey, Jason. How are you? Yeah, I'm here. Can you hear me? Good. Sorry, I was just on with that attorney. We have to be confident that they're credible, right? And I don't want to write about a case if there are doubts about that. So we talked through different components of their case, and he said it's a real crapshoot. He's like, you've got to get like proof positive that like something in the servicing notes that says it was generated but not sent. This is not something we want to find. It is generally not allowed to charge interest on a loan if you're not sending borrowers regular statements. But actually proving that turns out to be a big hurdle for a lot of folks. There's a question of how do you prove in court that you weren't getting statements? So you end up in these situations where it's the borrower's word against the creditors. And if you can imagine just how most of us keep our records, you're asking people to come up with documents from 15 years ago.
What we want to try to do here is to figure out if these statements weren't being sent. So the idea here is to see if we can find a pattern inside the documents. These are the file names.
And they're all the same.
They don't have the other dates. And it's missing the other documentation, the representation of a printed document. So now the idea is to take this pattern that we found and see if we can apply it to all 200 loan files.
Right. What we're trying to track down, right, is whether the statement that was sent to the borrower was actually legitimate at the time, right? Like, we don't have evidence necessarily that they were or were not sent. That's one of the problems we're dealing with, because it's like, it could be created at any moment.
Yeah.
But we don't have the mailing records.
So in December 2020, the Amables get a notice of default, which is the first step in California, usually in a foreclosure. And that notice of default said that they owed around $200,000.
ARC had acquired the loan for a little over $2,000. So if they're successfully foreclosing on their Amables for $200,000, their return on that investment would exceed 3,000%.
Oh, the bugs are coming out.
Yeah.
So.
I left messages several days in a row, hoping somebody would get back to me. I was trying to reach out to ARC, and she took the message and said, you know, somebody would contact me. Well, nobody really contacted me, but I did ultimately receive a letter from them with some documentation, which I still didn't quite understand because I still felt like this debt is gone. I don't understand.
It's been canceled. How
It's
can
been
they
canceled. I don't understand.
pursue this the way they're doing it?
In the same spirit that we want to turn over every page, we want to read everything we possibly can, we certainly want to understand ARC's perspective on all of this. I'm just curious how, like, you and ARC and your staff think about the morals and ethics of this business.
We buy debt for a living, right? So, I mean, is that immoral? No, not in any way, shape, or form. By the way, every bank would be out of business if we didn't do what we did. We try to work with the borrowers as much as we can. We're not, kind of pay to take your home away kind of lenders. A majority of our loans we've done modifications on. A home from both the borrower's point of view and the investor's point of view as a lender is an investment to make a return on their money, not take a loss, right? So you knew what you signed up for, is my point.
What about the statements, the collectability of back interest?
You don't have to be sending regular statements, but you have to show that there is litigation, but you don't have to send regular statements.
So your position is that that's not a requirement?
Honestly, you really need to speak to the servicers about that, not me. But servicers kind of handled it, not me.
David Gordon, one of the managing partners of ARC, got on the phone with us, and he raised to us that ARC, like many of the debt buyers out there, relied on servicers to actually interface with borrowers. And it was really their responsibility to make sure they were following federal and state laws.
But we found evidence in the internal documents of them going around their servicers to directly contact borrowers. We know that they were often stating the price of what they wanted for these loans. So the idea that they were completely separated doesn't hold up with the internal documents.
What we actually have here are some behind-the-scenes documents that show us how the Amables were pleading with ARC and their representatives. It's a contemporaneous account of the information that was filtering back to this investment firm. ARC had hired a servicing firm to try and collect on this debt. The servicing firm, their own employees were like, they have these 1099-Cs canceling the debt. So even people in the industry were confused about the nature of this. And then on top of that, the documents, I think, make a pretty compelling case that they didn't get statements for years.
Okay, we're good to go.
Do we have any updates on getting inside ARC and any other companies that work with ARC or talking to folks?
I've gotten a hold of 4 former employees. They knew very much that a lot of these loan files were just incomplete, inconclusive. They didn't pump the brakes necessarily and say, well, because we don't have definitive proof that these people were getting statements regularly, we're not going to charge for this whole period. That wasn't the move. The move was, calculate what we think they owe, see if we can get away with it. They'd contact a borrower, and the borrower would say, what are you talking about? This debt was canceled. And I asked this person, well, what did you guys do in that situation? And did you back down? And he was like, no, ARC never backs down.
Come on, criminals. Well, ultimately, without working with us or giving us a chance in any way, they auctioned the second mortgage. A gentleman ended up purchasing it and showing up on our doorstep on a Saturday to tell us that he had purchased our home and that we needed to vacate. So that's when we ended up here.
I'm just not looking back. I'm trying to just project forward. It's not something we've talked about in a while. At some point, we just we fought and we fought and we fought. And we just kind of threw up our hands.
What do you do when you can't afford to fight it?
Yeah. It's kind of like what they bank on, isn't it? It's what it feels like. People just struggling to make their dreams come true.
The CFPB has returned over $21 billion to more than 205 million Americans who were cheated by big banks and giant corporations. That is
So the CFPB is the Consumer Financial Protection Bureau. It was established in 2010 in response to the lending practices that precipitated the 2008 financial crisis.
When this financial cop can't do its job, there is no one else in the federal government to pick up the slack.
We know in talking to people at the CFPB that this was an active issue for them and that there would be enforcement actions if it weren't for the fact that the Bureau's basically been silenced so far under the Trump administration. The private equity firm we're interested in was not on their radar. There's this incredible irony with the CFPB. They were created out of the financial crisis specifically to deal with this type of issue. Like, they've taken on payday lenders and other things, but it was really the financial crisis and housing and banks. Right at this moment as we're working on this story, we don't know what's gonna happen, but it seems at best the Bureau is gonna be a shell of what it was.
I just feel like there's a real risk of a boomerang here, but this is a primary business for some of these mortgage servicing companies. So you can see, you could imagine that now that the CFPB has retreated, has basically been gutted. Servicers saying, we'll take that business again.
Yeah, it's incredibly profitable for them.
I mean, the fact that these zombie cases, these foreclosures are still going on means that somebody out there is still willing to pursue these claims. And this gets back to the whole idea of information asymmetry. Like, a lot of borrowers don't know the law in this area.
In Virginia, our legislature really was one of the first in the country to recognize this problem.
Last bill of the year. This one's got a little bit of heat on it.
All this requires is that if you're going to foreclose on somebody's mortgage and take their house, you've got to provide some evidence you've actually been trying to collect on the debt and that you've been sending them bills, they haven't been paying them, there have been interest and fees.
And so what that bill did was it required creditors to sign under penalty of perjury that every month they're assessing interest, a monthly statement or communication was sent to these consumers.
Christy Kelly, you may unmute.
This does not affect reputable companies and banks. It's essentially preventing debt buyers who can foreclose without any oversight or any court intervention. Debt buyers have far more restrictions in Virginia now to sue on a credit card debt than they do to foreclose on someone's home.
You want to go for it?
There were pretty well practiced attorneys who didn't understand exactly how the process worked. We took a lot to explain it to them.
It's a practice that's sort of outrageous, so I think they were a little incredulous about it, right?
These businesses, it's just like maybe one foreclosure pays for itself for all of the things they're doing. But for that one family, that one foreclosure, they might have lost everything.
Yeah, what I didn't understand is why the banks that don't engage in the process still oppose the bill. And the only thought I had about that is that they wanted to continue to try to monetize their bad debt in a more lucrative way.
And we did hear some things that said basically that the market for these is going to evaporate.
Once this bill was passed, there were no second mortgage foreclosures for like a year because no one knew how to follow this law, which it only says you just follow federal law. Just follow the law. It is a complete whack-a-mole problem to try to do it on a state-by-state basis.
Lots of borrowers have been facing this, are going to continue facing this. So are we going to end up with a situation where someone in Wisconsin gets justice, but someone in Mississippi doesn't? That's a big question mark here.
For most people, the equity in their home is how they save or transfer their wealth to their next generation, or it's the nest egg that someone has that they're counting on for retirement. And to lose every cent of that, it's so contrary to the American dream.
How long do you think before it'll be ready?
Give me like
a month.
That's what I'm saying. Like, give me the month of August to like package things up and move it to Cleveland. So, with trying to maintain our income, and I was working 3 jobs at the time, trying to, make sure the kids are taken care of. It became a little bit too much. There was just so much that was not the same anymore. My ex and I ended up separating. Sorry. Sorry. But, at this time, foreclosure is actually kind of a relief because it's allowing me to move on.
When you look at individual borrowers, it's a stark contrast to see how much of this is a transfer of wealth from middle and lower income Americans to a group of debt buyers or investors. You're seeing people lose their homes or being put on payment plans that are putting them into bankruptcy. Meanwhile, we see the debt buyers' wealth increase dramatically during this time period.
What our reporting really shows is that the tangible harm is happening. And this is an area where there's effectively no cop on the beat right now.
And the question is anyone going to pick up that work, or are these homeowners just going to be left, to defend themselves?
Context you need.
Find us on Apple, Spotify, or anywhere you listen.
News when you want it with Bloomberg News Now. I'm Nathan Hager. It could be a major break in a case that has spawned conspiracy theories for nearly 5 years. Sources tell Bloomberg News the FBI has arrested a man over the pipe bombs that were left outside the Republican and Democratic National Committee headquarters the night before the Capitol Hill riot on January 6, 2021. This would be the first time investigators have settled on a suspect in this long-running case. They released new information on it last January, hoping for new leads. Today, the Navy admiral who reportedly ordered a second strike on survivors aboard a suspected Caribbean drug boat is due on Capitol Hill for a classified briefing with national security lawmakers. Admiral Mitch Bradley's order has put pressure on Defense Secretary Pete Hegseth. That's after the Washington Post reported he directed everyone on board that vessel killed. White House envoy Steve Witkoff and President Trump's son-in-law Jared Kushner are set to meet today with a Ukrainian negotiator in Miami. That's after talks with Russian President Vladimir Putin in Moscow this week that President Trump called reasonably good. We get more from Bloomberg's Greg Sullivan.
He did seem to moderate his tone a bit more and express a little less confidence that a deal is at hand. That's hardly surprising given that there have been several rounds of talks recently, all of which have ended inconclusively. Moscow throughout this process has stuck to hardline demands that Kyiv will not accept and has shown little sign of backing away from those demands, begging the question, how do the two sides reach a consensus?
That's Bloomberg's Greg Sullivan reporting. As for President Putin, he is in New Delhi today for his first state visit to India since the Ukraine invasion. Prime Minister Narendra Modi greeted Putin on the tarmac. They're scheduled for a private dinner later tonight. Modi is seeking to reassert his autonomy after President Trump slapped India's goods with 50% tariffs over its close ties to Russia. Getting to markets now, Meta Platforms may be looking to pivot again. Bloomberg News has learned CEO Mark Zuckerberg is considering budget cuts as high as 30% in the unit that he changed Facebook's name for, and that could mean job cuts as soon as next month. Bloomberg tech host Ed Ludlow has more.
I remember a time where the widening losses at Facebook Reality Labs unit was the main driver of the stock in the news cycle. And since 2021, those losses have totaled $70 billion. So that's where we understand those cuts will be felt deepest, 30% overall in the unit, far beyond what the rest of the company will experience. And it is part of, as we understand it, this budget planning for 2026, where the priority is now AI.
That's Bloomberg's Ed Ludlow reporting. The news follows word from the European Union that it's launched a full-scale antitrust investigation into AI features on Meta's WhatsApp. Meta shares are soaring right now, though. They are up nearly 4%. The broader market is wavering, with the latest read on the labor market not doing much to shake bets that the Federal Reserve will cut interest rates next week. Weekly jobless claims fell to a more than 3-year low last week, but Bloomberg's Enda Curran reports investors may be focused elsewhere.
Even without the official data, of course, is that we've had the ADP, we've had those warnings from the Beige Book, and of course we have rolling headlines from companies that at the very least the labour market is softening. The question now is just how weak it is, and of course until we get a good run of official data, it's very hard to make that judgment.
Bloomberg's Enda Curran. Right now traders are pricing in 91% odds the Fed will cut next week, and stocks are moving lower right now. The S&P 500 is down 0.2%, the Dow Jones Industrial Average is 0.1% lower, and the Nasdaq Composite is down 0.3%. A top vaccine advisory panel is set to reverse the long-standing recommendation that babies receive hepatitis B shots in their first 24 hours. It would be the most significant change to vaccine policy since that panel was reshaped under Health Secretary Robert F. Kennedy Jr. Dr. Cherry Cohen is with the Hepatitis B Foundation.
What I can see from my perspective is there's no new safety data, that there's no necessarily scientific evidence for changing this.
Dr. Cherry Cohen with the Hepatitis B Foundation. Hep B infections have dropped 99% since the CDC began recommending shots for newborns 35 years ago. One of the targets of Elon Musk's government cuts may be getting new life under a new name. Bloomberg's David Gura has more on the rechristened U.S. Institute of Peace.
You remember the images when you had Doge going into this building? That caused a lot of controversy. The president greatly reduced its remit and its budget early on in his administration, but we have seen, in addition to the facade of that architecturally interesting, if not significant building just a stone's throw from the National Mall in Washington, D.C., it has now been named the Donald J. Trump Institute of Peace. And as we go through what's scheduled to be on the president's agenda today, he's supposed to meet with the presidents of the DRC and Rwanda there to talk about peace.
Bloomberg's David Gura reports President Trump has claimed credit for resolving that conflict, one of several wars he says he has solved since his return to office. And that's news when you want it. With Bloomberg News Now, I'm Nathan Hager, and this is Bloomberg.
This is Caroline Hyde.
And I'm Ed Ludlow, inviting you to join us for Bloomberg Tech, a daily podcast.
Legally. It's the latest Democratic-led city to be targeted by President Trump's deportation efforts. Some residents are already bracing for the crackdown. A woman who asked that we only use her first name, Abby, told our reporter Ted Hessen that she's already set up makeshift beds in her family's restaurant so that they can avoid traveling between home and work for fear of being profiled and detained. Here's Ted.
She's feeling a lot of fear in the moment. She doesn't have legal status, and several of her family members are in the same situation. They came to the U.S. from Mexico 20 years ago, but haven't been able to find a path to legal status. But her 10-year-old son was born here in the U.S., and he's a citizen.
¿Qué vas a hacer con tu hijo?
No tenemos un plan porque, pues.
And when I asked her if she has a plan for what she would do if she was arrested and her son separated from her, she said, at least at the moment, she doesn't even know what a plan would be. She thinks her son would stay in the U.S., but clearly it's something that's difficult for her to think through. And this sort of situation that no one wants to think about, the idea that you could be sent to a country that you haven't been to for 2 decades, and that your son would be forced with the decision of either going there with you or remaining here in the U.S.
The operation is expected to run through the end of the year. Trump says the National Guard will also be deployed to the city in coming weeks. And speaking of immigration, a Reuters exclusive. The Trump administration is ordering enhanced screening of H-1B visa applicants for any involvement in what they call censorship. A State Department memo sent this week tells consular offices to review LinkedIn profiles and resumes of applicants and their families looking for work in content moderation, fact-checking, or online safety. The memo says anyone, quote, responsible for or complicit in censorship or attempted censorship of protected expression in the United States should be considered for rejection. The policy will hit tech workers, mainly from India and China, in an industry that's been crucial to Silicon Valley's growth. It's the latest example of Trump making free speech a foreign policy priority, and it could complicate hiring for the tech companies whose leaders backed his campaign. A Pentagon investigation has faulted Defense Secretary Pete Hegseth for using Signal on his personal phone to send information about planned strikes in Yemen last March. The review says the communication could have endangered U.S. troops if intercepted. That's according to 2 people familiar with the document. The Pentagon's Inspector General did not weigh in on whether the information Hegseth posted was classified. Hegseth took to X to respond, posting, "No classified information, total exoneration, case closed." The report is expected to be publicly released and comes at a time when Hegseth is under scrutiny of his leadership overseeing deadly strikes against suspected drug vessels in the Caribbean. A bid by Netflix to buy up both the film studios and streaming services of Warner Bros. Discovery could mean one login for customers wanting both Netflix and HBO Max. Netflix is arguing the acquisition would actually reduce costs for their customers, despite concerns from antitrust regulators. Companies with smaller streaming services, like Comcast, which owns NBC's Peacock, are also vying to buy up Warner Bros. Assets to try and compete with top streamers like Netflix and Disney+. Sherry Redstone, the former chairperson of Paramount Global, spoke this week at Reuters' Next conference in New York City.
So I think we're going to see a lot of successful integrations and also ones that become more challenged.
Redstone says Warner Brothers' real value to Netflix is in its library of TV and film offerings, not its streaming customers.
I don't know how it will end up with Warner Brothers, who will get it, But what's interesting, you see those of us who have traditionally been in the content creating business, and then companies like Netflix, who are a great distribution company, but now realizing the importance of creating content.
And if you missed the full discussion with Sherry Redstone at yesterday's Next conference, don't worry. There's a full day of great discussions today as well. Topics include the future of TV with the head of NBC and Michael Schur, the writer behind Parks and Rec, Brooklyn Nine-Nine, and The Good Place. Our space reporter, Joey Roulette, will moderate a panel on the geopolitics of space, and a whole lot more. Kim Vanell is co-hosting the conference, and you can follow the action live on Reuters.com as well as the app. There's a link to the live stream in today's show notes. And for markets today, we've got Morning Bid's Amanda Cooper. Amanda, what have you got for us today?
Hi there, thank you. Today we're talking about the dollar and how it's had its worst day since October. We're also taking a look at a Japanese government bond auction, which sounds in the weeds, but it's actually very relevant for anybody watching markets. And finally, we look at Microsoft, whose shares took a bit of a dent yesterday on reports about its software targets. Head over to the podcast for more.
Thanks, Amanda. Be sure to ask your smart speaker for Reuters Morning Bid or listen along wherever you get your podcasts. You can also watch it on Spotify. Vladimir Putin arrives in India today for his first visit in 4 years. The Russian president will be pushing for more sales of Russian oil, missile systems, and fighter jets. But Indian officials are worried that any fresh deals with Moscow could trigger a reaction from President Trump. Mark Trevelyan is our lead writer for Russia and says India will have to walk a tightrope as it considers any potential deals.
So this is taking place at a sensitive moment in the peace talks with Ukraine. For Putin, this is a rare chance actually to, show himself on the international stage. It's only the third major visit he's made this year outside countries of the former Soviet Union. Since the Russian invasion of Ukraine, India sharply stepped up its purchases of Russian oil, buying that oil at a discount. Trump in August doubled the tariffs on Indian goods to punish India for this. And so we are seeing a fall in Indian purchases of Russian oil. This month they're set to hit a 3-year low after Trump also imposed sanctions on 2 big Russian oil companies. So oil will be an important part of these talks, but Russia is confident that it can find ways of continuing to sell its oil to India. Apart from the oil question, Russia is a big seller of missile systems and fighter jets to India. However, India more recently has been diversifying its suppliers. It buys arms also from the United States, and it's trying to produce more of its own equipment. So Russia faces a challenge there to push for more sales. And there could be something interesting on the question of migrant workers from India, because there's a shortage of workers in the Russian economy because of the demands of the war and the pressure on the defense industry, and also the sheer number of people who've gone to fight in Ukraine. So it needs foreign workers, and India is one of the countries from which it's keen to attract these people.
Democrats on the House Oversight Committee have released video and photos of Little St. James, the private island owned by Jeffrey Epstein. They show a pool cabana and several bedrooms. Last week, President Donald Trump signed legislation ordering the Justice Department to release documents from its long-running investigation. The material could shed more light on the activities of Epstein, who socialized with Trump and other public figures before his 2008 conviction of soliciting a minor for prostitution. And for today's recommendation, back to the Reuters Next conference for a recommended listen. Yesterday, our Econ World podcast host, Carmel Crimmins, hosted a live edition of the show from New York. If you missed it, you can check it out by following the link in the podcast description. For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favorite podcast player. If you're listening on a smart speaker, just ask for the latest news from Reuters 7 days a week. We'll be back tomorrow with our daily headline show.
We do a quiz. And I thought, why not throw out a few questions to the New York crowd? They're a savvy bunch, but you're going to need to make some noise. So I'm going to make you practice. And I'm sorry, I'm not saying the doors are locked. I'm not saying, you can't run, but I'm going to make you practice with me. So I'm going to ask a question, very simple question. Did you spend more or less this Black Friday versus last year? Okay, so when I say, did you spend more, and you did spend more, you're going to shout more, okay? Then I'm going to ask, did you spend less? And if that is indeed the case, you're going to shout less. So I really need you to make some noise for all the people who are watching on the live stream, all the people who are going to be listening and watching to this podcast later. And also, I've got 2 teenage kids watching this live stream right now. And if this room stays silent, okay, my parental power base is going to shrink even further, and it's already minute. So please do me a favor. Okay, so here goes. This year, on Black Friday, did you spend more? More. Ooh, U.S. consumers doing okay. Okay. Or did you spend less? Less. That's a very confused picture. That's quite on brand, isn't it, really, for we don't know which way the U.S. economy is going. Okay, well, thank you. That was a great volume. We're going to have more quiz questions during the show. But first of all, let's get cracking on our podcast. First of all, Sally and Howard, did you spend more or less on Black Friday?
You got teenagers, I got grandkids, so it escalates.
Oh, it does?
Well,
Sally, less? Not enough bargain hunters for you?
I don't know why I spent less, but I spent less.
Okay, well, let's get into the U.S. economy. Okay, so Howard,
yep.
Trump obviously swept into power with plans to shake up the U.S. economy, to shake up the global economy. Obviously, one of his signature policies was on trade. What has the actual impact been?
Yeah, shaken up everything.
Right.
And I had to come on with a cheat sheet because so much is in motion. I mean, we know tariff rates are now averaging about 15%. That's way up from the 2-ish that he inherited, right? This is way beyond what he did in the first term. So the U.S., we know the U.S. is collecting money, $200 billion so far, $40 billion a month or something like that. We don't know if that's going to stick. We know prices are higher. Federal Reserve estimates maybe 0.5 percentage point or so of the current inflation, 0.4 of the current inflation is due to tariffs. We don't know if that's going to be sticky or if it isn't going to be sticky.
Right.
Maybe it's going to fade away over time. Has manufacturing rebounded? Talk about a manufacturing recession. We lost 50,000 jobs in that sector. Is that due to tariffs? Is that due to slower growth, weaker demand? We're going to see next year the 2026 forecasts that are starting to roll out tend to be for pretty resilient demand, despite the bifurcated consumer.
Yes.
But an inflation risk as well. So this is restructuring a lot of relationships. Where it's all going to land in terms of reshoring, in terms of jobs, in terms of where prices settle out, I think is just going to take a long, long time to really sort through.
The other signature policy, of course, is on immigration, the immigration crackdown. What impact is that having on the labor market? What are we seeing?
So you see, kind of episodic reports of shortages in skilled trades, right. Construction employment's down, maybe that's related. You can see this very clearly in the chart if you plot the civilian labor force. The foreign-born share of that peaked at almost 20% under Biden. It had been, in the mid-15s, going back to the Obama years, and been scaling up, leveling out under Trump and then scaling up. That's back down to 18%-ish or so, 1.5 million fewer foreign-born workers in the labor force today than when Trump took office. Are they gone? Are they gone underground? You know, this is one of the things people are trying to determine, but they are officially a lot fewer of them. That does have implications for growth in a country that's aging, for sure. Yeah, there are fewer foreign-born workers today than there were a few months ago.
Sally, Howard obviously referenced inflation there, right? We are seeing the impact of the tariffs on prices. It's a big problem for Trump, isn't it?
I think it's a very large challenge for Trump, as it would be for any president, as it obviously was for Biden. I mean, some of these things are just inescapable. I think it's fair to say that Trump is really running into what is probably in his second term the first sort of significant challenges that he's faced. There's a combination of things. It's obviously the debate over affordability in the United States, the looming midterms. There's other issues like Epstein that have sort of put him off his game a bit for periods of time. We have a lot of indication that he is going to, really try to aggressively address the inflation or affordability issue. Yesterday, he talked about it. He said it wasn't, he said it was a Democratic con. He said that it was not true. It was a fabrication. But I think that he obviously faces, real voter perception, right? And I think there are two things that we see. First of all, last week, they very much sort of internally had turmoil over what to do about the healthcare costs, about whether to extend these ACA healthcare subsidies. Essentially threw up a trial balloon. It was deeply unpopular with parts of the Republican base, and so they sort of pulled that back. But that issue still is out there. And then also we've seen recently where this sort of dichotomy where they sort of are saying constantly tariffs aren't causing inflation, but then they pulled back some very sort of discrete and specific tariffs on some food issues and food items and things like that,
banana,
as a
coffee.
way to try to mitigate that, right? We also know that Trump is really planning to, I think, aggressively go out and talk to the country and try to make the argument that the economy is going okay and that affordability is not an issue. Probably referencing the tax cuts and things next year.
Right. I mean, we're obviously talking about, sort of Trump's world, but it's also AI's world as well, isn't it? I mean, is it really is it really AI that's driving the economy at the moment, Howard, right? I mean, you see it in terms of obviously the stock market, which helps with consumer sentiment. You see it with business investment.
Right. Certainly aspects of it. I mean, there's been this tremendous run-up in capital investment, and business investment has been one of the main contributors to GDP growth this year. But, the mystery, I mean, maybe it's a mystery, maybe it's not to all y'all, I don't know. But the consumption still rolls along.
Right.
Everybody's been expecting when are you going to see the consumer weaken? And the retail sales just continue to grow. Is there stress in certain parts of the income distribution? Sure, but modestly so. The last Fed report on financial instability said overall household balance sheets pretty healthy. You hear narrow tales of defaults on subprime car loans and things like that, but nothing systemic and nothing big. So sure, AI, but embedded kind of resilience. Haven't seen anybody saying when AI disappears, the economy is going to disappear.
But isn't that like the K-shaped economy, right?
Sure.
I mean, one stat that I'm always drawn to is it's like the top 10% of Americans in terms of income, they account for nearly 50% of consumer spending, right?
Well, yes, and that's the question sort of the day is how weak that lower branch of the K is, and does it extend so far up that the whole thing topples over? I don't see many people calling for that round. The recession odds that I've seen people sort of hover around aren't really out of line with what is normally the case.
But I do think there are political implications of that, even if there aren't economic implications. Because I think one of the things that is very important to remember is that when Trump won the presidency the second time, he went well beyond his base, right? I mean, he actually went well beyond his base, and he he did attract what we might call, lower middle income voters and things like that. And a lot of the improvement in, certain demographic groups in the United States was very much driven by people having, or at least telling, they said they explained their vote by, we trust Trump on the economy. And so I think there is some vulnerability, even if the vast majority of the economy sails along, as Howard is saying. I think that affordability issue, that is clearly why they're nervous about it. And I think that's an issue for Republicans going forward. Once you have sort of the intrinsic trust among some people that Trump is good with the economy, for future Republicans, that is a bit of a challenge, I think, in some ways.
Right.
And you do have, just to close the AI question off,
Yeah.
the labor market implications of that potentially.
Right.
Some people think you're starting to see the beginnings of that with the difficulty college graduates are having.
Kind of the AI layoffs.
All of that, does that start to really accelerate in the next year or two, or is this something that's still, long enough down the road that you can conceivably plan a transition of some sort to that world?
Yeah. Quiz time, guys. All right. I think we all remember where we were back in April when Trump announced his Liberation Day tariffs. And there were obviously some surprising announcements that day, one of which was a 10% tariff on a frozen island in the Antarctic, largely inhabited by penguins. Can any of you guys remember the name of those islands? Was it either the McDonald Islands or the Mackenzie Islands? Okay, so if you think it's McDonald, shout McDonald now. Was it McDonald?
McDonald.
Oh, was it Mackenzie?
Yeah.
Are you guys on ChatGPT? Are you? I mean, very well done. Right? This is a clever crowd. Okay. All right, well, let's leave aside the penguins. They did pretty good. They only got a 10% tariff. Other grouping that probably are doing pretty well right now, Sally, is the big business, right? I mean, they seem to know, or many of them seem to know how to navigate Trump's world, right? They make the big investments, they flatter, they put the donation down for the ballroom. But there is a risk with that, isn't there? Because we're also seeing a much more interventionist approach by Trump in terms of big business, right? We've seen the stake in Intel, the golden share. Right.
This is one of the most fascinating things of the Trump administration is just this, everything is Trump is really a deal maker. He's a deal maker when he's dealing with individual foreign countries. He's really dealing, this is an obvious thing to say, but he's also doing that with individual companies, right? And I think the volatility level for companies because of that is extremely high. We hear that a lot when you're talking to people. Obviously, they're trying to navigate, do we keep our heads down? Do we try to aggressively go in there and cut a deal? Will he notice us? Will he notice our industry? And Trump, obviously, I mean, one of the things about this administration is they have just taken on a lot. They are always constantly juggling 9 or 10 balls on any given week. And I think that there is a lot of, this week we're paying attention to chips. The next week we're paying attention to finance. The next week we're paying attention to agriculture. Then we pop back to this. And so I think even though a lot of companies have figured this out, I also think that there's a lot of people in the country who are like, we didn't have to worry about this as much in the past. And now we have to have sort of a strategy to either try to really be talking with the administration or keeping our heads down.
Right.
And just that uncertainty about when do we pop into the attention frame of this administration, you hear a lot about that just being something that people really have to pay attention to.
Right. It's kind of changed the nature of lobbying in DC.
Oh, it has incredibly changed the nature of lobbying in Washington. I mean, there's so many people who have, long-standing lobbying or industry-wide lobbying standards. And at the beginning of this year, you could just see them sort of trying to figure out, like, what do we do? How do we, I mean, obvious things like, do we have people, does anyone we know anyone in Trump's inner circle?
Right.
And who's making the decisions in Trump's inner circle on this particular issue, right? But I think it's also been, a lot of it is much more, Trump deals person to person. And so you might, your CEO might need to now be your primary lobbyist, where maybe in the past that wasn't needed. I think the energy level of this administration is something, and that emanates directly from Trump, is something that is just extraordinary and somewhat historic, I would say, in some ways.
No, just I want to like. Can I ask a question?
Go for it, Howard. It's a live podcast. You can do whatever you want.
Okay, so there goes my mic. So EV tax credits, right? That's steering capital as well,
Yeah.
right? Okay, so is this different from that? And is the level of, I guess, energy being spent having to get at this guy, right, distortive, a problem in the long run?
I mean, for companies or for like the country?
Both.
I mean, I think it is. It's a great question. I think there are a lot of people who like the idea that the president is hands-on and is really, really trying to solve problems. I mean, he is talking directly to, world leaders. He is trying to, and I think there's an attraction to that, to people. I think the downsides of that are that one of the reasons that we sort of have systems of, inside the government, there's an interagency process. The National Security Council brings all the best minds together, and they come up with 3 options for the president, and you can sort of assume that there's, the best ideas have risen. That process no longer exists in the U.S. government, right? And you can see that in a situation like Russia-Ukraine, where when Witkoff and Kushner are talking to Russia, the conversation is here. And when Rubio is talking to Russia, the conversation is here. Right. And I just think that the volatility between where the actual, where it lands is the risk in that is immense. Let's put it that way. And I think every individual company faces essentially that same sort of, how does the administration make decisions? How does the administration make decisions? How does the president of the United States make decisions? I think there is much more uncertainty about that now. Even if you think that Biden was not very well involved, you sort of knew who in his administration was probably making the decisions. And I just think the volatility factor with this administration is, I'm not saying it's unprecedented. I think it is quite unique in the last several decades in the country.
Right.
So some people like that hands-on approach. Does the Fed, Howard, certainly get hands-on there?
Yeah, I got to give a big no on that one. I think this has been, there have been times when the economics going on inside the Fed have been, more interesting. Certainly the COVID program, standing up things at a moment's notice to fix the crisis, or back during the, the Bernanke years. But in terms of the sort of politics, the institutional threat, what's going to happen, down to the point of, is the White House going to make a play to start firing Reserve Bank presidents? No sign of that yet, but certainly within the kind of possibility. So in terms of the politics and the institutional issues like that, yeah, pretty interesting.
It's like Succession with Excel spreadsheets, right?
Well, and not, and there aren't as many potential successors, but thank goodness.
Let's talk about the successors, because obviously Kevin Hassett is considered to be the guy.
Right.
Maybe we'll get an announcement on it, I don't know, in the new year. If he is the guy, what does that mean for rates? What does that mean for markets?
Sure. The working assumption is that the Trump chair will bias, the curve lower, right?
Right.
The question is how far and how fast. And got to keep in mind, this is 12 people voting,
right?
19 people sitting around the table. You have to get a consensus. There may be some leeway. There may be some grace given to a new chair to make those first couple of rate calls. But at some point, if the policy gets too far out of line with economy, inflation, prices, et cetera, there's going to be a market reaction. And as we all know, when things start to react, they can escalate and move really quickly. So I think you still have, there's been no sign of market discipline yet around this decision. But I think the world seems to be saying, let's wait. If there's a policy mistake, that's when the reaction comes. So I think there are limits.
So what you're saying effectively is the markets will put manners on you when you're in the Fed, right? He keeps you.
The Fed chair does not have carte blanche to go in and declare the zero lower bound when there isn't a crisis.
But we are staring into the prospect of a divided Fed, though, right? Which we haven't had in a long time. I mean, that's going to create volatility, right?
That's volatile. That's the discipline itself. There is nothing to say that the 5 Reserve Bank presidents, including the vice chair, who is the president of the New York Fed, can't say, you know what, this is the wrong. It's happened before. It happened under Volcker. A group of them pushed back and, basically overturned the chair's wishes in a meeting. We'll see where that heads. And you've got 3 Biden appointees on there right now who will remain, presumably, depending on the outcome of Lisa Cook's case in the Supreme Court. But legal minds seem to think that's more likely going to break in her direction than not. So are they going to go along with, overly aggressive cutting program? I don't think so.
What's your take on though? Do you think if it is Kevin Hassett, will Jay Powell leave? Will he? There is a question mark over that, whether he might actually stay on as a
Sure. He has his option, just to be clear. His term as chair expires in May. He has another year or so left on his term as governor, so he could stay around. Only one other person did this, Mariner Eccles, back in the day. Would he stay on? Listen, he's an institutionalist. He's, one of sort of last man standing in terms of the old Washington, right? The way it used to work. He's a bipartisan figure. He's been appointed by both Democrats and Republicans. So I don't think he's going to walk out the door if he thinks there's a real serious threat to the institution.
Right.
What would that look like? That would look like him being skeptical that there would not be an effort to start firing Reserve Bank presidents if his seat was filled with somebody else. That would be skepticism over how internal communications, internal staffing levels, the research freedoms of that the reserve banks now enjoy, the budgets that the reserve banks now have set centrally. If he thought they were going to get starved out of their ability to, conduct the research they felt they needed to, I could fully see him sticking around if he wasn't assured that the institution, as he knows it today, was going to, sustain itself.
That's a signal for us all to watch out for then.
Sure.
Beginning next year.
Yeah.
Okay, quick quiz time. We're making it rapidly through. So, back in August, a US tech boss gifted Trump a plaque with a 24-karat gold base. Do you know who it was? Was it Mark Zuckerberg of Facebook, or was it Tim Cook of Apple? Okay, so I'm going to roar out Mark Zuckerberg's name. Was it Mark Zuckerberg? Was it Tim Cook?
Tim Cook.
You guys read the news. This is super impressive.
Follow the news.
Thank you. All right, we're in the final part of our show. Let's scoot back to the global economy. So, in theory, Howard, right, America's trading partners were meant to be big losers from this trade war. And obviously China was a big driving force, I think, of what President Trump was doing. Here we are now in December. Who's winning in that US-China tensions? Can we say, or is it just too early? I mean, I know we're kind of in year zero of this.
I know it feels like we're just seriously in year zero, because here's what I wonder. I wonder if we're going to look back 20 years from now and really see this as the moment when, the U.S. kind of lost the plot in a sense of innovation, science, research. I had friends over for dinner on Thanksgiving, an Indian couple. They're research physicians. We came here, they say, because this was the place in the world where you could follow the evidence and conduct your line of research and see where it ended and hopefully end up and, contribute to knowledge, to human knowledge. They don't feel that's happening, to the same degree, or that it's at risk, right? So down the road, maybe AI tools become, with protein folding and all the things that can do, that becomes the engine of productivity, and we don't need doctors, people from all the world to come and do their research here anymore. I don't know. But you do wonder if we haven't hit kind of a turning point, if this continues on the current path where this sort of raw inquisitiveness and knowledge is as valued as it has been.
What's your take on that, Sally?
I think that there is a short-term, a medium-term, and a long-term question of the impact of the Trump administration. And I do think that I agree with Howard that some of the, pullbacks on research, some of the issues in terms of rule of law, executive power, those things have potential to impact the country, obviously, for years and years to come. And I think that is not also protectionism, trade obviously is a massive thing. I mean, you hear a lot of people, specifically in Europe, but also I think all across the globe, private companies and also other sorts of people saying we're sitting here and just watching to see what will happen, right? And many private companies obviously are sort of hedging their bets. They're certainly not leaving the U.S. market because it remains incredibly the most,
World's
safe
biggest economy still is.
and growth. But they are hedging a little bit, right? And so I think the question for the U.S. is whether this enormous sort of breaking of precedent, breaking of norms, which is across we could talk about 9 different areas where that has happened, whether that has any unintended long-term consequences. I think it's also a question of whether it lasts. I mean, the volatility in U.S. politics is real. That is one of the things to just kind of keep in mind. Right now, the Democrats are obviously, very much at a low point in their fortunes, but that doesn't mean that there isn't this continual swing back and forth between, between the politics of this country. And so I think long-term uncertainty, I think, is quite high, in my view, right now in the United States.
As we head into, and this is a question for both of you, maybe and the final question, as we head into 2026, what are the key things that you were looking out for to sort of signpost how this evolves?
Yeah, I think there's a couple. There's obviously Howard referenced the Supreme Court ruling on Lisa Cook and the Fed. I think that's a critically important one. There's the tariffs ruling, which could potentially still happen this year into next year. Epstein and what happens with that, whether it continues to be an issue, maybe not as big of a deal, but still has some real staying power to it. What happens to the economy, how the Democrats react to that, how Trump reacts to that, whether he is defensive or whether he actually, goes out and talks to the country about affordability, the midterms. I'm sure I'm forgetting things.
Yeah, no, I would say, look, this is going to sound very old-fashioned and very simplistic, but I would say, the unemployment rate.
Absolutely.
Right.
Keep an eye on that, and particularly some of the spreads within the unemployment rate. The black unemployment went from 6% a few months ago to 7.5 now, and it seems to be staying up there. That's often an indicator, sort of a precursor to other problems in the labor market. So are we going to see a demand-driven rise in fading demand finally from the consumer and a rise in unemployment about that? Are you going to see larger job displacement or much slower hiring as a result of AI investments, et cetera? 4.4, not so bad historically.
Right.
When you start edging towards 5 and above, that usually causes, starts to be a problem for whoever's in office. So
I would say just one other thing, which is the president right now is spending an enormous amount of time on actually foreign entanglements, right? And his base wants him to pay attention to the United States of America. And I think that balance is really, really interesting for the future of his presidency. I think, and it's been surprising to me, this is one of the things that has really surprised me about this administration, is how much time he has spent on, we know he wants to end wars, and that's obviously
really wants the Nobel Peace Prize. You got to work for it.
But I do think that the aggressiveness toward Latin America has taken a lot of people by surprise. And, presidents, one of the big risks for presidencies is whether they become distracted from the core things that they need to do. And I think that is one of the risks for this presidency. I think he has a lot of people urging him not to become distracted.
Right.
And so there might be some course correction there, but I think him becoming distracted is a potential risk that I would just watch for next year.
Sally, Howard, thank you so much. Audience, thank you so much. You have been wonderful. Let's take the show on the road. Thank you.
Thanks.
All right, you can move. Thank you very much.
A big thank you to Sally and Howard for all the insights and the laughs on stage. Thank you to Kim Vanell, the host of our sister podcast, Reuters World News, for emceeing us in New York. And to Josh Summer, Ethan Plotkin, and the entire team at Reuters Next for making it all sound and look so good. This is Reuters Econ World. Every week we go deep on the economic principles and ideas driving the biggest news around the world. If you want to tell us what you thought of this week's show, please drop us a line in the comment section of your favorite podcast platform. Our executive producer is Lila de Kretzer. Remember, for all your daily news, just ask your smart speaker for Reuters World News 7 days a week. It's available across all podcast platforms. And if you'd like to see the faces behind the voices, watch it on Spotify. I'll be live from New York.
It is my absolute pleasure to introduce my colleague, the nicest woman at Reuters, Carmel Crimmins, who is also the host of Reuters Econ World. This is a special moment in Reuters history because we have our first ever live podcast recording. Now, what that means is anything could go wrong. And we hope it does for the numbers of listeners that would attract. But it also means that all of you are involved. So I'd like to invite to the stage Carmel Crimmins, along with her fabulous guests. Here they are. Can we give them a big round of applause, please? Because you're all on air, as it were. No worries.
Good morning, everyone. Welcome to the first ever live podcast of Reuters Econ World, our first ever live show. I have been doing this pod for the best part of 2 years from a darkened room in Dublin. So I am loving the change of scene, and I'm loving the topic, navigating Trump's world. It's got to be the topic that fixates every business leader, every political leader around the world. Luckily for you folks, I've got two people on stage with me who know more about this topic than most. We have Sally Busby, who's our US and Canada editor, and Howard Schneider, who's our Federal Reserve correspondent. That means he covers all the toing and froing at the Federal Reserve, and we're expecting quite a bit of toing and froing over the next few months, which we will get into shortly. Before we get into that, a word of warning to the wise. That's all, you guys. I'm going to require some audience participation. You see, every week on the show, we do a quiz. And I thought, why not throw out a few questions to the New York crowd? They're a savvy bunch, but you're going to need to make some noise. So I'm going to make you practice. And I'm sorry, I'm not saying the doors are locked. I'm not saying, you can't run, but I'm going to make you practice with me. So I'm going to ask a question, very simple question. Did you spend more or less this Black Friday versus last year? Okay, so when I say, did you spend more, and you did spend more, you're going to shout more, okay? Then I'm going to ask, did you spend less? And if that is indeed the case, you're going to shout less. So I really need you to make some noise for all the people who are watching on the live stream, all the people who are going to be listening and watching to this podcast later. And also, I've got 2 teenage kids watching this live stream right now. And if this room stays silent, okay, my parental power base is going to shrink even further, and it's already minute. So please do me a favor. Okay, so here goes. This year, on Black Friday, did you spend more? More. Ooh, U.S. consumers doing okay. Okay. Or did you spend less? Less. That's a very confused picture. That's quite on brand, isn't it, really, for we don't know which way the US economy is going. Okay, well, thank you. That was a great volume. We're going to have more quiz questions during the show. But first of all, let's get cracking on our podcast. First of all, Sally and Howard, did you spend more or less on Black Friday?
You got teenagers, I got grandkids, so it escalates.
Oh, it does?
Yeah.
Sally, less? Not enough bargain hunters for you?
I don't know why I spent less, but I spent less.
Okay, well, let's get into the U.S. economy. Okay, so Howard, Trump obviously swept into power with plans to shake up the U.S. economy, to shake up the global economy. Obviously, one of his signature policies was on trade. What has the actual impact been?
Yeah, shaken up, everything.
Right.
And I had to come on with a cheat sheet because so much is in motion. I mean, we know tariff rates are now averaging about 15%. That's way up from the 2-ish that he inherited, right? This is way beyond what he did in the first term. So the U.S., we know the U.S. is collecting money, $200 billion so far, $40 billion a month or something like that. We don't know if that's going to stick. We know prices are higher. Federal Reserve estimates maybe 0.5 percentage point or so of the current inflation, 0.4 of the current inflation is due to tariffs. We don't know if that's going to be sticky or if it isn't going to be sticky.
Right.
Maybe it's going to fade away over time. Has manufacturing rebounded? Talk about a manufacturing recession. We lost 50,000 jobs in that sector. Is that due to tariffs? Is that due to slower growth, weaker demand? We're going to see next year the 2026 forecasts that are starting to roll out tend to be for pretty resilient demand, despite the bifurcated consumer.
Yes.
But an inflation risk as well. So this is restructuring a lot of relationships. Where it's all going to land in terms of reshoring, in terms of jobs, in terms of where prices settle out, I think is just going to take a long, long time to really sort through.
The other signature policy, of course, is on immigration, the immigration crackdown. What impact is that having on the labor market? What are we seeing?
So you see, kind of episodic reports of shortages in skilled trades.
Right.
Construction employment's down. Maybe that's related. You can see this very clearly in the chart if you plot the civilian labor force. The foreign-born share of that peaked at almost 20% under Biden. It had been in the mid-15s, going back to the Obama years, and been scaling up. Leveling out under Trump and then scaling up. That's back down to 18%-ish or so. 1.5 million fewer foreign-born workers in the labor force today than when Trump took office. Are they gone? Are they gone underground? This is one of the things people are trying to determine, but they are officially a lot fewer of them. That does have implications for growth in a country that's aging, for sure. There are fewer foreign-born workers today than there were a few months ago.
Sally, Howard obviously referenced inflation there, right? We are seeing the impact of the tariffs on prices. It's a big problem for Trump, isn't it?
I think it's a very large challenge for Trump, as it would be for any president, as it obviously was for Biden. I mean, some of these things are just inescapable. I think it's fair to say that Trump is really running into what is probably in his second term the first sort of significant challenges that he's faced. There's a combination of things. It's obviously the debate over affordability in the United States, the looming midterms. There's other issues like Epstein that have sort of put him off his game a bit for periods of time. We have a lot of indication that he is going to really try to aggressively address the inflation or affordability issue. Yesterday, he talked about it. He said it wasn't, he said it was a Democratic con. He said that it was not true. It was a fabrication. But I think that he obviously faces, real voter perception, right? And I think there are two things that we see. First of all, last week, they very much sort of internally had turmoil over what to do about the healthcare costs, about whether to extend these ACA healthcare subsidies. Essentially threw up a trial balloon. It was deeply unpopular with parts of the Republican base, and so they sort of pulled that back. But that issue still is out there. And then also we've seen recently where this sort of dichotomy where they sort of are saying constantly tariffs aren't causing inflation, but then they pulled back some very sort of discrete and specific tariffs on some food issues and food items and things like that,
banana,
as a
coffee.
way to try to mitigate that, right? We also know that Trump is really planning to, I think, aggressively go out and talk to the country and try to make the argument that the economy is going okay and that affordability is not an issue. Probably referencing the tax cuts and things next year.
Right. I mean, we're obviously talking about, sort of Trump's world, but it's also AI's world as well, isn't it? I mean, is it really is it really AI that's driving the economy at the moment, Howard, right? I mean, you see it in terms of obviously the stock market, which helps with consumer sentiment. You see it with business investment.
Right. Certainly aspects of it. I mean, there's been this tremendous run up in capital investment, and business investment has been one of the main contributors to GDP growth this year. But the mystery, I mean, maybe it's a mystery, maybe it's not to all y'all, I don't know. But the consumption still rolls along.
Right.
Everybody's been expecting when are you going to see the consumer weaken, and the retail sales just continue to grow. Is there stress in certain parts of the income distribution? Sure, but modestly so. The last Fed report on financial instability said overall household balance sheets pretty healthy. You hear narrow tales of defaults on subprime car loans and things like that, but nothing systemic and nothing big. So sure, AI, but embedded kind of resilience. Haven't seen anybody saying when AI disappears, the economy is going to disappear.
But isn't that like the K-shaped economy, right?
Sure.
I mean, one stat that I'm always drawn to is it's like the top 10% of Americans in terms of income. They account for nearly 50% of consumer spending, right?
Well, yes, and that's the question sort of the day is how weak that lower branch of the K is, and does it extend so far up that the whole thing topples over? I don't see many people calling for that round. The recession odds that I've seen people sort of hover around aren't really out of line with what is normally the case.
But I do think there are political implications of that,
Yeah.
even if there aren't economic implications.
Right.
Because I think one of the things that is very important to remember is that when Trump won the presidency the second time, he went well beyond his base, right? I mean, he actually went well beyond his base, and he did attract what we might call, lower middle income voters and things like that. And a lot of the improvement in certain demographic groups in the United States was very much driven by people having, or at least telling, they said they explained their vote by, we trust Trump on the economy. And so I think there is some vulnerability, even if the vast majority of the economy sails along, as Howard is saying. I think that affordability issue, that is clearly why they're nervous about it. And I think that's an issue for Republicans going forward, once you have sort of the intrinsic trust among some people that Trump is good with the economy. For future Republicans, that is a bit of a challenge, I think, in some ways.
Right.
And you do have, just to close the AI question off,
Yeah.
the labor market implications of that potentially.
Right.
Some people think you're starting to see the beginnings of that with the difficulty college graduates are having.
Kind of the AI layoff sort of.
All of that, does that start to really accelerate
Mm-hmm.
in the next year or two, or is this something that's still, long enough down the road that you can conceivably plan a transition of some sort to that world?
Yeah. Quiz time, guys. All right. I think we all remember where we were back in April when Trump announced his Liberation Day tariffs. And there was obviously some surprising announcements that day, one of which was a 10% tariff on a frozen island in the Antarctic, largely inhabited by penguins. Can any of you guys remember the name of those islands? Was it either the McDonald Islands or the Mackenzie Islands? Okay, so if you think it's McDonald, shout McDonald now. Was it McDonald?
McDonald.
Oh, was it Mackenzie?
Yeah.
Are you guys on ChatGPT? Are you, I mean, very well done. Right? This is a clever crowd. Okay. All right, well, let's leave aside the penguins. They did pretty good. They only got a 10% tariff. Other grouping that probably are doing pretty well right now, Sally, is the big business, right? I mean, they seem to know, or many of them seem to know how to navigate Trump's world, right? They make the big investments, they flatter, they put the donation down for the ballroom. But there is a risk with that, isn't there? Because we're also seeing a much more interventionist approach by Trump in terms of big business, right? We've seen the stake in Intel, the golden share. Right.
This is one of the most fascinating things of the Trump administration is just this, everything is Trump is really a deal maker. He's a deal maker when he's dealing with individual foreign countries. He's really dealing, this is an obvious thing to say, but he's also doing that with individual companies, right? And I think the volatility level for companies because of that is extremely high. We hear that a lot when you're talking to people. Obviously, they're trying to navigate, do we keep our heads down? Do we try to aggressively go in there and cut a deal? Will he notice us? Will he notice our industry? And Trump, obviously, I mean, one of the things about this administration is they have just taken on a lot. They are always constantly juggling 9 or 10 balls on any given week. And I think that there is a lot of, this week we're paying attention to chips. The next week we're paying attention to finance. The next week we're paying attention to agriculture. Then we pop back to this. And so I think even though a lot of companies have figured this out, I also think that there's a lot of people in the country who are like, we didn't have to worry about this as much in the past. And now we have to have sort of a strategy to either try to really be talking with the administration or keeping our heads down.
Right.
And just that uncertainty about when do we pop into the attention frame of this administration, you hear a lot about that just being something that people really have to pay attention to.
Right. It's kind of changed the nature of lobbying in DC.
Oh, it has incredibly changed the nature of lobbying in Washington. I mean, there's so many people who have, long-standing lobbying or industry-wide lobbying standards. And at the beginning of this year, you could just see them sort of trying to figure out, like, what do we do? How do we, I mean, obvious things like, do we have people, does anyone we know anyone in Trump's inner circle? Right. And who's making the decisions in Trump's inner circle on this particular issue, right? But I think it's also been, a lot of it is much more Trump deals person to person. And so you might, your CEO might need to now be your primary lobbyist, where maybe in the past that wasn't needed. I think the energy level of this administration is something, and that emanates directly from Trump, is something that is just extraordinary and somewhat historic, I would say, in some ways.
No, just I want to can I ask a question?
Go for it, Howard. It's a live podcast. You can do whatever you want.
Okay, so there goes my mic. So EV tax credits, right? That's steering capital as well, right? Okay, so is this different from that? And is the level of, I guess, energy being spent having to get at this guy, right? Distortive, a problem in the long run?
I mean, for companies or for like the country?
Both.
I mean, I think it is. It's a great question. I think there are a lot of people who like the idea that the president is hands-on and is really, really trying to solve problems. I mean, he is talking directly to, world leaders. He is trying to, and I think there's an attraction to that, to people. I think the downsides of that are that one of the reasons that we sort of have systems of, inside the government, there's an interagency process. The National Security Council brings all the best minds together and they come up with 3 options for the president. And you can sort of assume that there's, the best ideas have risen. That process no longer exists in the US government, right? And you can see that in a situation like Russia-Ukraine, where when Witkoff and Kushner are talking to Russia, the conversation is here. And when Rubio is talking to Russia, the conversation is here. Right. And I just think that the volatility between where the actual, where it lands is the risk in that is immense. Let's put it that way. And I think every individual company faces essentially that same sort of, how does the administration make decisions? How does the administration make decisions? How does the president of the United States make decisions? I think there is much more uncertainty about that now. Even if you think that Biden was not very well involved, you sort of knew who in his administration was probably making the decisions. And I just think the volatility factor with this administration is, I'm not saying it's unprecedented. I think it is quite unique in the last several decades in the country. Right.
So some people like that hands-on approach. Does the Fed, Howard, certainly get hands-on there?
Yeah, I got to give a big no on that one. I think this has been, there have been times when the economics going on inside the Fed have been, more interesting. Certainly the COVID program, standing up things at a moment's notice to fix the crisis, or back during the, the Bernanke years. But in terms of the sort of politics, the institutional threat, what's going to happen, down to the point of, is the White House going to make a play to start firing Reserve Bank presidents? No sign of that yet, but certainly within the can of possibility. So in terms of the politics and the institutional issues like that, yeah, pretty interesting.
It's like Succession with Excel spreadsheets, right?
Well, and not, and there aren't as many potential successors, but thank goodness.
Let's talk about the successors, because obviously Kevin Hassett is considered to be the guy.
Right.
Maybe we'll get an announcement on it, I don't know, in the new year. If he is the guy, what does that mean for rates? What does that mean for markets?
Sure. The working assumption is that the Trump chair will bias, the curve lower, right?
Right.
The question is how far and how fast. And you've got to keep in mind, this is 12 people voting,
right?
19 people sitting around the table. You have to get a consensus. There may be some leeway. There may be some grace given to a new chair to make those first couple of rate calls. But at some point, if the policy gets too far out of line with economy, inflation, prices, et cetera, there's going to be a market reaction. And as we all know, when things start to react, they can escalate and move really quickly. So I think you still have, there's been no sign of market discipline yet around this decision. But I think the world seems to be saying, let's wait. If there's a policy mistake, that's when the reaction comes. So I think there are limits.
So what you're saying effectively is the markets will put manners on you when you're in the Fed, right? He keeps you.
The Fed chair does not have carte blanche to go in and declare the zero lower bound when there isn't a crisis.
But we are staring into the prospect of a divided Fed, though, right? Which we haven't had in a long time. I mean, that's going to create volatility, right?
That's volatile. That's the discipline itself. There is nothing to say that the 5 Reserve Bank presidents, including the vice chair, who is the president of the New York Fed, can't say, you know what, this is the wrong. It's happened before. It happened under Volcker. A group of them pushed back and, basically overturned the chair's wishes in a meeting. We'll see where that heads. And you've got 3 Biden appointees on there right now who will remain, presumably, depending on the outcome of Lisa Cook's case in the Supreme Court. But legal minds seem to think that's more likely going to break in her direction than not. So are they going to go along with, overly aggressive cutting program? I don't think so.
What's your take on, though? Do you think if it is Kevin Hassett, will Jay Powell leave? Will he? There is a question mark over that, whether he might actually stay on as a governor.
Sure. He has his option, just to be clear. His term as chair expires in May. He has another year or so left on his term as governor, so he could stay around. Only one other person did this, Mariner Eccles, back in the day. Would he stay on? Listen, he's an institutionalist. He's one of sort of last man standing in terms of the old Washington, right? The way it used to work. He's a bipartisan figure. He's been appointed by both Democrats and Republicans. So I don't think he's going to walk out the door if he thinks there's a real serious threat to the institution.
Right.
What would that look like? That would look like him being skeptical that there would not be an effort to start firing Reserve Bank presidents if his seat was filled with somebody else. That would be skepticism over how internal communications, internal staffing levels, the research freedoms of that the reserve banks now enjoy, the budgets that the reserve banks now have set centrally. If he thought they were going to get starved out of their ability to, conduct the research they felt they needed to, I could fully see him sticking around if he wasn't assured that the institution, as he knows it today, was going to, sustain itself.
That's a signal for us all to watch out for then.
Sure.
Beginning of next year.
Yeah.
Okay, quick quiz time. We're making it rapidly through. So, back in August, a US tech boss gifted Trump a plaque with a 24-karat gold base. Do you know who it was? Was it Mark Zuckerberg of Facebook, or was it Tim Cook of Apple? Okay, so I'm going to roar out Mark Zuckerberg's name. Was it Mark Zuckerberg? Was it Tim Cook?
Tim Cook.
You guys read the news. This is super impressive.
Follow the news.
Thank you. All right, we're in the final part of our show. Let's scoot back to the global economy. So, in theory, Howard, right, America's trading partners were meant to be big losers from this trade war. And obviously, China was a big driving force, I think, of what President Trump was doing. Here we are now in December. Who's winning in that US-China tensions? Can we say, or is it just too early? I mean, I know we're kind of in year zero of this.
I know it feels like we're just seriously in year zero, because here's what I wonder. I wonder if we're going to look back 20 years from now and really see this as the moment when, the U.S. kind of lost the plot in a sense of innovation, science, research. I had friends over for dinner on Thanksgiving, an Indian couple. They're research physicians. We came here, they say, because this was the place in the world where you could follow the evidence and conduct your line of research and see where it ended and hopefully end up and, contribute to knowledge, to human knowledge. They don't feel that's happening, to the same degree, or that it's at risk. Right? So down the road, maybe AI tools become, with protein folding and all the things that can do, that becomes the engine of productivity, and we don't need doctors, people from all the world to come and do their research here anymore. I don't know. But you do wonder if we haven't hit kind of a turning point, if this continues on the current path where just sort of raw inquisitiveness and knowledge is as valued as it has been.
What's your take on that, Sally?
I think that there is a short-term, a medium-term, and a long-term question of the impact of the Trump administration. And I do think that I agree with Howard that some of the, pullbacks on research, some of the issues in terms of rule of law, executive power, those things have potential to impact the country, obviously, for years and years to come. And I think that that is not also protectionism, trade, obviously, is a massive thing. I mean, you hear a lot of people, specifically in Europe, but also I think all across the globe, private companies and also other sorts of people saying, we're sitting here and just watching to see what will happen, right? And many private companies obviously are sort of hedging their bets. They're certainly not leaving the U.S. market because it remains incredibly the most,
World's biggest economy still is.
And growth, but they are hedging a little bit, right? And so I think the question for the U.S. is whether this enormous sort of, breaking of precedent, breaking of norms, which is across we could talk about, 9 different areas where that has happened, whether that has any unintended long-term consequences. I think it's also a question of whether it lasts. I mean, the volatility in U.S. politics is real. That is one of the things to just kind of keep in mind. Right now, the Democrats are obviously, very much at a low point in their fortunes, but that doesn't mean that there isn't this continual swing back and forth between, between the politics of this country. And so I think long-term uncertainty, I think, is quite high, in my view, right now in the United States.
As we head into, and this is a question for both of you, maybe as we, and the final question, as we head into 2026, what are the key things that you were looking out for to sort of signpost how this evolves?
Yeah, I mean, I think there's a couple. There's obviously, Howard referenced the Supreme Court ruling on, Lisa Cook and the Fed. I think that's a critically important one. There's the tariffs ruling, which could potentially still happen this year into next year. Epstein and what happens with that, whether it continues to be an issue, maybe not as big of a deal, but still has some real staying power to it. What happens to the economy, how the Democrats react to that, how Trump reacts to that, whether he is defensive or whether he actually, goes out and talks to the country about affordability, the midterms. I'm sure I'm forgetting things.
Yeah, no, I would say, look, this is going to sound very old-fashioned and very simplistic, but I would say, the unemployment rate.
Absolutely.
Right. Keep an eye on that, and particularly some of the spreads within the unemployment rate. The black unemployment went from 6% a few months ago to 7.5 now, and it seems to be staying up there. That's often an indicator, sort of a precursor to other problems in the labor market. So are we going to see a demand-driven rise in fading demand finally from the consumer and a rise in unemployment about that? Are you going to see larger job displacement or much slower hiring as a result of AI investments, et cetera? 4.4, not so bad historically.
Right.
When you start edging towards 5 and above, that usually causes, starts to be a problem for whoever's in office. So
I would say just one other thing, which is the president right now is spending an enormous amount of time on actually foreign entanglements, right? And his base wants him to pay attention to the United States of America. And I think that balance is really, really interesting for the future of his presidency. I think, and it's been surprising to me, this is one of the things that has really surprised me about this administration, is how much time he has spent on, we know he wants to end wars, and that's obviously
really wants the Nobel Peace Prize. You got to work for it.
But I mean, I do think that the aggressiveness toward Latin America has taken a lot of people by surprise. And, presidents, one of the big risks for presidencies is whether they become distracted from the core things that they need to do. And I think that is one of the risks for this presidency. I think he has a lot of people urging him not to become distracted.
Right.
And so there might be some course correction there, but I think him becoming distracted is a potential risk that I would just watch for next year.
Sally, Howard, thank you so much. Audience, thank you so much. You have been wonderful. Let's take the show on the road. Thank you.
Thanks.
All right, you can move. Thank you very much.
A big thank you to Sally and Howard for all the insights and the laughs on stage. Thank you to Kim Vanell, the host of our sister podcast, Reuters World News, for emceeing us in New York. And to Josh Summer, Ethan Plotkin, and the entire team at Reuters Next for making it all sound and look so good. This is Reuters Econ World. Every week we go deep on the economic principles and ideas driving the biggest news around the world. If you want to tell us what you thought of this week's show, please drop us a line in the comment section of your favourite podcast platform. Our executive producer is Leila de Kretzer. Remember, for all your daily news, just ask your smart speaker for Reuters World News 7 days a week. It's available across all podcast platforms. And if you'd like to see the faces behind the voices, watch it on Spotify. I'll be back next week, minus the stage and the live audience.